All right. Good morning. Good morning. Okay. Love summer Mondays and Fridays. Always something going on. Good morning, everyone. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is Monday, the 30th. We got JP Morgan collar roll today. Make sure you check the gamma update. Okay, this is spiders. Spy. Broadcom popping up. Nvidia's up. Netflix is up. Okay. So let's look at a few of these. Apple. Okay, it's up a little bit. Amazon. Amazon is above Friday's high. Amazon's up. Let me see. Let me go to the S&P 500. The top of the S&P 500. Hewlett Packard HPE. I just saw something on the TV. Something about a settlement, I guess. It was a pretty big settlement. If I recall, it was like 4.4 billion or something like that. HPE settlement, top of the S&P 500. Okay, Juniper, Oracle, First Solar, and Palantir. Palantir was got knocked down a peg on Friday, so good to see Palantir back up. Okay, Nasdaq 100, Nasdaq 100. Let me just go ahead and do a screen cap of Nasdaq 100. Nasdaq 100. Let's do the top 20. Okay, I got a few questions over the weekend and late Friday about what do I do in the morning? What do I do the first thing in the morning to get ready for the trading day? Well, I have a workflow. Okay, so first thing I do is obviously check out the markets. I have a grid of New York FANG components, 10 stocks I can see on my left, and a grid of additional stocks on my right on the with the Nasdaq displayed. Okay, so we are open. So let me just check. First thing I do is check and see what is doing really well this morning. All right, so we've got Super Micro, um, looking good inside day, but up from yesterday, from Friday's close. Super Micro. Okay. Semiconductors looking good. If you read the Gamma update, you know Brent is looking at going long some SMH. Okay, let's take a look at SMH with an SOXL. SOXL. Okay, we're clearing the 200 day. SOXL, SMH trending. Nvidia is up again this morning, inside day, but above Friday's closing level. We did pull back from Friday's high and then close a little bit lower. We're inside of that wick right now. Okay. NVIDIA. Let's see. Qualcomm. Okay, looking for that to follow through. 921, cross up through the 200-day shortly. 50-day probably takes about a month or so to get through the 200-day, but the trend is definitely changing for Qualcomm. You know the rule here. The rule here is whenever you're looking at us going long a particular stock, we look for what side of the cup is it on, the basing pattern, what side is it on? Okay, so it's on the right side. So I want to buy dips. Okay, so the last dip technically was last week, the week before. Okay, and then we're starting to move higher. So we're dipping back to the 200-day, maybe, but looking for a follow through. Okay, looking for a follow through in this pattern. Okay. Let's see, the top of the NASDAQ, Booking.com, the Travel and Leisure Group, BKNG. And remember, we're looking for pretty big swings today. So we just dropped off a little bit, the SPY. Let me see, do I have any SPY for a swing? I don't think I do. No, I didn't have any SPY for a swing. Okay, there goes VUSY. VUSY, what's VSAT doing? VSAT was one that some of you mentioned on Friday, I believe. VSAT. VSAT, nope, no follow through. A little profit taking. Generac, that's pulling back a bit. The top of the S&P. HPE, there was a settlement mentioned. HPE. All right, Supermicro, a little profit taking. Looking for that to continue higher. Okay, Palantir is inside day. Palantir. Okay, so the rule here is, okay, this is something I don't talk about very often. Here's Palantir. Okay, Palantir dropped off the watch list. Okay, Palantir. All right, so the rule here is whenever you have a big candle like this, okay, preceding, okay, you have a big candle. If we close on a doji today, we take the next day's direction. So Tuesday's direction would be what we'd be looking to do, okay? So right now, Palantir's threatening the 21-day, 50-day, and 250 days down here near that lower Bollinger Band. So the rule is when you have a doji, inside day, Harami, we look for the following day, Tuesday, what direction do we take? So we'll be looking for that. We'll be looking for that, and we'll come back to that tomorrow. Right now, we're just watching Palantir. All right, that's jumping around all over the place right here. Palantir is starting to drop off a little bit more. Looking for big swings, okay? Today, we're looking for some big swings. We got the JP Morgan collar. We gapped up. SPY, we gapped up. Futures pulling back a bit. So looks like we're going to try to fill this gap maybe. We'll see. Let's go look. Okay, so we can see that support and resistance, pretty obvious. This resistance right here, just overhead, 62.20, more or less. What is this? It is 62.05. Sorry, 62.05. Big area of resistance overhead, that big red bar. Okay, we got some support down here. Let's see what 0-day already. We got resistance right there, 6,200, 62.05. And we got some support down here. Okay, 61.35. Okay, and we're looking for some big swings intraday. So we'll see how this fills out during the day. It's early, so these alerts that usually go off in the morning on the right, we usually wait for the backing and filling the first 15, 20 minutes, and then look for these signals like IONQ, IONQ. Okay, flow is dropping off here. Let's go take a look at IONQ in that group, IONQ. Okay, starting to show some signs of maybe coming out of a squeeze. IONQ, that's one we traded before during this March, April period and earlier, late last year. Okay, let's see what else is working here. Okay, Bitcoin is pretty much where it was yesterday. Bitcoin, Snowflake, New York FANG components. The other thing I check first thing in the morning is what are the New York FANG components doing? All right, most of these are dropping off. NVIDIA just dropped off down to 156 from 158, 159. So we lost $2 on NVIDIA on that little dip. So we're looking for the dips to get bought though. So you shouldn't be worried about this unless you're in NVIDIA. Okay, NVIDIA. Okay. So we're inside of Friday's price action. NVIDIA, looking for a bounce. Okay. Okay, so we want to see some buy order blocks this morning. All the New York FANGs are lower. So let's go check that too. The next thing I do is I'll probably look at the New York FANG and the Dow Industrials. New York FANG. Okay, so we had 5 days last week, and today we have another day of bullish action. Feels a bit extended. RSI is showing muscle, looking for a bounce in the futures. MACD crossed up, stochastics embedded. So there's nothing here that tells me to like start shorting the crap out of everything. Speaking of shorting, what is Circle looking like? Circle. Okay, Circle's trying to hold here. I don't know. I just think this is going to fade a little bit. The only thing I have to base it on is the previous pullback. It hit 300. There's a major level up there. Circle. Let's go take a look at Circle. I don't know if we have much data on Circle. See Circle. Okay, the flow is positive right now. Positive dealer flow. Circle. That could be just people short covering shorts. Okay, Netflix. Netflix. Let's see, where's my Netflix? There it is. Netflix. Netflix falling off a little bit here. Let's look at Netflix. Circle. Circle. Netflix. Okay, 1300 is a level of support. We're just above 1325. 1330 was resistance, and then 1350. Check Money Magic's levels if you didn't do that already. Okay, SPY. Looking for bounces here. SPY. So my son's going to start broadcasting on Twitch to people his age. Basically, what he's going to be doing, he's going to be following along what I'm doing. On one screen, he'll have our stream that I'm currently broadcasting, and then on the other screen, he's going to be doing some trading on his own, following along what we're talking about. Friday, he bought Supermicro on a dip. Okay. Smart kid, smart kid. Had a nice conversation with him on, doing this on the side. I want him to get a college education, obviously. But anyway, he's going to be doing some broadcasting himself on Twitch to people his age, his friends, 15, and people that age group, which is good because he's utilizing someone that has experience at 38 years being in the markets. So, there's so many people out there. I don't want to use the word scam, but they're like the stuff I see on YouTube is just like I'm shaking my head like, really? Anyway, good morning, everyone. I'm your host, Cousin Vinny, coming to you from closingprint.com. It's Monday the 30th. We have JP Morgan collar today. Roll. Not as concerned about that. That's way down below. So it's not going to have as big an impact, but we are looking for some pretty big swings today. What's First Solar doing? First Solar, the solars were good last week. Not doing much of anything first 15, 20 minutes. I'm just taking profits off where it makes sense to do so. Reassess the markets. Okay, Supermicro looking good. Okay, give me 2 minutes. I'm just going to go down and see if my son's awake.
pretty mixed picture. You have, it's pretty split evenly between neutral to bullish on Goldman. So this kinds of lines up with the views on this. But overall, financials have been doing well. We look at XLF, that's been higher. That's the index that measures across the group. But again, JP Morgan Chase has been doing well. I know we're going through the list there this year. And Goldman, it's got a gain today, but it is up more than 20% year to date, so it's outperforming the S&P 500. Okay. And, any final thoughts just on the big picture as we're hitting new record highs? We talked about Goldman hitting a new high. So many new highs. I know. First of all, I love that you wore green today. It lines up with what we're seeing, all the green on the board today. And not surprised to see these records that we're hitting today, especially given the way momentum is going. But again, I took note of what KG said because it's the end of the quarter. You kind of have to be nimble with a day like today. All right, Diane King Hall, great to see you. Thank you. And a lot of names hitting new highs in the market. We were talking about almost half the stocks that had started off in the green, and now I'm seeing more than half on these sectors. If you remember, some sectors were showing some red, but now I'm seeing more green. We'll go inside out on semiconductors following the big rally in NVIDIA and AMD. We will have all the details for you. Morning Trade Live. We will be right back. With the Schwab Network. Available anytime, anywhere, on any device for free. Schwab Network.
Believe me, when it comes to investing, you'll love Carl's Way. Take a left here, please. But there's Carl's Way is the best way.
Is it? At Schwab, how I choose to invest is up to me.
Exactly. I can invest and trade on my own.
Yes, and I love them manage some investments for me too.
Let's move on, shall we? No can do. Where are you going?
Schwab. Schwab, a modern approach to wealth management.
Morning Movers brings traders the biggest headlines to start the day. From volatile overnight swings to the earliest analyst calls. Get your watch list ready. 8 a.m. Eastern. Morning Movers only on Schwab Network. No politics, no noise. From bell to bell and beyond. Available anytime, anywhere, anywhere. Schwab Network.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you an active trader? Our active trading webcasts are designed to help you develop a deeper understanding of technical analysis, options, futures, and more. Best of all, you can ask questions by chatting directly with an education coach.
All right, some of these stocks are starting to turn. Okay, let's take a look. Qualcomm is something from last week I started looking at. Qualcomm, first thing I'm looking for are buy order blocks and how far above our resistance levels so I can calculate, what's my risk reward. Risk 1 to make 2, risk 1 to make 3, risk 1 to make 4, 5, 6, something like that. Okay, stop there. Okay. 2 to 1.
From really all customer types, not just the big hyperscalers, but also enterprise demand.
All right, so that's Qualcomm. Qualcomm 2 to 1. Back up to that supply area. New York Fang still not getting much of a bid. New York Fang. Okay, so we're waiting for a bid, looking for a bid in the markets as well. SPY. Got some sell order blocks right at the open. People taking profits off right after, right before pre-market ends. and then dropping off in a little bit. Let's see how far we go with this. We're expecting some pretty wild swings, so I wouldn't be surprised to see a turn back up. Just watching dealer hedge flows. We talked about that on Friday, and we got a really good read on the S&P. Okay, so on Friday we saw. I don't know who that is. On Friday we saw this. Hold on one second. Let me just get this. Guess they didn't like my voice. All right, so we saw this, the dealer hedge flows, the purple line right out of the open. Okay, this will start to form through the day. So once we see this drop a little bit more maybe, and then start to turn, that'll be a long signal. All right. The start of a long signal. Okay, let's see, 0 days starting to build a little bit. Okay, today's gamma, we got very large resistance level overhead at 6205. And then some support down below at 6130 and a little bit right there. Let's see if this builds 6180.
What a challenging quarter, to say the least, it was for that company. Of course, Medicare Advantage, in terms of mispricing, any number of other missteps there. What was always sort of a bellwether, right?
Oh wow, they just showed something on United Health, and I saw 40 down 40%, but they're looking at the year to date, I guess. I thought it was down another 41% today until I looked at the price action. That was misleading. All right, so UNH is dropping off a little bit, but it's still basing. This thing's going to take a while longer, I guess. I don't know. That's one of many. Meta gapped up this morning. Okay, Meta, we're looking for buy order blocks on stocks. Okay. For starters, looking for buy order blocks. Nothing there. Okay, what's the top of the list? Booking.com, AppLovin. Okay, some of you have tried AppLovin. Okay, fair value gap. Watch for that to come back and fill and then take off. AppLovin looks pretty good. AppLovin. AppLovin. PP. Back above the 50-day. Okay, AppLovin looks pretty good if you want to check that out. Okay, that's number 2 on the NASDAQ 100. Kava, you're looking at Kava there, Edmund? Okay, Kava. Edmund's looking at Kava. Yeah, that's nice. Above the 20-day, you got the 50-day overhead. Looks good. $50-day is at 85.15. 85.15. Okay. Let's look at junk bonds. Junk, JNK. Okay, junk bonds continue. All right, so in the weekend video, reviewed junk bonds, high yield corporate, all the things. We had 16 bullish indicators, 3 were neutral, and 1 was bearish. The only one that was bearish related to some of the extremes that we're seeing, but extremes can last for a while, okay? Being it is Monday, and we have the JP Morgan call roll, we are anticipating some pretty wild swings today, so we're looking for a bounce right now, actually. Looking for dealer hedge flows to turn up. All right, dealer hedge flows starting to turn up. Okay, we got resistance right overhead at 62.05. If you're thinking about trading the S&P big cash, Frano. big S&P, SPXW. 6205 is major resistance right overhead.
Appliances. Whirlpool sells at 7 times earnings. The stock will go to 120 in a heartbeat because they are going to have this market to themselves after the tariffs come. I've been waiting for this industry to be able to rationalize for a long time.
Weren't there already tariffs on a lot of those appliances?
Well, now we're talking about big. We're talking about making it so that Whirlpool become cheap. This is the beginning of what I regard as
Reddit,
saying
Reddit following through. Okay, so we should have a pretty good day today, I would think. After
inexpensive makers.
Friday's reversal, and we had
Good luck going against Whirlpool.
Canada negotiations with tariffs came to a halt. Markets rolled over about what, 1 o'clock or so.
What I think is important is that we sold a lot of our companies.
Started to see flows changing direction. Dealer flows started changing direction around 12:55 p.m. By 3 o'clock, the markets had turned, and we had a nice little rally on Friday.
Oh, true. But at the same time, it's interesting.
Nice little rally at Friday, right around 2:55. With dealer hedge flows turned, and zoom, we ran up.
But it's definitely
Now we're gapping up.
numbers are more important in a
New
way.
all-time highs. Beautiful. I like the sound of that. Okay, SPX. Okay, we've got a lot of wicks overhead right now.
He was right to let what's to be done.
Okay, Netflix is starting to turn again. Netflix on the watch list again this week. Netflix. Okay, let's go see if Netflix has Kava. Kava looking pretty good there for Edmund. Nice one there. It's like an upscale Chipotle, right? Kava. I've never been in one. That's the impression I got. Okay, Netflix. Okay, we're looking for buy order blocks. Okay, you have buy order blocks pre-market. All right, so I like to see them at the open after prices have maybe dropped a little bit. We get a wick or whatever. We got buy order blocks. We don't have supply overhead because the stock hasn't traded up here. Netflix. Okay, Reddit. Frano mentioning Reddit. I took along with Frano on Reddit, trying to take out that Wednesday candle. Looks like we're going to do it. We got buy order blocks pre-market, and we got supply right overhead. That lines up with that Wednesday high. Okay, no doubt. Wednesday high, right? Yeah, all the way back. Yeah, Wednesday high. Okay, cool. So this one looks pretty good. Okay, Reddit looks good. Okay, what's Supermicro doing? Supermicro. I did send my son the link, right? Yeah, okay. Supermicro looking like it's going to take out last week's high. A lot of people probably sold, thinking to themselves, oh, here we go again. Here we go again. Oh, by the way, I was noticing something on the weekend I didn't talk about on the weekend video, but I just want to discuss it now. Okay, regarding Tesla. Okay, Tesla, what's it doing? Tesla is, I don't have it on my screen. 1 second. Tesla. Tesla, let me look at this one. This one. Got quiet in here. Tesla. Okay. So this is the one. Let me get rid of some of this stuff here. I just want to point something out. I just happened to notice. Okay. Get rid of all this. Gobbledygook. Okay, we had a previous base, right? We were below the 200-day. Now we have another base starting to form above the 200-day. Now, I'm going to kind of leave these couple of candles out here because we gapped above. We came back. We tested it. Okay, we tested the top of the base right here. Okay. So this right here, we tested the top of the base. I guess it doesn't matter. We can put this on top of this because it kind of echoes what I'm thinking. So base on base pattern. Base on base pattern. Okay, so we're looking for the top of this base to get taken out. The 200-day is right there, so I'd expect a 200-day to hold prices. What I'm getting at is this is, and look at the volume. Look at the volume, not last week, but the previous week. I don't think these people are looking to lose money. These institutions that bought what, a billion and a half shares traded hands in like 2 weeks. You see that? Okay, and we had this big spike. What was that? Monday morning on the Robotaxi event in Austin. Okay, so that kind of culminated the previous, prior to that, 2 weeks of solid buying volume. So last week we had some selling, but it didn't drop off that much, which is pretty interesting. And volume started to taper off. Okay. So it looks like a base on base pattern. We won't know until we get a bounce. All right. So we're watching Tesla very closely. Okay. Let me just save this so I can find it easier. Okay, Netflix, watch Netflix. Supermicro on the move. Supermicro. Mondo. Supermicro going. SoFi on the watch list. Mm-hmm. Jumping to new highs in early trading after a filing showed positive comments from CEO Safra Catz about the extended watch list. SoFi 6%, a massive 60% gain. Oh, did I not post it last night? Oh shoot! Sorry about that. I didn't post the watch list in the room. Sorry. Let me do that now.
We do have manufacturing numbers starting tomorrow. Construction spending, also the JOLTS, which job openings. We know the Fed pays attention to that. Chair Powell also speaks at the ECB forum this week in Sintra, Portugal. The jobs data continues throughout the week with private sector on Wednesday and ADP, and then the jobs report Thursday. It's important because we're getting to this weird place where the Fed is kind of caught in between its mandates of worrying about future high inflation, which it thinks it's coming from tariffs, or having to worry about the jobs market, which is showing some softening. But guys, I wanted to focus on tariffs right now because we're approaching this July 9th. Some are calling it Liberation Day Part 2. We'll see what happens when the Liberation Day exemptions expire, where he brought those revenues back to, or those tariffs back to 10%. But look how much we've been collecting in revenues. And I did this in part because Wilfred's here and he can talk about the UK trade deal. But just, this is the month.
Okay, SoFi on the watch list.
And they have gone up a lot. June is actually set for another big increase of $27 billion. That is money coming into U.S. coffers from tariffs. Now, who pays it? That's a matter of discussion, right? Is it the U.S. consumer? We know it's the U.S. importer, right? They have to pay it to bring stuff in to this country. And we are collecting a lot of revenue. So far, guys, $121 billion has flowed into the U.S.
Supermicro. Yeah, I saw your post over the weekend.
Overall revenues that the U.S. government gets, but it's increasingly a lot, especially we haven't seen it in terms of the consumer paying off higher inflation.
It's really fascinating to see the significance of it. Of course, as you say, tiny compared to the financing needs of the government in the coming years or the coming months, and that's what a lot of the sort of bets are.
Added to the Russell 1000, Supermicro. Antoine, don't sell this. He has a tendency to take smaller profits than he can make. He did that with Bitcoin and exploded after he sold it. But he's learning. So, at 15, if he can learn the things that I've learned over 40 years of trading, 38 years of trading and investing at his young age, he's going to be a good one. He's going to be a superstar. I'm projecting, but that's what I'm thinking. Okay.
Trump's tough pressure on Carney late last week as well. We we've still got our digital sales tax, 2% compared to Canada's 3%. And it sort of suggests that the kind of soft conciliatory approach, despite our position with the US being worse than it was 6 months ago, kind of worked. It's not a hugely deep trade deal. And it can change on a dime, of course, we all know. But quite actually, I want to ask Kevin Hassett about that because it does sort of suggest the soft approach.
Don't put it on the radar. It's going to rip up your trade deal.
You know, Sarah, but I mean, it's interesting to note the tariff
Sorry,
revenues,
yeah.
what they will be for June, obviously was 20-odd billion in May.
22 in May, and it looks like it's about 27, but it could finalize in the next few
And
days.
obviously we have the big, beautiful bill working its way through
Mhm.
Congress
Yeah,
now.
yes.
At this very moment, in fact, and any number of provisions in there are having impacts in different parts of the market potentially. But that's significant revenue, whether it will continue and can be said to be.
Finally, we're getting some
of the tax
beautiful
cuts
news
taking
out of
place. How it looks
They can
like
argue that.
they can argue that. That's it.
Supermicro being added. That's a big vote of confidence.
It looked for that we haven't yet seen, at least in the numbers in the data.
CBO actually did some work on this, and they projected if these tariffs of where they stand now stand for the next 10 years.
Shorts are going to cover big time.
past President Trump's
Look for a
administration,
big
$2.8
explosion.
trillion it could bring in, reduce the primary deficit by $2.8 trillion. So that is a big offset, but there are a lot of what ifs. First of all, what's the cost on inflation, on earnings? Also, will actually these tariffs hold? So it's hard to rely on that.
Or will people change their buying patterns? So therefore you favor domestically manufactured.
Given that it's the start chat and it's the end of the quarter, the end of the halfway point of the year, I just have to dwell on something that in 10 years of knowing each other, I don't think I've ever had this opportunity to say that so far year to date, as we end this quarter, the FTSE 100 is outperforming the 500. Not by much, by 1%. It's taken 9 years.
And the
But
British
it's-
pound too.
British pound's back
Really
to
strong.
post on a trade weighted basis is above its pre-Brexit level, unbelievably. That's the story of the year, is the dollar weakness. I mean, I don't think it's so
You're
much.
you're really buttering her up this morning. aren't
He
you?
cares about what I care about.
Two of you.
Long-term
That's why we did it at 10:30 today.
Me too.
Yes, well.
Okay, Supermicro. I'm going to add some SMCL. Let's see, SMCL. How many? I got 500 shares of SMCL. I got 600 shares of SMCI. Still haven't added to that one, but SMC. Ooh, that looks. Oh, that looks good. I actually had more than I thought I did. I have 800 shares of SMCL. So apparently, let me see. If you click on TOS, I think if you click on that little box all the way to the right, it says View Trades. All right, View Trades. All right, so
Great to have you here. See everyone. Why don't we start on that dollar point? 10% down.
627.
There's some benefits of that. There's some costs.
Okay, 627. All right, so added another 200 shares. All right, good. I don't remember doing that. Oh, I know what it was. It was a limit order to buy on the dip. Okay, that's what it was. Limit order to buy on the dip on Friday. Got added 200 more shares of SMCL. Got 800 shares of that and 600 shares of SMCI. I have yet to add the SMCI.
I think there's offsets, as you point out. I mean, David just mentioned, look, if you get a commensurate loss in unit demand, that's bad. But all else equal, of course, a weakening dollar helps U.S. multinationals' earnings. All else equal. So the question is, do they change their patterns in spending or not? If they don't,
Okay, so I'm watching. We're looking for big swings today, but right now price action is moving sideways. You can see the dealer hedge flows have just flattened out that purple line. Okay, let's look at 0 day. 0 day, no change there. 0 day. Okay. What do we want to look at? Let's look at Supermicro. SMCI. SMCI. Supermicro. Okay, so we got a big level right there. 51.
It's the first time I can remember, maybe since before the financial crisis, where I can find both offense and defense in financials. defensive names. You can own Progressive, and they'll keep working, or select insurers, and you can own offense. You can own the alts. You can own Jeffries. You can own things that could whip around and bounce higher if we get more M&A, and then you can own your kind of quality, JPMs and Morgan Stanley and Goldman Sachs. So I just feel like there's lots of things to own in that sector, whereas in the past it was more of a call option on the rate environment or something else happening. So I like financials, and then I like healthcare. It's been a bit of a dog's breakfast, I guess you guys say across the pond, but it really just
Not that often.
yeah, once in a while. But I like my dog, so my dog eats well. But I think there's the productivity potential from AI implementation is super high. You have a lot of inefficient businesses, a lot of employees, a lot of low margin, and we've seen stocks when they have low margins and you dream they're going higher, trade at really huge multiples in other sectors. So that's part of the reason.
That's what I was wondering if the AI improvements, efficiencies are helping to offset any margin pressure or profit pressures from the tariffs, because you do wonder who's paying all of this and where it's coming from if we're not seeing a spike in consumer inflation.
The reason you can't get too bearish on U.S. equities is because all the investments have a 2 to 3 year kind of return time. May 2023 was the
Supermicro looking for a push through 50. There's a pretty big level. Okay, we're just looking at this. There's a pretty big level at 51 right here. Okay. If we can manage to get above that level, dealers will need to buy shares in order to cover their short call positions. Okay. When they start buying shares, that pushes prices higher. Investors know that. Investors that know that can play it to the long side if we continue to squeeze, for a squeeze. Okay, so we're watching how price action reacts on Supermicro. If it does what we think it's going to do, you'll see it pretty quick. We should see a pop. All right, so that's Supermicro. Don't want to lose sight of the fact that the markets are also giving us a lot of bullish. We're only 279, 280 stocks advancing on the S&P 500, but that seems to be growing. We're at 285 now. So it went from 280 to 285 as I've been talking about it. The Qs were very strong on Friday. IWM was very strong. Small caps, we had the 10-year moving lower. So check the 10-year while I'm talking about it. The Qs, we got 72 stocks out of 100 advancing. So that's decent breadth. We're looking for the S&P to bounce. We got 764 stocks on the IWM advancing. Okay, so let me close some of these tabs. I don't need all these tabs open. Okay. Netflix. Okay, so all the New York FANGs are pretty much just sitting right here since the open. Let's look at Apple. Apple dipped a little bit. Amazon. Okay, that's looking okay. Building. Broadcom. Okay. Snowflake. Okay. Meta. Bouncing. Okay, Meta looks pretty good. Let's check out Meta real quick. Meta.
The administration is considering nominating someone to that 14-year seat who would go on to become the Fed chair. He was asked if there would then be confusion if that person gets nominated and takes their seat in January just to become the chair in May when Powell steps down. He says there should not be any confusion because obviously there are people who are currently at the Fed who are under consideration. So confirming at least some of the people who might go on to become the Fed chair are already at the Fed. He also, of course, had some criticism for the
Okay, Supermicro. Okay, let's look at Meta real quick. Meta.
They seem to be a little frozen at the wheel here.
Okay. Okay, so here you go. There's your first buy order block. Okay, so with regard to the New York FANG stocks, this is the first one with a buy order block. Okay, we're hitting supply right now, so we need to get above this supply. We get above 749. I think 750 something was Meta's high. Meta. No, it's 740. All right, so we're already breaking out. All right, so cool. Meta's breaking out the new all-time highs.
Thank you, Megan. Casella. Here's our roadmap for the rest of the hour. After the break, National Economic Council Director Kevin Hassett, speaking of the Fed, the latest on the big beautiful bill, how much it really costs, and of course, all this talk of the next Fed chair.
Plus, Apollo's Torsten Slot will join us to lay out his expectations for the economy and the Fed in the second.
Okay, let's look at the 60-minute. 60-minute. Look at that nice slope to the 60-minute. The green line is the 60-minute 20 EMA. The red dotted line is the daily 20 EMA for reference. Okay, so on this 60-minute time frame, we have a reference point. We can always see what the daily's doing too. All right, so we don't have to flip over to the daily. I'll do it just to show you. The daily 20 EMA's down here. Obviously, we're above it. Okay, that looks good. 20 EMA, 694, 694.60. 20 EMA. 20 EMA. 696. So it's close. It's close. All right. Meta looks good. Looks like it wants to keep going. All right. So it's one of the bigger AI infrastructure, AI candidates that will continue to monetize AI in the future. I mean, they spent so much money on hardware, etc. Looking for Meta to continue. Okay, Meta looking pretty good. We got buy order blocks early this morning. Okay, we're right at supply right now. So if we can get through this early morning supply. So there were some sellers up here, I guess. Let's see what institutions want to do, though. Institutions, Meta. A nice doji. Okay.
And we're going to go from there. So we didn't get here all at once. We've gotten here 20 or 40 years, and we're going to bend the curve, bring the death levels down.
Palantir. Okay. Still an inside day. Spinning top.
And I think we're all on the same page on how to grow the economy while controlling and bringing down expenses.
Now, let's talk about some of the math there as well, because if the GOP is right and the bill does look to shrink the deficit, how will that affect Treasury issuance over the next 10 years? How does your math square with the CBO, with Wharton, with Yale, and even the Bloomberg consensus of GDP projectors here, economists, that still see growth under 2%?
Well, I think that's just wrong. And we can start with the CDO. It is their model presumes 1.8% forever. And maybe under Democratic governments, that's right. I think what we saw under President Trump's first term.
Okay, so I'll come back to Meta in a minute. Super micro. There it goes. There it goes. Shorts are starting to cover. People are starting to see it. I just posted on StockTwits. All right, so going. Let me see if my son said anything to me. All right.
And that was Treasury Secretary Scott Bessent speaking to us just moments ago. We're going to now head to Washington as President Trump's tax bill faces a marathon voting session, a vote-a-rama in the Senate. Joining us now with the latest, Bloomberg's Washington correspondent Tyler Kendall. How's it going? What's the latest? Because every time you think that this bill is just about to make it through, there's a holdup.
Yeah, hey, Sonali. So we're probably in for the long haul here. This vote-a-rama is expected to take up to 12 hours.
Oh, that's cute. Vote-a-rama. That's cute. Call it a vote-a-rama.
This process before the Senate bill
You can tell when you're getting older, you know, everything gets on your nerves. It's like, uh, funny. Votorama. Okay, let's see. Let's see. Intraday. Just keep saying it. I'm going to tune you out here shortly. Super Micro.
We should say there's pretty broad agreement here when it comes to the big pillars of this plan, like the tax cuts. But when it comes to the spending cuts, some Republicans are on totally opposite sides. On one hand, you have those Republicans that are pitching themselves as fiscal hawks that want to see deeper spending cuts. And you ask the Treasury Secretary one of the biggest questions we're asking here in Washington, which is what sort of deals is the White House willing to make with these holdout conservatives? Since we heard from House Speaker Mike Johnson when the bill passed the House that potentially some executive orders could spur these hardliners to get on board with the plan. He sort of
Let's see. Money Magic. Thanks, Money, by the way. All your updates constantly keeping us apprised of what's going on. The room appreciates it. I appreciate it. You're such a great contributor to the room. Okay. 50-54. Okay.
Constituents aren't going to want to vote for them again. How are they dealing with that kind of blowback? And especially considering the fact that they could be primaried by candidates backed by Elon Musk.
definitely a factor here. There's two different ways we could pull on. One is the timing of how some of these tax credits, for example, are coming. These tax cuts are coming into effect. For example, front loaded. That was partly by design by the president, but openly said that he wants to see them as quickly as possible to fund spur investments, but also get cash in consumers' pockets as quickly as possible. When it comes to the cuts, we have seen some Republicans at least stand up to President Trump's threats of primary. For example, Senator Tom Tillis, Republican from North Carolina, has raised concerns about what this will mean for his constituents. And then a surprise announcement over the weekend. He announced that he's not running for re-election after President Trump threatened to primary. No doubt, though, the timing of this is going to play a pretty significant role. Also, when you think about how they're adding money to the debt ceiling, there's no doubt it's going to come up again.
Oh boy, I hope everyone's having a good day. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It is Monday, the 30th. Looking forward to this JP Morgan collar roll. You see where the next strikes are. JP Morgan collar, JP Morgan traders sell a call overhead to finance a put vertical down below. It's a way of making money in the markets, but being protected for downside. So they sell calls. It's like, I think it was like 45,000 calls to buy 45,000 of the verticals below. Okay. So that happens today. All right, so Super Micro, we got 50 right there. We're going to deal with some dealer has an incentive to keep it below Russell 1000 value.
205 losers. So you don't have few days and Brett, like Schneider pointed out, we are near section lows right now. In terms of the winners, men are right up there, adding points. Oracle also at an all-time high right now. Ronda and Palantir, I was just looking at Palantir right now trading over 200 times forward earnings. NVIDIA is only trading up about 37 times forward earnings, which to me, I guess, look cheap, although client tells me that's consistent with the highs they've seen. Amazon actually taking right now 1%. Nintendo says they won't get the Switch 2, which is supposedly the biggest video game console release of all time. Including the Xbox and PlayStation had big ones too. In terms of the breakdown year to date, because we are in the last trading day of the second half, you see industrials up almost 12%. Communication services, these are the hyperscalers. So and then financials doing incredibly well in the first half of this year, up 0.8%. The losers are consumer discretionary, healthcare,
All right, so here we go. Supermicro. Nice.
is getting dragged down as potential buyers continue to wait on the sidelines. CEO joins us to talk about the housing sector. Next, this is open.
Okay, I need to do something here.
What's gonna happen July 9th? Are we gonna see tariff rates go up?
I think that we've got a whole number of deals, double-digit deals that we've got frameworks just like we have in the UK that are just about agreed to. As soon as the tax bill is passed, I think that there's going to be a marathon session at the Oval where we'll go through them one by one with the president, and we'll make the final call, set the tariff rates, and show the world all the work that Howard Lutnick, James Greer, and Scott Bessent have been doing.
Are you nervous? I mean, Wilford and I were talking about the dollar. We both care deeply about it. But are you it's headed for a really weak first half of the year, the worst we've seen, I think, in 40 years to start out the year? Is that a concern?
The Treasury Secretary is the spokesperson about the dollar for our administration. So.
But you're an economist. I mean, do you worry about loss of faith here?
Yeah, we've got a strict rule that the Treasury Secretary communicates about the dollar.
All right. Let me try. Thank you, Kevin Hassett. We appreciate it.
Thanks.
Remember talking to Bob Rubin about the dollar. He wouldn't talk about it either when he was Treasury Secretary.
Well, they have a line, a strong dollar's in the best interest of the United States. Wink, wink.
Yes, exactly.
Right.
That's always what it's been. All right, after the break, policy chief economist Torsten Slot will join us with his outlook for the second half of this year, including when he thinks the Fed could cut rates. Plus, more on the fallout for solar and wind companies. We were just discussing that with Kevin Hassett after those big changes in that big, beautiful bill. Those details from Scotland Street.
All right. Okay, we're encountering some resistance at 50 at the moment. Supermicro, New York Fan Components, watching those, just kind of sitting here, not doing much. Meta's trying to do something, but it ran up against supply. NVIDIA's trying to turn. Futures are trying to turn.
In platform chat.
Watching the futures.
The trending names every day. It's Fast Market.
UMAC looks like it's up again. UMAC.
Catch me on Fast Market.
Palantir, still an inside day. Palantir. Reddit looking for a follow through.
Is it? Schwab, how I choose to invest is up to me.
Exactly. I can invest in
Okay, we got about, all right, so we continue to grow. We had about 275. Now we got 303, 304, 305 stocks advancing on the S&P 500. Got 70 out of 100 on the NASDAQ, so that's good. Top stocks on the NASDAQ, Booking.com, Mercado Libre, Applied, AppLovin. No, is that Applied? What is it? APP? APP? That is AppLovin. Okay, AppLovin. Synopsys and Meta. Those are the top 5. You're watching Meta. Watching Meta.
Welcome back to Morning Trade Live Tech War. Chartmaster Jenny Horn takes us through the fundamentals. Rick Cap takes us through the technical. Jenny, we'll start off with Roblox. What's the latest there? There's some optimism, and I will say today's price also matching that, as we did touch 52-week highs, and I mean nearly 3-year highs actually hit today. But you have to zoom out and to see the all-time highs, which we're still about $40 a share away from, which I think is really the captivating story that it is Roblox's volatility, because this is still one of those companies that has yet to see its highest levels return to. So that is something to consider, at least when maybe looking at more of that long-term picture. All things considered, though, the note today was optimistic, as JP Morgan did raise its price target to $120 a share for 100 with an overweight rating, noting that Grow a Garden has reached now about 20 million concurrent players for each of the past 2 weekends, calling this a historic level of player engagement, as well as the scale that Roblox and other broader gaming industry peers have really never seen before. So they said that the rise of Grow a Garden has coincided with shares trading up almost 100% since early April. And they also did say they've meaningfully now increased their estimates on Roblox. So of the roughly 33 analysts that do cover this name, there are 24 buys, 7 holds, and 3 underperforms. But definitely skewing optimistically. And the average price target right now, $80 a share, actually implies about 25% pullback, because again, I feel like we're seeing this right now. Coverage update from broad analysts right now in the tech space that are like basically playing catch up with their price targets that have come down considerably in the recent months. And then we've seen shares make pretty meteoric rises to the upside. Again, a 100% rise from those early April levels. So new 52-week high today, still not all-time highs though for Roblox shares. Okay, thank you for all that and the updates there. So I mean, up nearly 200% from the 52-week low. Wow. Let's check out the chart, Rick.
Yeah, and here's that big surge to the upside that Jenny mentioned from these April lows, taking us from around 50 to around 106 or so at the high point there. And really, the price action was rather unusual. Very narrow, very tight, upward sloping channel between our 2 white dashed lines, just drawing a conventional trend line across the lows, duplicating it, fits up fairly well with those highs. Now, though, the recent activity for price has been perhaps not exactly what the bulls would want to see. For starters, we have bearish divergence, but it's also a little bit more complicated because the RSI remains in the oversold area. So we have strong momentum still lingering to the upside, even as it starts to slow down. You can see price made marginally higher closes.
Okay, still waiting for the markets, just sitting here.
But if you were to look closely too, you can see today's candle is looking like it could form a bearish engulfing.
Just slightly more than 50% on the S&P 500.
Neither of these are really
Advancing.
Super
micro.
Momentum, bearish engulfing, as the name would suggest, would be
What's he talking about?
Looking for a downside move then. Certainly not set in stone, certainly not guaranteed.
Roblox. Okay, still going. I was going to put it on a watch list, but I said, you know what? This thing is probably going to take a break soon, I would think, right? Roblox. Looks like a little rounding top. Bollinger Bands are starting to come together. Muscle for the last few weeks. 8 weeks, man. This thing has just been on a tear since April, breaking above the 50-day.
Let's get to McDonald's, a price target cut there for this fast food global name.
Okay, Edmund talking about Kava this morning. Edmund. Okay, once it gets above the 50-day, Edmund, I would start adding. Volume looks good. That's telling you institutions are picking up shares. Okay, Edmund mentioned this one earlier this morning. looks good. MACD stochastics rising, RSI headed towards 70. This looks really good, man. You got like a triple bottom. If you're just starting Kava today, I would wait a little bit. Maybe you get a B and C pivot. Okay, a B and C. Once you get a B and C, most likely this will continue.
For their money. Based on their proprietary data, though, in recent industry conversations, KeyBank does believe McDonald's U.S. system likely outperformed its two largest rivals during the second quarter, but the absolute level of growth was perhaps not to the extent that previously had been imagined. So, accordingly, the firm is also trimming its full year same-store sales expectations for now the U.S. from around 1.7% to 1.1%, as well as its earnings.
Okay, super micro. Okay, this is looking really good. All right, so if you're a new trader, you don't haven't traded that often, this is what I'm always looking for. Okay, so you've got a stock that's been underappreciated. It does make lots of money. Okay, you've got an obvious cup pattern. You've got a handle. Took a little while. You got the handle. And now we're starting to break out. So this breakout is likely going to take us up here. Okay, so we need to get through 50 first. 50, 51. Then you got 54 is another call wall. Very possible that we could break through that because dealers were short those calls at 50 and 54. They were short those calls. People bought, whoever bought or sold, even sold some calls maybe up there. Dealers have an incentive to keep it below 50. Once above 50, the dealers have to start covering. They start buying shares, and then that creates a squeeze. It creates a feedback loop. More people buy. More people see it move. They buy more calls. The dealer has to buy more shares. And you get that meme kind of move like we had with GameStop and General Cinema, among others. All right, so futures are pulling back a little bit, so a little pressure on the markets right now. This looks really good. 9 EMA is starting to cruise higher. Still a lot of people that are negative on it, most likely think it's going to drop back down. They have every reason to believe it would. So I'm not the kind of person that bets heavily, but this is starting to move. I have a pretty decent sized position. Running the upper Bollinger Band. Everything is pointing, whenever I see this, everything is pointing in the right direction. We have no supply overhead or lack of supply over on the left. On the left, you can see the Kirby over there on the left. This could accelerate very quickly. Palantir turning back up. Okay, the markets are just kind of sitting here. I'm not expecting a whole lot today, except maybe some volatility. Speaking of volatility, what does VIX look like? VIX, it's up a little bit. VIX is up a little bit. What's junk bonds doing? Junk bonds are higher. That's bullish for equities. High yield corporate, that's bullish for equities. The 10-year yield lower is bullish for equities, in particular IWM. All right, that's starting to release itself from the 200-day. Now, I can't remember exactly who said it. I think it was on Bloomberg. But supposedly, IWM is the most shorted index since for the last few years. All right, so it's the most shorted right now. Below the 200-day makes a lot of sense. So now that we're cruising higher, this could start to giddy up. Okay, so IWM weekly. Okay. All right, when in doubt, you always want to check the New York Stock Exchange. Let's take a look at the New York Stock Exchange inside day. Okay. A lot of people are anticipating that we could see a follow through into the July 4th holiday. That's left to be seen. Inside day on the New York Stock Exchange, 2,000 stocks on the composite NYA. Let's look at breadth for the day. Breadth. Okay, breadth is just kind of hanging out. You can note that. Look at the S&P in the top, mid caps, small caps descending, and then the Nasdaq in the lower panel. That's holding up the best. So I would focus on the Nasdaq. Let's go take a look at the New York FANG. All 10 of the New York FANG components were bullish last week. They're not doing much right now. New York FANG, 5 bullish candles last week, starting off this week with a bullish candle. Hopefully we don't get a fade. All right, Broadcom starting to turn. NVIDIA is starting to turn. All right, so let's check out NVIDIA. Let's see if we've got, okay, Supermicro looking pretty good. NVIDIA, okay, we want buy order blocks. Okay, don't see any buy order blocks. We got liquidity down here. That's from last week. That liquidity bar right there, you see it? Let's go to the 15 minute. Okay. You can see this liquidity bar from last week on Friday. So we stayed above that, NVIDIA. We got supply overhead at 159, 160.
For the most part, the closing prices have played along here. You could also draw another line going across these highs to give us this more of a rising wedge type shape here. Now, kind of counterintuitively to the name rising wedge.
Okay, so apparently Trace isn't working at the moment properly. I don't know. It looks like it's working to me, but okay, Broadcom. Okay, we're looking for buy order blocks. Okay, looking for buy order blocks. Broadcom trading at highs. Broadcom. You might want to check SMH and SOXL. Those are good ways to trade these semiconductors. SOXL above the 200-day. Notice SOXL is above the 200-day on the right, the red line. Okay, so if you're thinking about semis, maybe put a little bit into SOXL. We're sitting on top the 200-day. Okay, if this starts to move away, it'll be a product of NVIDIA reversing and all these chips turning back up. The top 10 on the NASDAQ, Booking.com, AppLovin, Mercado Libre just moved to the number 2 slot. Mercado Libre, Synopsys, Meta, CrowdStrike, Charter Communications, ISRG, Intuitive Surgical, Intuit, Palantir, Clack, Netflix, Broadcom, Ansys, Cadence Design, Trade Desk, Adobe, Vertex, Amgen, Workday, Datadog. Top 20 look pretty good. Top 25. Okay. And we're more than 70% green. Well, actually, we're 63% now on the NASDAQ. So we're starting to lose a few as the NASDAQ fades a bit more. As the futures fade a bit more. Broadcom starting to turn. Broadcom. Wow, that was fast. The buy order block on Broadcom. Okay, if it gets through, that's SMCI. Sorry, SMCI. Buy order blocks. Look at the volume. Okay, so institutions, it's being added to the 1,000. So Russell 1,000 value. So as this starts to move, with all the buying that needs to occur, funds like Vanguard and Fidelity, etc. There's multiple funds out there. Obviously, they need to buy shares. Whatever's going to come off, they'll put Supermicro on. There's a lot of buying that'll come into the stock, and it's just getting started.
Nation. It's your number one broker with the best full service wealth management skills in the business. Actually, I've seen something from Schwab. Uh-oh.
Yeah, Schwab lets you invest and trade on your own.
And if you want, they can even manage it for you.
Not to mention, Schwab has a team of specialists for taxes, insurance, and estate planning, all with low fees.
We're experiencing technical Carl.
Schwab, a modern approach to wealth management.
So we had that little shakeout on Friday.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks? Our technical analysis webcast series breaks down different charting techniques like trend analysis, price patterns, moving averages, oscillators, and much more. Best of all, you can ask questions directly to an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Download the Schwab Network app and join in on the latest anytime, anywhere.
Okay, Nvidia, Netflix, all the New York, some of the New York FANGs are starting to see some short covering. Broadcom seeing some short covering.
Welcome back to Morning Trade Live. It's time for our market meetup panel. This is our markets hit records again at the opening bell. Joining me right now, JD Durkin here on set, and Joe Masola, Director of Trading Services with Charles Schwab, both with us now. I did mention the all-time highs. Joe, I'll start with you. Good to see you again. Let's talk a little bit about some of the things that you noted. It's been somewhat, you used the term risk on, maybe soft landing. Some of the drivers that are happening here in this market and what you're watching.
This volume here is probably shorts covering, I would think. A lot of it. Okay, Palantir. Palantir watching inside day. Pretty slow day so far. I haven't done a whole lot.
So, whether or not things get done this week, there's at least that hope that the extensions will be offered, and I think that the market's looking at that as bullish and creating some additional upside sentiment. I think the other thing is, look, there's just momentum trade. I mean, let's call it what it is, right? When the market has that inertia behind it and setting all-time highs, so we start to see kind of, the movement into the risk on that you mentioned. The trades like last week.
Okay, let's look at Broadcom. Okay. Okay, Broadcom. Nvidia turning. Nvidia. Okay. Okay, we could ping pong between these two levels. You got liquidity below, supply above. We had a really big day on Friday. There was a lot of massive call buying on Friday that we noted as well.
Thank you for that, Joe. Let's tag on to that and have JD Durkin join the conversation. Send me your thoughts.
Everything Joe just said, there's certainly risk on, but maybe with a mentality of watch your step for the very precarious days ahead, Nicole, because as you know, we have no shortage of very busy and very important economic data points in this shortened holiday week. Plus, not to mention everything going on with this very large price tag budget reconciliation bill out of Washington, which we know both the equities as well as I'm sure the bond vigilante crowd we'll be watching very closely. Interesting to see a session like today, although it's a bit more of a risk-on narrative. We are actually seeing stocks like Costco outperform the Amazons of the world, which tells us consumer staples are actually trending more in positive discretion off the back of consumer discretionary, which is taking a step back. But stocks up, gold up, oil in retreat, crypto for right now taking a breather, and yields flat tell us, I think, largely that bond market's still looking for confirmation about what it wants to do next. Undoubtedly taking those cues from inflation prints, from jobs prints, and a lot of manufacturing and services.
Okay, just watching the futures, just sitting here doing not much of anything.
Send out our list too of some of the
Nvidia grinding higher.
the bill is obviously front and
Palantir,
center.
Bitcoin, Snowflake. Bitcoin's off 1%.
But your thoughts, Joe, on the bill and maybe some of the data that's
Bitcoin.
throughout this week. Is there anything specific you're watching for?
Well, I mean, of course, we get non-farm payrolls, right? That's the big one on Thursday. Expectations are for a little bit less job creation, and that's been a trend, right? I mean, we do need to be mindful of that. I think it's around 110,000 jobs were expected. Actually, even outside of the economic data, really watching just kind of what's happening with the 10-year yields. That continues to go down. I think we're around 4.25% right now. But on top of that, it's not just the movement down, it's kind of the lack of volatility. So, looking at something like the MOVE index really shows that the volatility that really started back in the spring has almost completely dissipated. We were around 138, 139 in the MOVE, and we're in the MOVE index, and we're down to around 88. So, I mean, just a huge pullback there basically shows that that volatility in the fixed income market that I think, and at least my opinion, really drove some of the volatility we saw in the equity market. That's just kind of dried up, and if we can stay in that relatively calm market, that should propel things higher through the end of the summer.
Yeah, and also we're looking, so we'll see whether or not that actually happens. And JD, you're watching specific names too. We're seeing some of the leaders, names like Hewlett Packard, Juniper, Oracle are the number 1, 2, and 3 spot in the S&P 500 today. Some of your thoughts on some of the movers?
Yeah, what's old is new again. Obviously, an old school classic name like Oracle with its strong performance, and then the DOJ settling this closely watched antitrust case here specifically between HPE, Hewlett Packard Enterprise, and Juniper Networks. We can't forget this was a closely watched trial, and it was set to go to trial as soon as July 9th. But of course, as is often the case here, Nicole, for these high-profile, kind of gritty antitrust cases, cooler heads prevail. No courtroom drama there, so we're seeing upward shares, upward movement for both HPE up about 12% today, Juniper up about 8 and change. This, as that settled antitrust case now allows for a $14 billion takeover of Juniper by HPE, something investors and certainly both companies had been hoping for, but as is always the case, they had to make some key concessions.
Okay,
in order to earn
futures
the trust
just grinding along sideways.
of those regulators, which was very uncertain, as is often the case, as you inch closer to a court date, but cooler heads ultimately prevailing. You're seeing upward pressure and movement on those stocks.
Okay, Broadcom trying to push a bit more, so is Nvidia.
We're wrapping up the show. Anything else that you want to add here?
Palantir trying to push.
I would say that the hedging activity that we talked about a little bit last week, that's gone. We saw skews on the flip side kind of pushing that activity from institutions up to around 85th percentile, meaning 15% of the time that happened. Now we're really, really low, down about the 45th percentile. I think people who are trying to stay short, or at least trying to hedge, have kind of thrown their cards on the table and said, okay, let's wait to see what happens, because the hedging has not worked. And so, it's not, at some point, that capitulation, if you're a contrarian, maybe you look at that and say, yeah, there are some risks on the table that aren't being taken into consideration in this market right now. It just seems like the overall sentiment is bullish, but there's always things to kind of keep an eye on, at least on the fringes.
All right, let's wrap it up here. JD Durkin, Joe Mazzola, thank you both so very much, and we'll continue to watch for all of that. We have a busy day ahead as usual, so thank you for joining me right here on Morning Trade Live. The S&P is at 6,182. These gains are new records for the S&P 500. The Nasdaq also at a record. Keep it right here on Schwab Network, Trading 360 next.
Schwab Bank Investor Checking, the checking account built for investors. Named
Broadcom, trying to push through this level, Broadcom.
6 years in a row with Investor Checking.
Okay, looking for buy order blocks. No buy order blocks. Tells me to just kind of chill. Okay, Broadcom. Let's see, Microsoft. Microsoft's been active lately. It's been running. Okay, so this is just liquidity. Okay, App 11, App 11, APP. Okay. Mercado Libre, Melly. Good. Kava is one that Edmund was looking at this morning. Kava. Looking good. Kava. SoFi on the watch list. SoFi being mentioned by several in the trading room. I got buy order block right at the open. That's always good to see. And very little supply overhead. So you can see that buy order block just shy of the opening bell. And on this follow through. SoFi. SoFi looks pretty good. Student loans being repaid. Okay, that one took off to the upside. SoFi. Okay, what's VSAT doing? VSAT, I happen to see that one out of the corner of my eye. VSAT on the watch list as well. Just grinding higher. And the future's just sitting here. So
Morning movers, be the first to find out what's shaping early market action. Tech Check, Austin's Corner, Futures Focus, technical analysis. Morning movers covers it all. Grab your coffee and tune in every trading day at 8 a.m. Eastern, only on Schwab Network.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks? Our technical analysis webcast series breaks down different charting techniques like trend analysis, price patterns, moving averages, oscillators, and much more. Best of all, you can ask questions directly to an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Good morning, everyone. We are about 90 minutes into the trading day on Wall Street. Welcome to Trading 360. I'm Diane King Hall, live from the floor of the New York Stock Exchange. Still got some green on the board, but getting a little bit of pushback right now. Let's start out with our roadmap. Coming up on today's show, in our 365, we'll look at e-commerce and the decline sites such as Temu and Shein are seeing in monthly active users due to increased tariff pressure. Today's disruptor is Oracle. People upgraded shares to a buy. 360 we'll discuss big push into acquiring talent for AI. Let's wind up, take a quick check on where markets are at this hour. We are looking at the S&P 500 better by a little bit more than 10%. So the bulls still have the reins, but again, facing some pushback after those records we achieved on Friday. But keep in mind, we're still in posting records for the S&P 500 and NASDAQ 100. NASDAQ 100 better by a little bit more than 0.25%. The Dow is up by a little bit more than 0.2%. Similar performance over in small caps. Take a look at the Russell 2000 up on the nose by 0.2%. Let's take a look at some of the other price action that we are watching. You look at the yield on the 10-year off by basis point. The dollar off by 0.25% right now. Gold a little bit higher, up just about 1/3% there, just below 3,300. Crude oil lower by 1%. market right now, trading below $65 a barrel for West Texas Intermediate. Bitcoin flat at the moment, hovering around 107,000. For a look at some of the top moving stock action in today's market, I'm joined by Alex Coffey, senior equities contributor here on the Schwab Network, also co-host of NextGen. All right, so Alex, we're looking across the solar stocks. They've been in focus today because of the big, beautiful bill. Now, before the market opened, there's been some pressure, but now there's been some recovery throughout it. There is expected to be a heavy hit delivered as a result of this bill when it comes to solar. So take us through what you're paying attention to here in terms of the price action and reaction to the big, beautiful bill.
Yeah, there's a lot to unpack and explore here, Diane. Good morning to you. First off, this is an iteration within the process of the ultimate passage of whatever the bill looks like in the end. So that's the first piece. The second piece, to your point, which is whenever there's surprise in financial markets, whether that's policy related, whether that's earnings related, whether that's anything that causes stocks to move in an outsized kind of fast and rapid way, there's oftentimes almost a sell now, ask questions later, or buy now and ask questions later. Well, we're kind of in that ask questions piece of that component. So the initial reaction and the headlines were, hey, this is net negative for solar, therefore sell solar stocks. You saw all those names indicating that they were going to move lower. But as the details pour out, as analysts and portfolio managers and investors digest the details, run their numbers, and try to figure out, what is the impact? Does this present opportunity? Even if there's a negative impact, doesn't mean that some of these stocks aren't potential buying opportunities when they're under pressure.
Okay. Futures are just sitting here doing nothing, absolutely nothing. No momentum whatsoever.
That takes place after, and we're in that phase where now the move has kind of adjusted. There are still names that are lower. You look at Nextracker, it's down. You look at Tesla, it's lower. You look at Enphase, it's lower. But names like Sunrun, now they're up almost 10%. You look at names like First Solar, up over 9%. Solar Edge, up over 4%. And even GE Vernova, which I know is more in the wind space, is up 1%. So what I would say is, look at this in the sense of this is the same as if you got a negative earnings or something that would impact the company fundamentally. Decide whether or not it changes your perspective or thesis if you're a bull in these names, and then make your decision accordingly. But the real big thing here is more that it just accelerates this timeline where in this most recent draft, it's the end of 2027 where these tax credits are phased out. There was also an aspect to it which has a new tax on projects that use supplies from China. And so that's going to impact companies that are a little bit less domestically focused, where a name like First Solar, for example, domestic producer, Nextracker, domestic producer, GE Vernova in the wind space, domestic producer. So a couple things to think about when you're looking at these different names and trying to make a reaction.
That is great, that was great analysis there, Alex, going into both the surprise effect and then the actual components of the bill and, where it is in process. We know that July 4th is the target date for the deadline on passing this bill. Thank you so much for that analysis and analysis of the stocks themselves, the stock price action. That's Coffey, senior equities contributor. All right, let's find out some insights on the news that's shaping markets. For that, we want to welcome in Eddie Gabor, owner of Key Advisors Wealth Management. Eddie, thank you so much for joining us at the beginning of this week. I guess we'll wait for you to pop up on the screen there. There you are. I'm happy to see your face. I was happy to see you in the lineup for today. All right, let's talk about these records that we've been hitting within the market. When I look at some of the notes that I get in my inbox, they point to
VSAT, SoFi,
the bulls. What do you make of these records?
Supermicro, pushing up against that 50. If we do blast through 50, that's going to cause a lot of short covering. I would think we will, because there's just so much pressure to add to funds that they need to buy. And it's pretty cheap. I mean, Supermicro is pretty cheap. It's coming out of a base, so it's not like it's very extended.
So there's tremendous amount of cash on the sidelines that needs to get back in this market. There's a lot of liquidity in the marketplace. You have the dollar down, rates are down. You now have a Fed that's probably going to cut 2 times. And 2-3 weeks ago, the bond market was pricing in only 1 rate cut. And then this bill, whether it passes on by July 4th or not, we don't know. But ultimately, it is going to get passed, in our opinion, in some form or fashion. And there's going to be increased spending on the government side. And that we've learned that acts as fuel to the fire. And so you have a non-recessionary environment with a tremendous amount of liquidity coming into the marketplace. It's a perfect storm for the bulls. And I just hope it continues to be the most hated rally, because as long as it is, it will continue to grind higher.
Institutional money, cash still on the sidelines. What are you expecting in terms of flows and fund flows as we kick off a new quarter tomorrow?
So, if they have underperformed in the first half of this year, which they probably have if they're sitting in cash, they're going to have the performance chase. And this is why we think the year end is going to be really strong. July, August has a tendency to be pretty volatile to the downside. But again, we're not expecting any major drops, because I think this cash, to your point, is going to come in on red days. And so the flows are going to be net positive for the bulls, because so many people have been offside. There's still a lot. When you look at institutional money that's short the S&P, I feel like as higher as we go, the more negative the sentiment is continuing to get. So it's a very interesting setup. But it's really great if you are fully invested right now.
Okay, what do you think investors are still skeptical of the bullish momentum and this V-shaped recovery?
I don't know what they're skeptical about. The data points are there. So, you can always find something to hang your hat on to be negative. But we say, position yourself for what's happening right now, not for what you're worried about could happen in 2
Okay, watch. Keep an eye on Supermicro. I have to mute you guys for 1 second.
really hit us hard and have to go to cash. And right now, it's a very compelling liquidity story, money flow
I have to mute you
story.
guys for a minute.
And like you said earlier, which I think a lot of people need to
I'm still on the line with my broker. I'll be right back. All right. Sorry about that. All right. So Supermicro is pulling back from that 50 area. So dealers have an incentive to keep it below 50 for now. So once we move above 50, it'll become very obvious. We'll start to see some activity. Okay. Supermicro. So it's just going to take a little longer, it looks like. All right. So Microsoft is starting to turn the corner. Microsoft. Okay, let's see if Microsoft has anything for us today. Microsoft. All right. So no new buy order blocks. I'm not seeing a whole lot of flow, a lot of activity. Everything is just stalled. It is so slow right now. Markets are not moving. Volume tapering off. Okay, well, maybe the volume will pick up in the evening session.
Was seen as the easiest in years. And that's because the banks took the test at a better starting point from a fundamental standpoint, but there were also very low trading losses reflected in the test, which may simply reflect auspicious client positioning on the day of the shock that they were tested for, according to JP Morgan's research.
Okay, let me just write this down. Market's really slow on JP Morgan collar roll. Okay. Today's the 30th. I'm just going to take some notes while I'm waiting on the markets. It's very slow right now.
This year. But on top of the easier stress tests, the Fed is moving forward on a proposal that will loosen another capital requirement, the supplementary leverage ratio, and that is furthering investor optimism around just this overarching theme of capital freedom, essentially, guys.
I love that you brought it there because I wanted to ask about the SLR. And that's exactly what the process is from here. So is it a kind of given that this is going to change? Do we know how much it's going to change by? I mean, analysts, when you see Mike Mayo talking there about extra money to return to shareholders, are they factoring this SLR change in yet? Or is it a sort of extra benefit to come if it all gets confirmed by the end of the year or whenever it might be?
Sure. So they go through a comment process from here, but it does appear that while it's not a ubiquitous agreement that this needs to be changed, there were essentially two dissenters that didn't like this idea. They thought that it left the system more vulnerable to systemic risk. But basically, after that comment period goes through, then I do believe that most analysts in the street expect it to be
S&P.
and it would essentially cut in half the amount of extra capital that these banks need to hold against their entire
Broadcom still pushing here. Broadcom, that might actually get something going. Broadcom, volume's not really that
as well. They basically had to hold
interesting.
against their entire balance sheet, regardless of risk. So
Broadcom turning back up.
things like treasuries and other areas that are perceived to be risk-free. So that was something that has
Volume very low. It just feels like average Joe or Jolene trader are just playing the markets. All right, so I see Supermicro just turned. Supermicro turning back up.
Something to watch. Additionally, as it pertains to the stress test, there's a process in place to essentially average the results over 2 years, which people think would create less volatility there.
All I know is Michelle Bowman, Secretary Bessent. This is a much better deregulatory front. Thank you, Leslie. Leslie Picker. Much more on the financial sector coming up later this hour. The HSBC US CEO will join us in just a few moments. Time now for news update. Silvana now has it for us. Hi, Silvana. Hey, Sarah. Good morning to you. The Supreme Court threw out a handful of lower court rulings today that were in favor of transgender people. The High Court is now requiring the appellate courts to revisit the cases which involve access to medical care and birth certificates. The move follows the court's recent decision to uphold a Tennessee law banning certain medical treatments for transgender youth. A judge in Pennsylvania will hold a hearing today over whether 7 potential witnesses in Brian Kohberger's home state will have to testify in his trial over the killings of 4 college students in Idaho. It's not clear how they fit into the case. Kohberger's trial is set to begin in August after a judge declined his lawyer's request for a delay last week. Prosecutors are seeking the death penalty. And a group of Environmental Protection Agency employees published a declaration of dissent today over the agency's moves under the Trump administration. They say the administration has undermined the EPA's mission. More than 170 people put their names on the document, while another 100 signed anonymously out of fear of retaliation, Sarah. Okay, Silvana, thank you. Turning to the world of sports, the WNBA announcing it will be adding 3 new teams in the next 5 years. Alex Sherman has all the details. Morning, Alex.
Good morning. Yeah, an historic day for the WNBA. As you mentioned, 3 new teams being added in an announcement this morning. Cleveland, Detroit, and Philadelphia. Those are the 3. Detroit and Cleveland have actually already had WNBA teams, so they will be returning. For Philadelphia, it's brand new. I want to see if she's still behind me here. No, she's not. But I just spoke with Kathy Engelbert, the WNBA commissioner.
All right, Qualcomm's turning. Futures are starting to tick up a little bit. Microsoft's starting to move. We get a little short covering on Apple. Very slow day. Very slow day. I was expecting a much more volatile day. Supermicro.
These are different cities too. They've transformed, as you've heard them talk about, particularly Detroit.
So yeah, look, there's sort of a dual track thing going here where the WNBA is resurgent, and maybe some of these cities like Cleveland and Detroit are also resurgent at the same time. Each franchise paid $250 million as an expansion fee. That is by far the largest expansion fee ever paid in WNBA history. Well,
and just to remind us, Alex, of what the growth looks like right now for WNBA. How much is tied to Caitlin Clark, and how much is sort of lasting here in terms of changes in revenues and TV deals, everything else?
So that is the $64,000 question. So we know that WNBA revenue will be up 6-fold from its most recent deal that it signed earlier this year in conjunction with the NBA. So that does give ownership groups a little bit of faith that the league itself is on the rise beyond just the Caitlin Clark effect. But it is still very much a question if Caitlin Clark is sort of a one-off for the league and there's been a jump in attendance and TV ratings and perhaps that will die down, or if this is a lasting effect. That is something else that I asked WNBA Commissioner Kathy Engelbert, and she told me she's extremely confident in the younger talent in this league. In fact, she said some of the players she's seeing in the U17 league could jump in and play in the WNBA today. So the hope and the thought is that Caitlin Clark has basically ushered in a new generation of higher talent level players that will then join these 3 new expansion teams, and the overall quality of the league will just continue to go up and up as years to come.
Alex, do you do valuations of these teams? What are the top teams, franchises worth?
You're leading right into a CNBC Sports special. So CNBC Sport has not actually done WNBA valuations yet, but they are to come. But as you might imagine, the largest market franchises, the New York, Liberty, Los Angeles, these tend to be the teams that currently have the highest valuations based on other metrics, which is no surprise, certainly with the amount of money that's coming into these franchises. But look, one thing I would say is that if you take a look at Cleveland, at Detroit, when Detroit had its team earlier, those were some of the highest rated and highest attended games of all teams. Then the financial crisis hit and they bailed on the team. So the hope is that there is a fan base in each of these cities immediately that will lead to high TV ratings and high attendance levels.
Okay, Alex, very interesting update on those new WNBA teams. I recently went to a New York Liberty game here in Brooklyn, and it's exciting. I mean, they're the best in the league right now.
Yeah, by the way, the women's soccer league in the UK as well is really taking off. Arsenal playing all of their home games next season at the Emirates, the men's stadium, 60,000 attendance. They often get that number. It's really impressive.
Yeah. All right, shares of Meta we are watching today because they're hitting an all-time high this morning. CEO Mark Zuckerberg writing big checks to boost the company's AI ambitions. Market's rewarding him so far. We'll go deeper into the OpenAI Meta talent war.
And as we hit the break, check out shares of Oracle hitting an all-time high in the filing. The CEO, Safra Catz, says the company's got a large cloud agreement that's expected to contribute more than $30 billion in annual revenue starting in fiscal 28.
All right, Qualcomm's starting to turn the corner. Watching Qualcomm. All right, so okay, we've got a buy order block on Qualcomm. Let's see if we can't get something going here. I'm going to try some Qualcomm here. Qualcomm. Let me just check real quick Qualcomm's ATR, see how much we might be able to get out of this. Typical Qualcomm ATR is about $3.50. Currently up 25 cents. So if we can get some kind of movement today, Qualcomm might actually get going. So let me try Thursday's calls. 50 Delta, 40 Delta. 50 Delta is 80 cents. 40 Delta is 58 cents. See if we get something going here. All right, so filled at 57 cents, Qualcomm. At 44. What? Oh, I wound up bought the wrong damn thing. So made a mistake there. Toast. No wonder. Okay, let me go ahead and sell that. That was a mistake. Get out flat. That was a mistake. Toast. Yeah, bounce. It might bounce there. Leave it alone. Qualcomm trade. Should have known. Still not used to this. August will be a year, right? August will be a year using Thinkorswim. Qualcomm. All right, that makes more sense. 50 Delta is $2.60. Actually, that's a 60 Delta. 40 Delta is 160. Let me just go back to Qualcomm. Okay, it's not moving that much. The volume's not there. I'm going to pass. I'll pass on Qualcomm. I got a buy order block, but that was pretty decent volume, but nobody's biting. You see that? You see that right there with Qualcomm? Okay, so we got a nice buy order block, nice volume. But what the volume that's following isn't anything. There's nobody biting on this as it starts to move up. Even though we have supply at 159, that's only $1 away. So I'll pass on Qualcomm. Hunting for trades. I should be looking for reasons not to buy instead of reasons to buy. Okay, so S&P, spiders turning. Okay, you got sell orders overhead. So resistance. Very slow day. Volume here isn't that significant either. Oh, you know what I need to do? I need to update the data points. Let me update the data. Okay. Go over here, update that, copy that. Okay, back here and input this.
Welcome back to Money Movers. The S&P notching new record highs as investors shrug off the global trade and geopolitical uncertainty that marked the first half of this year. Financials among the best.
It's funny how they put that as investors shrug it off. Really? I don't see anybody buying right now, so well, maybe it is just investors. I don't see a lot of volume, so I don't feel like institutions are doing much right now.
I'm curious what the attitude is toward the U.S. right now, given some of the volatility.
Yes. So thank you for the question. We are celebrating
SPY,
our 60th year
trying to push through this level.
150th in the United States.
Okay, there goes Broadcom. Broadcom on the move. Okay, so Broadcom, same here. There's not a whole lot of volume. Broadcom. Broadcom's at new highs.
So we are a money mover, but we're really helping clients navigate geopolitical uncertainty. So it's everything from trade tariffs to,
Broadcom has an ATR of $7.75. $7.75. It's up $7.
The footprint in the US is very much like corporate investment bank because you sold the retail.
Yes, exactly, Wilfred. So we are focused on two main businesses, the corporate and institutional bank and wealth and private banking. So in all cases, we will be helping clients with their international needs. And that was very much done. Our new CEO, George Hedry, started in September, changes announced in October, and I started in my seat January 2nd. But the US is a significant contributor to group. We have, obviously, for the clients that we bank 90% of the Fortune 100. They are the movers in this economy. We will bank everything from an innovation economy startup with our innovation banking business that we bought through. We bought SVB 2 years ago for a pound, the UK, for a pound over a weekend. 1,200 innovation clients all across the
Okay,
globe.
Qualcomm. I'd like to see volume on Qualcomm. Qualcomm's turning.
So you said trade is your bread and butter.
Okay, volume's starting to pick up a little bit. Okay, Qualcomm. Volume's starting to pick up. Maybe it does something. Qualcomm.
So that will be challenging for some of our American companies. We will say, we've talked to probably 6,000 corporates over the past couple of months. 1,000 of them are in the United States, and they remain cautiously optimistic. They do see increase in trade, but they are thinking about how they can be, doing more innovation. They're thinking about how to manage
Qualcomm on the move.
more efficiently and tightly. They're thinking about where their new growth corridors are. For HSBC, we can help them with that. Is it, we're seeing a lot of volume between the US, UK, US, India was up 22% last year. US, Middle East as well, where we've been for 130 years. So we're helping them navigate to those new corridors. But if it does impact their costs, they have to make decisions. Three things. They're going to pass it on to their consumers. They're going to eat it in margin.
Palantir, Inside Day. Stocks are just sitting here.
Put aside the financial services clients and corporate clients. Are you seeing more currency hedging than in prior years or not?
We are. We're helping clients stay agile in all of those areas. So it's
Reddit with a nice pop. Testing Wednesday's high. Reddit had a nice pop this morning. Okay, that's just kind of hanging out. What is Circle doing? Circle looks like it's going to lose this level. Pretty decent down bar on Friday. Circle, a bit extended. No reference point other than that 300 level on Circle.
Absolutely not. We're bullish on trade. I mean, we're thinking that, trade and all of our 6,000 corporates that we're speaking to are bullish on trade. They just think
very slow day. Very slow day.
There might be different cost equations that they need to manage, but they're also managing some of this through innovation. And I want to say something like 93%.
There goes Microsoft.
In the US we talked to are optimistic overall.
It's really interesting that we're
talking. Here goes Microsoft.
Where trade tensions couldn't really be much higher.
Okay, now notice the difference in Microsoft. Look at the volume. We're right at resistance 499. Making a new high. Yeah, looks good. If you have a position, maybe you want to keep an eye on that one. Microsoft.
And those political tensions are higher than ever. So, are you able to keep doing what you're doing in that sense, or kind of a bit under the radar and not on Trump's focus?
Broadcom on the move. Qualcomm on the move. All right.
Engaging with this administration to make sure they understand what HSBC does in the United States for U.S. clients, for U.S. companies, families, and frankly,
higher high.
But then the other important piece
5-minute
is
chart.
we put the client at the center. We are not making those decisions for the clients. We're helping the clients access the markets.
Okay, Microsoft looking good. Qualcomm turning. Qualcomm turning up. Okay, buy order blocks. Volume is starting to pick up a little bit. Itsy bitsy. Itsy bitsy. Microsoft, though, looking good. Broadcom on the move. Broadcom's going. Broadcom with some nice volume there. Broadcom.
Wilfred was very excited to come back here and tell us that the FTSE is outperforming.
HSBC's been one of the best performers.
Yes.
global equity.
Okay, but for a slow day, we got a few stocks that are turning. Apple's seen a little short covering, but it looks like a bear flag. No turn there on Apple. It was a quick trade on Friday, and then it just kind of fell apart.
I think that, look, I appreciate what this administration is doing in terms of the pace of some of these trade and tariff talks. And once they're resolved, I think that'll provide a lot more clarity for our institutional investors. So I don't think U.S. exceptionalism is over, if that's the question you're asking.
Just quickly, still on the performance, there's been this is more of a UK centric question, but there's been high profile delistings in the UK coming to the US because the premium multiples tended to focus in tech. But why not for a bank as well? I mean, we just talked about the success of the US banks. Your stock's been good, but you compare the price to book multiples, then, I mean, should you not delist in the UK and move over here?
I wouldn't say that at all. We love being a Western headquartered bank. We love being headquartered in the UK with strength in the US. That wouldn't make sense for us. But I think it's really how do we leverage our geographical footprint, which is like
Qualcomm
I said,
on the
15
move.
countries and territories, to the betterment of our
Qualcomm on the move.
clients, and that's really what we're focused on.
I did buy some on Friday at 158. 69, I think it was 158.69. Let me just check real quick. Qualcomm. I bought some Friday pre-market, and that because I had a limit order. Let's see, view trades, Qualcomm. 158.29, 158.29, and 158.07. All right, so basically 158. Let's just say 158. So I'm in at 158. Qualcomm. Qualcomm started Friday pre-market and intraday average 158. What do we got there? Average would be where'd the numbers go? 30, 22, 158.22. Okay, Qualcomm, that's on the watch list too, right? Watch list, I have it on the watch list. Qualcomm was a stop at 155.50. Watch list. Qualcomm, the stock is on the watch list, and 155 is the stop, more or less. All right, so we're at 159. We're going. Okay, volume picking up on Qualcomm. Qualcomm. Okay, Qualcomm. Above the 200-day. Let me see let's see what the leaderboard has to say about Qualcomm. Qualcomm. Supermicro Qualcomm. No, that's the wrong one. Qualcomm. Hope everyone's having a good day. I'm your host, Cousin Vinny, coming to you from closingprint.com. Notice the volume on Qualcomm. Qualcomm volume coming in. Okay, I got the weekly, I got the daily. All right, it's at the 200-day. It's going to be part of the whole AI build out. AI build out Qualcomm. And on Friday pre-market, I posted some thoughts on Qualcomm. If you want to check that out. Okay, I'll post this here shortly. Qualcomm. Intraday, Qualcomm on the move intraday. Starting to go.
Welcome back to Money Movers. Our next guest said the so-called Liberation Day tariffs would be the death for U.S. markets and the economy. But in his latest article, he's now making the case that equities will continue to, quote, shrug off the doom cycle. So what's changed his mind? Joining us is the Rockefeller International Chairman and founder and CIO of Breakout Capital, Ruchir Sharma. Ruchir, great to see you. Long time no speak. The first question I have for you, based on reading this excellent op-ed, is you think there is a major disconnect between where U.S. equities are and the scale of commentary about the U.S. market kind of due a pullback?
Yeah, this is beginning to look a bit like
Commentary. Okay, there goes Qualcomm. Qualcomm on the move.
Significantly, most economists were expecting the U.S. economy to head into a recession. Instead, the U.S. economy ended up being quite resilient. And something similar, I think, is going on now, which is that the tariffs are much higher, even after the rollbacks. The tariffs are much higher than they were at the beginning of the year. And yet the U.S. economy has again proven to be quite resilient. And most economists are scratching their head about what's really going on out here. The easy explanation is the fact that this is bound to still roll over. The U.S. economy will still buckle under the tariffs. But I'm wondering if there's something else going on. Is it the crazy spending which is happening on AI, which is keeping the economy up? Is it, again, like 2023, that the fiscal stimulus is still rolling in and that's what's propping the economy up? So this is more like a thought experiment that I try to do in this piece, that what's going on? Why is the market and the economy and earnings holding up so well in the face of such negative news that we have seen, led by tariffs and then all the geopolitical tensions that we have seen?
One of the lines you come out with, which I love, is rather than never bet against the U.S. consumer, it's never bet against the U.S. retail investor in the way that they continue to step in and buy the dips, and obviously been right to do so for many years now. But you also point out a statistic that was striking to me, that half of U.S. household wealth is now in stocks. Surely that's a risk factor as opposed to a bullish factor.
Yeah, so far, I think this is a bit of cognitive dissonance going on, that so far we have to give it to the retail investor, because even in April, while the hedge funds were selling, the retail investors stepped in to buy. So they have been more than just dumb money, as they were referred to. But I totally agree with you that there are extremes in the market out there. And so therefore, I've been a big proponent of buying more international stocks. And that's the other story that I touch upon in the column that I speak. So there are risks to the U.S. market. I still think that the U.S. market is very overvalued, which does not bode well for future returns. But I think that, just have to be intellectually honest here. I'm just trying to sort of look at that. Why is the economy and the market holding up so well in the face of such negative news? As the old Wall Street saying goes, that if it's in the news, it's in the price. So if it's not already in the price of this negative news, what really will cause the U.S. market to kneel over?
I feel like one of the reasons it's been so strong this year is that when those liberation tariffs were announced, it was all doom and gloom. And the biggest worry was that it would spike inflation and the unemployment rate, because businesses would get so nervous and they'd have to start laying off workers, and then they'd have to raise prices. And neither of those things have happened.
Exactly. And so I think that the mystery is, why has that not happened so far? Because the U.S. government currently is earning nearly $300 billion on an annualized basis of revenue from the tariffs. Who's paying for these tariffs? Is it all the foreign suppliers that are being stuck with this shock? Or is it the fact that the U.S. corporations are still running down their...
Qualcomm on the move. All right, there goes Qualcomm. Nice job, Qualcomm. Up against supply right now, so look for a follow-through.
Mysteries, and something that we need to examine more about. How can this be such a free lunch for the U.S., which it has turned out to be so far?
Ruchir, great to see you as always. Thanks so much for joining us.
Meta shares. New reports
researchers from OpenAI. We're going to break down the AI talent war after the break.
Qualcomm looking good. Qualcomm. Okay, Qualcomm zipping higher. Thank you very much. So we started that on Friday. Qualcomm looking good. It's got some supply to get through, and these previous pivots. So we'll see how that works out for Qualcomm. Okay, so what time is it? What time is it? It is 11:55, coming into the noon hour. While the day is flying by, even though you would think it'd be boring. With the lack of volume and momentum, that's okay though. That's okay. Let's see what they're doing on Schwab. Slow days are fine too. It gives you time to do research and homework. That's what I'm doing, writing things down, making a note of what's going on today versus last week, which was huge. We had a huge week last week. That turn of events late in the day was awesome as well. Let's see. Trace should be updated by now. I think the data. Supposedly, data wasn't working right. All right. So watch this purple line. That's dealer hedging flow. That's real time. So if that's starting to move higher, we're looking for a test of this 6205 overhead. Okay. Let's see. Been keeping an eye on Supermicro. This is that's call gamma, negative call gamma ahead of us. We got to get through this big this gamma bar right here. 4.5 million in call gamma.
Pushes full steam ahead on its talent spending spree, according to new reports. Deirdre Bosa digging in for today's tech check. So they've been successful at acquiring people. They've been pretty successful despite Sam Altman's best efforts. And really, this is about the talent spend. It's really becoming a new signal to investors, a show of strength where the edge comes from the people who can build what's actually next. And it's kind of just like in the first few years of the race, no one wants to be the first to pull back because cutting costs. It now doesn't just risk losing talent, but
all right. Qualcomm looking really strong.
Coaching now 8, as far as we know, top researchers from OpenAI. Let's assume, based on reports, 8 packages at $100 million each. That's nearly $1 billion in comp, plus more than $14 billion for Scale AI's Alexander Wang. Undisclosed amounts for Nat Friedman and Daniel Gross, and reportedly a fresh wave of offers still outstanding. Add in enormous capex numbers, and we have far surpassed metaverse levels of spending. Meta told investors that it's expecting 2025 expenses to be in the range
Supermicro.
$70 billion.
Kind of a slow day, but a few things are moving, I guess. Supermicro looks like it might be a grind higher. The Bears have a problem. If it's going to be added to the Russell 1000 value index, that means there's going to be volume coming in. So that announcement coming just as we're breaking out of a base, well off of the highs, and pretty decent price. I mean, so if you're a fund manager over at Fidelity or T. Rowe Price or Vanguard, and you have to add Supermicro to your fund, you got to get rid of something else. I don't know what's dropping off, but it's being added. So you got to buy shares. I don't know how many shares you're going to buy, but there's quite a few funds out there they're going to be adding. So the fact that it's just now breaking out, if there's shorts in here, the shorts are going to have to cover first initially. That's probably what happened this morning. So Supermicro looking pretty good. Mondo's done a tremendous job of keeping us up to date. When he puts something in the room, he doesn't just put it in the room and walk away. He puts it in the room and keeps you updated on changes, on news, on earnings, on all sorts of things. So you got to commend Mondo for being a great member in the trading room. Appreciate it, Mondo. John. One of these days, I'm going to meet him. Okay, let's take a look at slow-mo. I always want to think about Rick, our late, great Rick. Slow-mo trade. Let's see. I have September calls. Wake me up when September ends. Slow-mo. Okay, so we want to stay above. We want to stay above the teal colored lines. We're pulling away now. Okay, so do I want to do anything with that? Next time it dips, I'll probably add to that slow-mo trade and then roll out because I have September. That's September 6/15s. I didn't think we'd get there that fast, but we did. In the money.
Unlisted stocks, I guess, is a tokenization aspect.
Stocks are record highs. Best news ever. Wilfred's here all week with me. Both in
That's the good news or the highs is
new. My differential. Difference today.
Wilfred in the house. Welcome to the halftime report. I'm Scott Wapner. Front and center this hour, the record high playbook. As the second half is about to get underway, we debate the road ahead with the investment committee. Since is higher. Morgan Stanley's Mike Wilson of bearish past says still bullish on a 6 to 12 month horizon, and even our resident bear has come around.
I prefer
he's
resident Grinch.
You are the Grinch.
Yeah.
Dracula, the Grinch, whatever the audience wants to call you today, they can call you. This is cable, so they can call you anything they want.
Anything they want.
You've fully kind of capitulated. I mean, you're fully invested.
Yep.
And whether you are comfortable with that or not,
yep,
you're playing this game as though the market's going to continue to go up.
Yep, and I've been fully invested for a while, but when I'm fully invested, you get kind of nervous, right? Particularly when you have the amount of beta that I have in the portfolio, given the tech names that I own, which comprise the majority of the portfolio, the vast majority. But, this is really just an interesting market, and I've talked about it before. I think we have a new cohort of investors, over the last, 15, 17 years are just used to V-shaped recoveries. And that's probably the right thing to do because that means you're always staying invested.
Yeah.
You're buying on the dips.
Let me ask you this question.
Yeah.
I'm going to ask you to be a little introspective. I know it's difficult
It's
for you
very,
to
very
do that.
difficult. Wait, let me call my humility.
What do you think that you and maybe some of the others who are more cautious underestimated about the market environment from where we were at the depths in February?
I think I underestimated their tolerance for chaos, lack of direction, and risk. I mean, you still have corporates frozen. We just heard the CEO of HSBC in the U.S. talk about not really a lot's going on. There's a lot of uncertainty among institutional investors, and that preys on CEOs who are loath to invest major capital into their growth because they don't know where you'd be able to grow. And supply chains, they're moving. They're not frozen, but they're moving not the way you want them to move.
If you invested, I don't mean you personally, but if the typical viewer invested based on what the average CEO or average hedge fund investor said over the last 6 months.
All right, so most of the New York, actually 10 of the New York FANGs turned up from the low. Apple's still having a difficulty getting there. 5 are looking good. There goes Palantir. Palantir on the move. Okay, we got a hammer or a hanging man on Palantir. So we want to pay attention to Palantir because we had this really nasty candle on Friday. It's almost like somebody wanted to get out. All right, so somebody sold, somebody's plural sold about 200 million shares of Palantir on Friday. I don't know what that was all about. We're back above the 21 day though, so this is something we need to keep an eye on the next couple of days. Let's see how this plays out because I still have a Palantir position. It's not off that much actually. So Qualcomm looking good.
2 months ago, we have 20 deals that are going to be announced this week. We haven't seen really anything. We've seen some sort of a deal with the UK. Our top trading partner, our friendliest ally out there, give us something, but not much. So I think as long as you avoid just a really strong case against trade, right now people are comfortable with the 10% baseline tariff increase.
So we hit these record highs. We're going to turn the page to the back 9 of the year. What are we set up to do?
I think at some point in the second half of the year, we'll have a correction. I think you buy that correction. I think we have a much healthier market in 2025 than we had in 23 and 24. At the midpoint of 23 and 24, what were we talking about? We were talking about 7 to 10 stocks that you can invest in and the struggles for the rest of the market. Now, when you look at the market, there is a much healthier, diverse opportunity set. It goes beyond just equities here in the United States. If you look overseas, you'll see opportunities in Europe. Germany's outperforming up 20%, UK up double digits. You've got Spain up double digits, Hang Seng up double digits. Even here in North America, Brazil, Mexico, Canada outperforming the US. And we've had these concerns about fixed income. Well, taxable fixed income is doing great so far this year.
Let me stop you for 1 minute because you're making comparison. You're pointing out how strong things are, how great things are in the market. I'm wondering if
Okay, Qualcomm still going. Qualcomm looking really good. So if you took Qualcomm, you only need one good trade a day. You only need one good trade a day. All right, here's Qualcomm.
The number of New York Stock Exchange net new highs this prior Friday only reached 70, plus more than 370 in November of 2024. 70% of Russell 3000 stocks were trading above their 200-day average when the S&P 500 first rallied above 6,000 in November of 24. That number narrowed to 59% into the market's divergent February peak and only reached.
What the hell happened there? Okay, I think they just lost Wapner. All right, let's go. Let's see what they're talking about. Rick Reeder's on Bloomberg. Let's see what he has to say. Rick Reeder.
The U.S. economy is not that interest rate sensitive. Technology oriented, service oriented. Most companies that fund CapEx today, the big hyperscales we're talking about, don't borrow. They do it through free cash flow. The interest rate tool is incredibly blunt, except for one thing. The housing market is incredibly sensitive to interest rate. We have a housing problem in the U.S. economy. There's not enough inventory. And I've said this before, Fed brings interest rates down. You actually reduce inflation because what happens today, home builders are subsidizing mortgages. That's why you subsidize KB Homes. You've seen it with some number of home builders. You can't sell houses until you subsidize that mortgage rate. So they don't build enough houses. Inventories stay too low. Inflation, shelter inflation, which was the stickier part, doesn't come down enough. My view being, if actually we got to get that mortgage rate down, and we have incentivized people to build houses. I don't think, I mean, by the way, you cut rates, you're not going to increase inflation, but anything, I think you reduce it. Listen, I think you got a bit of room that you could move the rate down. I think I'm in the 2 camp. I was still in the 2 camp when we were at 5 cuts 2 months ago, but I think they can do it, and I don't think it'll be debilitating, certainly to inflation.
You mentioned the Treasury Secretary. He did
Excuse
speak
me.
to this earlier today. Let's take a listen to what he told us.
Note the buy order blocks on.
That we could see.
Note the buy order blocks a few minutes ago.
I think inflation is very, very tame. I'm not going to comment on Fed policy, but I've said that I am focusing on the 10-year. So as we see inflation come down, I think the whole curve could parallel shift down.
As a Treasury Secretary who's focused on the 10-year, what influence, what sway does he have over it? How does he do that?
So there's a couple of things. One, I think you made a comment about not issuing as much. Why would you issue further out the curve? The Treasury Secretary can influence the size of auctions, how much you issue out the curve, wait until you actually get inflation down, then start extending the term. Listen, we got to extend the term of the debt out. I think the point you made, which I agree with, we don't have to do it today. Let the whole curve shift down. I still think the curve will steepen.
Okay, Broadcom on the move, Qualcomm on the move.
As long as you keep that issuance down.
All right, those look good.
Then start to extend the term out. The true tools to keep the back end down sit at the Federal Reserve. At some point, the Fed could do an Operation Twist. You can get the back end down, and I think there are tools like that that the Fed can employ. Pretty, and they've done it before.
I want to take a turn here, and I want to talk about public versus private, because you think about some of the hottest debates in the ETF world, and it's what are we doing with private credit? You made the comment last week, I believe it was at the Morningstar conference, that you see lines blurring between public and private debt, and I think a lot of people would agree with you, but I want to talk about where that blurring might happen. Do you think that the ETF wrapper is a suitable place to have that conversation?
I do. So, one thing, when I look at any asset today, I look at marginal contribution or risk, what it does to the portfolio, what it does to your beta, what it does to dispersion, what it does to liquidity. And when I think about a private, it's like, okay, now I've got to haircut liquidity somewhat. Well, that's changing. Privates are becoming more liquid. So today I look at it and say, okay, that's another asset. I've got to manage my liquidity, I've got to manage my beta, my dispersion, et cetera. I think what's going to happen going forward, when I look at doing
Apple's looking really good here. If for those of you trading Apple or have positions in Apple, it's starting to turn.
And B, if I can get an IRR that gets me an extra 300, 400 basis points, like that asset is beautiful in an ETF wrapper as well as in a. Now, I think when something's in an ETF wrapper, you think about, and I think about this and think in a bunch of
12, 11.
I've got to make sure you can do redeem and creates. I got to make sure your beta is consistent. So I do think you'll see more in an ETF wrapper. Listen, I think ETF wrapper in many ways is the future because the way people build models.
Apple's turning. Watch Apple if you like it. Microsoft looks good. Okay.
Interesting. Rick, we're just getting started. Sit tight for just a couple minutes. Coming up, we're not actually going to ask Rick about it, though it would be fun. We're going to talk about the race to launch Solana ETFs, heating up. That conversation up next. This is ETF IQ.
You don't know how tough an investment is until you push it. So at Federal Prudence, we put our actively managed fixed income products through a ruthless vetting process, because that's how we roll.
Robinhood looking good. Okay, cool. Thanks, Frano. Okay, what's going on here? What's going on? The Rick Reader was on.
When you rely on any
Okay, CNBC went off. I don't know if it was just my app on my phone that died. MicroStrategy on the move. Okay, cool.
Even if you're an active investor, a short-term trader, like if you're trading based off of valuations being high and you've been getting short this market, I mean, I'm surprised if you have any money left, because it's been an argument you could have made for 3 years at this point and it has not worked. So I think if you're a trader, you got to focus on something else. And sometimes that's following momentum. Sometimes that's technicals. Maybe that's just a feeling you have. I don't know. But valuations, fundamentals, those kind of conversations, what the Fed's going to do, that's investor conversation. And sometimes traders and investors are the same people, but sometimes.
Okay, Reddit off the highs of the day. It did test Wednesday's high. We haven't been able to push through it yet, but I assume that Reddit's going to just keep going. Reddit, like Supermicro, turning the corner, like Qualcomm, moving above the 200-day. When these stocks move through the 200-day, it's a big deal. All right, so 2 weeks ago we moved through the 200-day, and now we're starting to trend. Okay, so if you're an investor, someone like Frano that likes to invest and stick with a stock for weeks and months or even longer, this is what you're looking for. You got the right side of the pattern. Okay, you got the right side of the pattern building. So even if you maybe bought the high of the day today, you should be fine. Reddit, even if you bought last week when this dipped, you should be fine. Reddit's probably just going to keep going. Probably going to just keep going until it gets up here. Until it gets up here to the high. Okay. So it's building the right side of the cup. So you always want to be paying attention to, where am I? Okay, I'm on the right side of the cup. Then I want to be buying these dips to the 9 and 21 day. 9 and 21 day crossing up through the 200 day. Probably a month from now, we're going to get the 50 day, that green line to cross up through the 200 day, that dotted line, that dotted gold colored line. It's hard to see. It's behind the gray area. 200 days over here. You see it? There's a 200 day right there. Gradually moving through price. Now price is above. So we know that we're long-term, short-term, and intermediate-term bullish. Therefore, we want to buy dips. And we want to make sure we're using stops, 5%, 8%, whatever you use. But if you're buying the dips in a bullish trend, the odds are that you're going to make money. Every once in a while, you're going to get something like Palantir that does something unexpected. Okay, Palantir did something unexpected, but buyers did step up. They did step up today, pushed it right back above the 21 day. So that's a case that we need to keep on our radar. Qualcomm moving above the 200 day. Look what happened when ARM Holdings got through the 200 day. Okay, ARM Holdings pushing through the 200 day. Where is it? It's on the right side of the pattern, right? Very simple, very simple. If you can just do this, you know, it may seem kind of silly to you, but once you get on the right side of the pattern, okay, once you get on the right side of this pattern, you start looking for these pullbacks in the 9 and 21 day. If I pull up the 2050 day, 2050 day version of this, clean it up. Okay, so you can very clearly see the 2050 day cross. This is probably one of the better things to watch as well. What is the 20 and 50 day doing? Okay, did we just get across? Did we get across 2 months ago? Yes. It's getting a little tired. We're running up against resistance, so I wouldn't go too crazy with this one. Let's look at Qualcomm, for example. Qualcomm. Okay, when was the 2050 day cross? It's only 6 weeks ago, not 2.5 months ago. So this is a lot closer to a potential follow-through swing trade. We just had a pullback last week to start the week. Okay, on Monday, Tuesday, we gapped up. Okay, we're probably going to follow through Qualcomm. Let me read to you my notes on Qualcomm. Okay, Qualcomm, Snapdragon, Samsung Galaxy. The Snapdragon chip is in all of these new laptops. I went by Best Buy with my son yesterday. I had to buy him a new monitor. Working with Palantir. Okay, let me repeat that. Qualcomm is working with Palantir to extend AI and ontology. Ontology is a specific idea related to Palantir and their software stack. Extend the AI and ontology capabilities to edge, enhancing data-driven decision-making for customers and industrial Internet of Things, IoT. The fair value for Qualcomm is $234. Okay, it's a 36% discount to fair value right now. Okay, actually, it's probably about 34% undervalued because we've moved up a couple of percent. 56% upside. Okay, can you handle a 56% move? I can. So this is just some notes that I took recently. Let's take a look at Google, for example. Google, a lot of people don't like Google, but you have to think about Google from the perspective of it's trading at a discount to fair value of 39%, right? Fair value is $276. Now, I'm getting this data from other analysts that cover the stock. Fair value is $276. There's a 64% upside potential. Google has YouTube search, their ad revenue, Android and Pixel smartphones. They have Google web browser, Workspace, Gmail, Google Cloud, Google DeepMind. They're shipping all sorts of products. Gemini Live, Gemini Agents, Gemini App, Gemini 2.5 Pro, the chip. ELO score of 1448. That's pretty good. They're shipping the Ironwood 7th generation GPU chip for large-scale AI inference. They're a well-positioned leader in agentic AI, and to top it all, they have $90 billion in revenue, 12% year-over-year revenue growth, $90 billion in revenue. So Google, you might want to be considering Google. Amazon, let me just read to you what the notes that I took on Amazon. Agentic AI, Alexa, dominant leader in the cloud market, has 750,000 robots employed throughout their warehouses and logistics centers. It's trading at a 33% discount to fair value. It has 50% upside. Fair value $311 for Amazon. So it's moving, it's dipping right now. I look at dips as opportunities. I don't know about you, but I see Amazon pulling back. It's in the 20 days trending. So I'm looking for these dips to buy. I already have a position, so I'm not going to do anything, but I'm always looking for dips to buy. Oracle's new on the watch list. Oracle, they're talking about Oracle right now. Oracle took off, big gap up.
But the pickup in AI and those remaining performance obligations, those RPOs, continue to grind higher above $100 billion at this point. So the AI infrastructure build out benefiting Oracle here. But, you look at the stock, it's at all-time highs. Is there room to run? I don't know. Valuation's getting pretty high compared to historicals. Give me your thoughts here on Oracle.
Yeah, I would agree with you. I mean, obviously they are telling a story. They set the bar really, really high when it came to their guidance as well. And we have seen in the past that they
Stifel upgraded Oracle to buy. All right, so we had that that flag, that 2-week pattern or gapping up. There's no need to chase it. It's fading right now. So maybe this is an entry. 220. Oracle, they're going to be in the thick of AI database and everything else that they do now. I couldn't tell you what Oracle does in terms of new technology. I'm just familiar with Oracle back in the day when they were like database giants and they just kept growing with Larry Ellison at the helm. Is he still at the helm, Oracle?
Even the CEO, he's coming out with positive comments today.
Yeah, I think what Kevin was alluding to, and maybe we'll get him back and he can.
Okay, Oracle. What do I want to do with Oracle? I'm thinking about doing something.
Set the bar very high for themselves in the past when they've
Okay, when are their earnings, Oracle? I should be on the watch list, right? Should be on the watch list. Where's my watch list? There it
depending
is.
on what your time frame is, do you want to fight the seasonality of the market? Do you want to fight the trend of this
Oracle,
stock? Do you want to fight the
September 10th. September 10th. Stifel upgrading. It just dipped recently. Oracle. Maybe I'll buy some Oracle. Buy some Oracles. What I could do is a synthetic covered call. I can buy deep in the money calls, say 6 to 8 months out, and I could sell covered calls against my deep in the money call, a poor man's covered call, if you will. So if you want to sell covered calls on Oracle, that's going to put you out $22,000 per contract. All right, so 100 shares of this. If you want like 500 shares, you're talking, 100,000, little over $100,000, right? 110,000. So I don't want to put that much money up. So I would buy in the money calls, say out in January, February, something like that, and then sell covered calls overhead. Now you have to monitor this, obviously, because if you got assigned shares, if you have to give up shares, you got to produce those shares. So it's just a poor man's way of trading a covered call on Oracle, if that was something you were interested in. I'm going to potentially take a trade. Let me just check a couple of things here. Oracle. Let me just check Oracle real quick.
And it's above both of those levels, and the 1 week is above the 1 month. That all
Oracle is fairly inexpensive. Okay.
Statistics, whether it's stochastics, whether it's RSI,
Oracle, Qualcomm. Qualcomm implied volatility is only 36%. The fact that it's only 36%, this could keep going. Bollinger Bands explode would be nice.
At least sideways from here. It's right now around 214. Using that as potentially a first level of support, it's going to be a moving target. I looked at the
Relative volume. RVOL on Oracle is 1.4 at the moment.
For at least $1.25. That'd be a quarter of the width of the strikes, creating a 3-to-1 risk reward, Tom. You risk 375 with a chance to make 125. Your break even would be 213.
Okay, Brett's going to be on again today at 1. Okay.
But thinking, hey, if Oracle just kind of continues to move sideways or higher from here, that 1 week moving average will continue to inch up.
Oracle. Let me just look at Oracle. Oracle's cheap.
215 perhaps.
Oracle's cheap.
Using that as a potential first line of defense from the support. But most importantly, it's risk defined. So if it does take a pullback here, you know your risk going in.
Oracle.
Tend to experience max loss. That max loss.
36% on the IB. Oracle. Okay, let me just go here. Check that out. Oracle.
Does tell you that probabilities will be on your side, but not without risk. Yep. Trade-offs.
Okay. And Qualcomm. And Qualcomm. Both of these are fairly inexpensive. Yeah, they're fairly inexpensive implied vol. Here's Oracle. Here's Qualcomm. Here's Oracle. Risk reversal 30%. Okay. Qualcomm 48%. Okay. So that looks good. Qualcomm pulling back a little bit. Oracle. I want to do something with Oracle. Okay. Fading a little bit. Oracle.
Short put vertical is going to be out of the money at expiration.
Oracle.
Yeah, it's risk defined as well. So if it does go the opposite way, Tom, obviously you know exactly what you're going to lose. But you're right. I mean, at the end of the day, you hope that
January 26, Oracle. Let me see what I can get here.
taking in that credit. And I would say it's actually a pretty healthy credit. Given the
220, 230. Let's see. Let me buy a vertical. 220, 230.
Very cautious. They set a
That'd be
very high bar. If you look at 2026 or even 2027 comps now, it's actually negative on the revenue front, even with the AI.
Yeah, let's check. That's a good thing Kevin just said that, because that's the last thing I want to check is Oracle revenue growth. Okay, so earnings growth is only 1.8%. Revenue growth 11% for Oracle. So I'll probably pass on this for now. I'm glad Kevin mentioned that. However, Oracle most likely will see a lot of upside to their revenue growth and earnings growth as AI kicks in. Maybe, I don't know, a year or two from now, maybe these numbers will change quite a bit. Let's see what Qualcomm's numbers are. Qualcomm. Okay, Qualcomm. Look at the here we go. Double-digit earnings growth and revenue growth. SoFi. Let's take a look at SoFi. That's on the watch list too. SoFi. Okay, looking at revenue growth and earnings growth for SoFi. Now that student loans are being repaid, 200% earnings growth, revenue growth 19%. Okay, so SoFi, fairly inexpensive name, maybe gives you a little bit of alpha in your account. Okay, SoFi. Okay, SoFi giving you a discount right now. So off the high of the day, SoFi. Your buy order blocks right here, SoFi.
You know, the flip side of this is more conservative type strategy is if you were to buy the call vertical, you know, maybe the 220, 225, a $5 wide call vertical in that same option series, that'll cost you $220. And the difference is you need to move to the upside.
Well, here's something I'll do for you, Tom. I have Next Gen Investing coming up on our next programming. And we're going to be discussing Oracle during our FOMO segment, which is in the middle of the show. And I will have a different strategy for this stock. Maybe both of them could go together, but it's also bullish, but it looks a little bit different.
All right. Good setup there. You got to stick around the Schwab Network and watch that. All right. Thanks to Alex Coffey, senior equity contributor here on the network. All right. Going to take another quick break. When we come back, Kevin and I are going to be joined by Megan Brantley.
Okay, one of the things I don't talk about very often is, you know, the thought process that, you know, I'm always looking for trades, right? I'm always looking for trades, looking for things like Oracle or Qualcomm on the move today. I'm always looking for good trades, but I'm also thinking, and this is the point I want to make, I'm also thinking, what are the reasons I should not take a trade today, right? I'm looking at Qualcomm. It's doing what I wanted to do, but it did run into supply. Probably going to fade a little bit. So Qualcomm's probably going to, over the next several weeks, make us happy. There's no need to chase. So with the idea of I'm always looking at reasons why I don't want to buy. And if I was looking at Qualcomm at the minute, at this moment, I'd be saying, up here, I probably wouldn't want to be buying, right? I probably want to steer clear because we're at the high of the day. I'd be looking for something exactly like we're seeing, a B pivot, right? So right now, I'm looking for reasons not to buy. I see this pivot though, and I say, that's pretty interesting. We got an A pivot. You got a lot of people chasing up here. Now you got a B pivot. Okay. And that's what we're looking for. Whoops. I think I closed one of my windows here. File. New Finder window. Okay.
Charles Schwab offers a webcast that's right for you. Do you like using charts when analyzing your stocks?
A, B, C,
Our
D.
technical analysis webcast series breaks down different charting techniques like trend analysis, price patterns, moving averages, oscillators, and much more. Best of all, you can ask questions directly to an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
All right, so we got a B pivot on Qualcomm.
Welcome back to Fast Market here on the Schwab Network. It's time for our cash tags. For that, let's bring in our next guest. That's going to be Megan Brantley, VP of Research at Lightfolio. Welcome back to the show, Megan. Happy Monday to you. Happy Monday to Disney investors. Finally getting a little bit of a lift here at nearly 3-year highs. Is everything fixed for Disney? Because I keep on seeing like these social posts sometimes, Megan, where a guy, takes his family of 4, to the Disney park.
Yeah.
Cautious about shares of Tesla. That is optimistic as Elon Musk is regarding autonomous or Optimus robots. Most people in the auto industry.
Yeah, you're stuck, huh? You got your claws stuck in my chair. See? That's what happens.
You know what? It ain't a straight shot. As you mentioned, they are not with the first mover advantage and the competition. Look at the competition when it comes to autonomous vehicles in China. That's in China. I mean, we focus on
Okay.
what's here in the United States so much because
Qualcomm.
it's our backyard. If that's happening in China, how do you think it's going to play out in Europe? You think that Tesla is going to have first mover? It's not going to have first mover advantage. So it gets to your point in terms of.
I'm sorry. You know the competition. You know from your business acumen that competition kills margins. 5 years ago, the margins were extraordinary. They're not anymore. That's how competition works.
Right. And look, there are more than a few who have said that when it comes to the rideshare market, are people really going to sit there and say, oh yeah, I'm using Tesla instead of Uber or instead of Waymo? You know how this works. Once you get into a certain app, whether it's Waymo, whether it's Uber, whether it's Lyft, you generally continue using that. And that doesn't mean that Tesla can't take some of that share there, but there are more than a few who look at that market and they say, Tesla is not a slam dunk to get 35% of the market.
Yeah. Phil, thanks, man. We'll see it. Let's fill the boat.
You bet.
With that story, you have the stock. You're the only one here on the desk today. You have an ETF, which you're making a decision these days to, you rebalance what to do with it.
I'm going to share a remarkable statistic in a moment, but first let's talk fundamentally about this stock. There is clearly fundamental challenges when you look at EPS, when you look at revenue, when you look at free
Okay,
cash
B
flow.
pivot.
All of it is decelerating. JP
All right,
puts a
so
note out today.
futures just sitting here. So after you've done this for a while, you'll start to pick up on, is the momentum quick? Is it picking up? Is it slow? Is it dragging? That's what it feels like today. Up until now, it feels like the momentum is just not there, right? We got the JP Morgan collar rolling later today, most likely. So we were expecting more volatility. I'm surprised we don't have anything just yet.
That is up 46%. So that's where time frames kind of matter. And on a 12-month basis, right now, Tesla's outperforming all the other seven. I acknowledge fundamentally it has challenges. As you roll off the period between June into the fall, then those numbers are going to look significantly worse. So they probably have about 3 months to revive some of the growth and get the fundamental story going.
Okay, you'll let us know what you do in the rebalance. Silvana now has the headlines for us. Hi, Silvana.
Amendments on President Trump's tax bill. A senior White House official tells NBC News the president is set to meet with Senate Majority Leader John.
So when you look at the markets, ask yourself the question, is this really a good time? Look for all the reasons why you don't want to take something. That always leads to, well, I see a few things that are telling me I should. Think about a trade. You got the markets turning back up. And there goes a SPY. There goes a SPY. I'm looking for another dip to execute another slow-mo trade.
Jurors are now deliberating in Sean Diddy Combs' sex trafficking trial. The music mogul faces 5 federal charges, including racketeering, conspiracy that, if convicted, would give him life in prison.
Holy
Has pleaded not
Jesus.
guilty to the charges.
Wow, man. That's crazy. Life in prison? I guess what he did was pretty bad, huh? I haven't followed that, so I just know that it was kind of, I don't want to say on air, but Netflix, Qualcomm. I swapped out Qualcomm with Tesla. Couldn't tell you what Tesla's doing right now. Snowflake on the move. Snowflake has some potential, right? Snowflake has been moving lately. Snowflake. Buy order block right around 12:30. Okay, let me go to the 5 minute. 5 minute. Let's see what they're talking about. Oh, Bessett's on. Bessett's on. I like this guy. He's kind of growing on. He reminds me of my uncle. He's very precise with his words. He doesn't speak too fast. thinks about what he's saying. Plus, he's very knowledgeable financially. That reminds me of my uncle Scott Bessett. I'm sure my brother-in-law would say, my uncle would say, nah, that's not me. Yeah, it's you. Okay, Netflix looking pretty good. Netflix. Okay. Netflix. Okay, you got a buy order block down here at the low. What a nice dip there. I missed that one. Did anybody get Netflix a few minutes ago? Oh, man, that was a good buy order block. Anybody catch that? Yeah, good catch there, Scott. I did see what you said. I just was too busy yapping away on my soapbox. There goes Google. Google's turning. Google turning.
All right, we're back on the halftime report. Dom Chu has today's ETF edge for us. Hey, Dom. All right, so Scott, with the markets on track to close out the second quarter at record highs, one fund that's riding the wave also now holds the record just 6 months of the fastest to reach $1 billion in assets in more than 20 years. But its biggest holdings might not be what you expect. Why?
Snowflake. Okay, that looks okay. Netflix looking good.
Fundstrat Global Advisors, to take us inside the Granny Shots ETF. And for a lot of folks out there who don't know this, you were an advisor, the sub-advisor.
Google turning.
For this Granny Shots ETF. I would like you to take us through what exactly.
Okay, keep an eye on Google right here. Google turning. Okay, looking for buy order blocks. Yeah, baby. Google buy order blocks.
Glad to. The Granny Shot is named after Rick Barry and basketball's
Okay, let me go ahead. I'm going to buy some Google here. Google. I do have options, don't I? I have a position, I believe. Google. Maybe I'll just add to that. Okay, I do. Okay, cool. Google, I have August. Okay, August 180s. Okay. Let me add to that. Let me add to Google 180s.
AI security,
Okay. Trade.
monetary policy.
Google. God, all this stuff gets in the way.
And we said, find the most
All
important
these
stocks
pop-ups
in
and
each
things
silo.
on Thinkorswim delays the trade. Okay.
That's like trying to do
Google. Okay, Google. I'm looking to take a 40 Delta or 50 Delta. 50 Delta would be good. 50 Delta is probably pretty cheap. 50 Delta is 232. 234. I'll buy a few of those. 234s. They're 57 Delta.
Okay, now if you take us through the 30
What?
to 35 high conviction plays, you said the more boxes it checks off,
Oh, no, I want calls. I don't want puts. What the hell?
the highest conviction trades within the Granny Shot portfolio.
177.50. That was weird.
And it makes sense.
Mhm.
You know, they're both giant companies
Google.
tied to so many things. They're tied to millennials.
Okay, Google.
They really are tied to cybersecurity in their own way. And they're very
Thursday.
leveraged to things like
Thursday.
monetary policy and also the business cycle.
07.
All right, so the Granny Shots, high
03.
conviction.
Thursday.
Those two meta platforms. and Google parent company
177.50s.
Thank you very much. And by the way, we're going to continue the discussion. and
Filled
conversation
at
over etfedge.cnbc.com.
230.
Tom's gonna be joined by
235.
financial futurist Dave
Stop.
Nadig to talk all things, not just Granny Shots,
75
but all the second flows
cents.
as well, Scott. Tune in online. I'll send things back over to you. All right, Don, thanks so much. Tom, thank you as well. Your call of the day is next. Wall Street getting bullish on a big media name hitting a 52-week high. We do have ownership here. We'll debate it next.
Okay, Google. All right, note the buy order block. Note the buy order block. This one should go stop underneath. Okay, so there's your stop. Look how far away your overhead resistance is. This is what I look. This is a great example. Okay, buy order block. Okay, that's the first thing I look for. Buy order block. Okay, this is a repeating pattern. Okay, so you got A over here. You got A. Okay. All right, so I would consider this a B pivot, this whole thing a B pivot. Okay, B pivot, right there. And I want to put my stop down there at the low, okay? Underneath this, stop, S-T-O-P, stop. Stop in the name of love before you break my heart. Diana Ross. Is she still alive, Diana Ross? Back in the day when she used to hang out with Michael. Okay. Okay, looking good. There goes Google. All right, so we see this setup every day. Today was a little slow, but we've been waiting for these to turn, and they're all turning at the same time. So this is a good sign too. Okay. Google. Okay, looking good. Looking good. Looking good. Sing it, Janice. Okay, we got a B pivot on Qualcomm. That's probably going to go. B pivot on Qualcomm. That's probably going to go. Qualcomm. Okay, Google. Google.
Call the day's Disney, and it got upgraded today to buy from hold. The target 144 from 100 at Jeffries. Obviously blew by the 100. Four primary reasons, Jimmy. Okay. Limited risk of a park shutdown. More positive on cruise upside. Continued direct-to-consumer margin expansion, and we view the next 6 months of content and sports slate favorably.
That's a pretty good lineup, and I agree with it all. Let's start with, I'm going to lump the parks and the cruises together. That's the entertainment segment. For the last couple of years, as we've worried off and on about the economy slowing, go ahead.
I think I said park shutdown. I meant park slowdown. If I said shutdown, I meant slowdown. I read it wrong. I was thinking about it. Shutdown. Like, why would the park shut down?
You know what? There's been times in the last 2 years where it's felt like the stock price was indicating the parks were going to shut down. That wasn't the case. There's been concerns about pricing on the tickets, on food, and everything. But at the end of the day, consumers keep coming back to Disney's. Now, the cruise lines are really the strength in the experiences segment, but they're still building out the parks. They're going to build a new one in Dubai. They're expanding Florida. So it looks very good in terms of the juggernaut that is the entertainment sector.
I think where we're underestimating things is direct to consumer, Disney Plus. That has been outperforming. I think it will continue to outperform. Now, this is important, not just because it's replacing linear, which is in secular decline, but because with Disney at the share price that it's at right now, you actually have to be looking for earnings outperformance versus earnings estimates. And if you're going to get that, I really think the direct to consumer segment is where it's going to come from. They just closed Hulu, or rather they got the final negotiation on that. So that's one, other piece of the haircut. It seems
How
like
about
it's all
this?
together.
How about this? No competition first half of the year. Netflix versus Disney in stock performance. Similarly, how we looked at Tesla and Uber last
No,
week.
sorry.
Right? It's been no contest.
I squeezed the wrong window. Sorry about that.
Mean anything for the next
Shit.
6 months.
Squeezed the wrong window.
79% of analysts with buys. Netflix has 69% of analysts with buys. Next 6 months, Weiss. For the next 6 months, you have Netflix. Jim's got Disney.
Excuse me.
Which is primed to outperform given the run that Netflix has had and the one that Disney thinks it can still make.
It could be Disney because they have really beefed up their offering with Hulu, the acquisition of it. But it'll just be a moment in time. I still think that playing streaming, that Netflix being the pure play is going to do quite well. So I say with very, very little conviction that it could be Disney. I see no reason to replace Netflix with Disney.
Just one small thing here. If you look at the chart, there's a 3-year channel that it's right at the top of. It looks like it's going to break out when it does. Katie, bar the door.
When did you start talking tech?
I'm just listening. It's so obvious. It's right there.
The momentum is really strong in this name. Just took out the March of 24 high at 123.72. Next one you're talking about August of 22, 126.48. Gets above there, it could go 145.
The other thing is that even though it shouldn't, because it's the same dollar amount, that having a stock selling at $1,300 plus versus Disney at 123 again makes no sense. But that's where retail investors will likely go first.
All right, Santoli's next with his midday word. We're back right after this.
Qualcomm looking good. Okay, so let's see here, Qualcomm. All right, so entry right here, Qualcomm. Google. Entry right in this area. Stop just below. Okay, we're targeting this. That would be 5-1. Okay, 5-1. Whoops. That's 5-1. Okay. All right, looking for a follow through. Okay, let's see.
Across the country, but those haven't yet factored into Oracle numbers. And so the assumption today is this is that, but it's not for sure. They didn't name the customer. Right? Could this be work with the Saudis or TikTok? Maybe. The list of customers that could spend $30 billion a year on cloud infra is tiny. It might be just OpenAI. But this is probably the largest single cloud deal ever so far. You think about the DoD, the Pentagon was shopping around a massive deal that was $1 billion a year. Everybody was fighting over it. And so this is an unprecedented scale, unprecedented win for Oracle.
Yeah, absolutely. And the numbers that we're talking about here are pretty huge. What do analysts say
All right, looking for the follow through.
Means for Oracle's future CapEx and what the revenue path looks like?
Right. If you want to sell $30 billion in cloud infra, you have to spend quite a few billion in building up those data centers. We see Oracle building a giant data center out in Texas, which is costing, somewhere in the ballpark of $2 billion. So we expect the CapEx go up quite a bit and probably the margin go down a little bit. I mean, a lot of this is likely GPU training, which is a less profitable addition of cloud infrastructure because it requires all those expensive NVIDIA chips. And so this is a win, but it also complicates the financial picture a bit, that's for sure.
Yeah, and it's something we'll watch for.
So let's start the test for this market, which is what do you think about this market?
All right. I hope everyone's having a good evening. It's Monday the 30th, 12:53 p.m. on the East Coast, the best coast, the coast with the most. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. Watching Google presently. What's Supermicro doing? Supermicro ran into the $50 level. Many people got that right. That's where the major gamma is situated, 50 and 54. Okay, so call walls at 50 and 54. But then we need to get above. Oracle with the gap up got an upgrade from Stiefel. That's pulling back. Qualcomm looking for that B pivot. Looking for continuation.
I see some technical stuff saying it's time. We should probably cool off and pause before too long or until sentiment gets out of hand. We really haven't seen that, except somebody has explained to me why Robinhood is up 10% on this set of announcements the company's made.
Weiss, why don't you explain it?
All right, so we got a nice move here on Microsoft. We got a B pivot on Microsoft. Got a B pivot on NVIDIA. B pivot on Netflix. Buy order blocks on Netflix, by the way. That looked good. Netflix buy order blocks. Okay. Qualcomm, we just mentioned. Qualcomm with buy order blocks right there at around 11 o'clock. Got a B pivot, looking for this to follow through. It's above the 200-day, the red line over there on the right. Looking good. Google. Okay, Broadcom. Broadcom had a nice little pop. Okay. If you took this segment from this buy order block up to the high, you know, that was a pretty decent risk reward on that trade. Okay. So stop underneath with that move up to the highs. That was a nice move. 4-to-1 risk reward. Nice job there. Okay, on Broadcom. We'll come back and look at Broadcom in a few minutes. Let's see, Snowflake just sitting here. Okay, Google's turning the corner. We mentioned Google a few minutes ago. Okay, we got a 5-to-1 on Google if this goes. Let me pull this down just a hair. Okay. Okay, let me just bring this stop down a little bit more underneath this hammer over here. Okay, so stop right around this area. All right. Okay, and if we make it all the way up to that target overhead, that would be a tremendous feat. But if we do, that's 4-to-1. 4-to-1's not bad. Okay, the reason why I've put my target there is because that's where supply is. You can see that band overhead. That's automatically drawn in. So we're looking for a follow through. Okay, let's see if we can't get some more. We got fair value gaps below current price, so those could get filled and then follow through. Google, okay, looking for Apple to do something, show signs of life. Nothing on Apple presently.
Action by JD Power for 6 years.
Okay. Department of Justice approves deal with Juniper Networks.
Looking at Disney, so you see shares here up by around 1.5%. So shares are climbing after Jefferies upgraded the stock to a buy. The broker said that it's now seeing risk for a slowdown in the key parks division, also more positive upside to cruise division in 2026, and just continued more of an margin expansion overall. And the company really said that overall it's just seeing increased confidence in Disney's growth and expects an earnings breakout
for this year. Back to you, Scarlett. All right, music to investors' ears. Isabel Lee, thank you so much. I'm Scarlett Fu, and that does it for Bloomberg Markets. Balance of Power's up next.
Make your dog a Quattro dog.
Oh, geez, this stupid advertising. Stupid advertising. Only channel that's different is Yahoo. They have a lot of stupid commercials on that as well. Watching this watching this Google move, looking for a follow through. There goes Qualcomm. Qualcomm with the B pivot. Qualcomm with the B pivot. Okay, so if you took it here, you got supply just overhead. So we ran into that supply earlier. We produced that A pivot. Now we got a B pivot. We're above the 200-day over there on the right. So this 1 minute chart showing, 5 minute chart showing a B pivot presently. Need to see the volume pick up a little bit. Got supply just overhead. Apple's still not finding a bid. Apple, Snowflake, just kind of a choppy day.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast right for you. Are you a long-term investor? Our investing webcast series breaks down different investing styles, including growth, value, income, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or on demand. Head over to schwab.com/coaching and start learning today.
Analysis News, live every weekday, only on Bloomberg. Context changes everything. In case you missed it, on the pulse.
I think the idea of wait and see and pause is really yesterday's news. Our best advice to CEOs right now is that if you're not operating differently than you were a year ago, you may be falling behind. Yes, we need to build resilience, but we need to also build growth despite the environment. And that requires a different strategy than just a year ago.
Don't miss the pulse, live every weekday. Get your fixed income fix. Watch Bloomberg Real Yield every Friday at 12 p.m. Eastern, right here on Bloomberg. Context changes everything. Live from Washington, D.C., this is Balance of Power with Joe Matthew and Kaylee Lines.
It's time for the Votorama on President Trump's big, beautiful bill. Welcome to the Monday edition, the early edition of Balance of Power here on Bloomberg TV and radio with an hours-long amendment session now getting underway in the United States Senate, expected to lead to a full floor vote by the time this is all done. Alongside Kaylee Lines, I'm Joe Matthew in Washington. We thank you for joining us here on Balance of Power. It looks like we will see some action here in the hours ahead, Kaylee. The question is when this gets to a full floor vote. That could be in the wee hours.
Yeah, this could take a while as there are unlimited amendments that can be introduced and voted on. Of course, there's a few we're watching, like Rick Scott's amendment that would take down the federal cost sharing for Medicaid expansion under the Affordable Care Act. Susan Collins has one that would actually raise taxes on people making over $25 million in order to provide more funding to rural hospitals. Unclear whether or not any of these amendments actually have the votes to pass, but it's also not clear that without those amendments that this bill in its entirety has the ability to pass on the Senate floor, where only 3 votes can be lost for Republicans.
We know we have a couple of no's already in Tom Tillis and Rand Paul, but then of course, if that happens, if they do find a way to thread the needle past this in the Senate, Kaylee, there are big questions about what happens when it goes back to the House.
Yep.
Will they simply vote on this product or try to change it? Because that would make things pretty messy. Wall Street is watching all of this, of course. Doesn't seem to be concerned at all. Much like the administration, they see all this as noise just getting to the president's desk before the 4th of July.
Yeah, and the Treasury Secretary Scott Bessent maintained on Bloomberg TV and radio earlier today that this will happen by the 4th, but that is not a foregone conclusion. So we'll be tracking it for you this hour. But of course, as Joe mentions, the market's tracking this story as well. So let's get a check on those now. Charlie Pellet has a view from New York. Hey, Charlie.
Hi, thank you very much. And here's what's going on. You're watching the tax bill. I'm watching what's going on Wall Street with the Dow, the S&P, NASDAQ, all
all advancing, could see another record 3 hours from now as we wrap up the quarter. Right to the numbers. S&P up 17, up by 0.3%. Stocks ending the quarter at records, driven by progress in trade talks and hopes for Federal Reserve rate cuts. The Dow up 172, up 0.4. Nasdaq up 55, up 0.3. Again, keeping it all in context. S&P up by another 0.3%. Interestingly, though, on an up day when we are looking at a lot of green, red for the Bloomberg Mag 7 index, down now by 0.2%. The 10-year 4.24%, the 2-year 3.72%. Spot gold higher by $23 the ounce, up 0.7%. West Texas Intermediate crude down 42 cents a barrel, just about 65 right now. WTI down 0.6%, and Bitcoin up 0.2%, 107,654 on Bitcoin. Monday deals, we have got Home Depot buying specialty building products distributor GMS in a transaction valued at about $4.3 billion. Home Depot down 0.6%. Rival Lowe's trading lower by 1.4%, but GMS now surging by 11.8%. Balance of power continues. In fact, we go to Washington once again. Your hosts, Joe Matthew and Kaylee Lyons.
All right, Charlie Pellet, thank you so much. Financial markets active on this Monday, and it's an active Monday, of course, in Washington. It's going to be a very long Monday if you're a member of the United States Senate after the Vote-A-Rama kicked off this morning, after it took some arm wrestling to actually get the requisite votes to proceed to this step over the weekend in the Senate. But amendment votes are coming up. They're coming up quickly. Unclear which ones will pass, but of course they need to get through this process in order to get to a vote on final passage for the One Big Beautiful Bill Act, which as of right now, Joe, has about 8 Republican senators who are uncommitted to voting yes.
Yeah, that is not workable. If that's the case when this gets to the floor, which is also partly why we don't know exactly when that's going to happen. It could be this evening, it could bleed into tomorrow morning, depending on the status of this debate and the amendments that are coming. Tyler Kendall is watching all of this for us from Capitol Hill right now with the Vote-A-Rama underway.
Okay. Qualcomm pulling back a little bit. So we don't have a B pivot yet. Looks like this could be a B pivot a little bit lower. Google sliding a bit. Google. Okay, watching Google for a higher low. Looking for a C pivot on Google. Okay.
Closely, and it sort of serves multiple purposes. One, to put their colleagues on the record on some politically fraught issues. 2, for Democrats at least to slow down this timeline. And 3, to maybe make some changes at the end of the day to this reconciliation package in these final hours. Now we need this Vote-A-Rama to end in order for them.
She sounds like she's on Disney.
Final passage, and at the moment we're looking into this kicking into at least late evening or even potentially early tomorrow morning, because at the end of the day there's still 2 competing factions within the Republican Party when it comes to the Senate side that's prohibiting this.
Broadcom, Netflix trying to push. Watching Nvidia. Nvidia looking better, a lot better. Nvidia. How many shares do we have in NVDX? I might want to add NVDX. It is making a higher low. Nvidia. 300 shares. Okay, so I could pump that up a little bit. All right, so not a bad day. Not a bad day.
Only afford to lose one more vote before he has to call up the Vice President JD Vance and have him come to Capitol Hill to cast a tiebreaker.
Yeah, and of course, for Senator Tillis in particular, he doesn't really have much to lose politically now that he made the surprise announcement over the weekend that he is not going to be seeking re-election in 2026. But Tyler, to your point about spending cuts, walk us through the actual math on this Senate-produced package. Now, with the estimates we've gotten from the Congressional Budget Office, but knowing that the Senate did vote, one of the first things that happened today, voted to use the current policy baseline to get fancy with the accounting to make it seem like the number's not quite so high.
Right, exactly. And we should say that this is actually the first time that we've seen this done during a reconciliation process, with Republicans essentially saying that extending the 2017 tax cuts is going to cost nothing. We heard from Senate Budget Chair Lindsey Graham saying that the way an extension of a tax cut doesn't add to a budget deficit in the same way that a new tax cut would. And when we break down the math, it makes a pretty significant difference. The Congressional Budget
Listen to this lady talking.
iteration of the Senate plan would have $3.3 trillion to deficit
deficits over
Okay, watching Google for a follow through.
tax cuts paired with 1.2 trillion in projected spending cuts. But when you take into account this accounting mechanism, the CBO says that it would actually decrease budget deficits by $508 billion. So this could be seen as a way to get some of those Republicans who are pitching themselves as fiscal hawks on board. Although we do
Okay, Qualcomm pulling back a little bit. So looking for maybe a deeper B pivot. So a lot of these stocks pushed up. Futures just chopping around. Okay, let's go take a look at Trace. Trace. Okay. Okay, we're just kind of moving sideways. We're not going anywhere. Okay.
Thank you so much. And as we were just talking about the actual numbers here and the deficit impact, that's something that our colleague Sonali Bosick had the chance to catch up with Scott Bessent, the U.S. Treasury Secretary, about earlier today on Bloomberg. Asked him about the deficit and some other areas as well, like the chair of the Federal Reserve and those interest costs. Take a listen.
Okay, you can see that the dealer hedge flow is just moving sideways, If you recall, on Friday, we had this push to the highs. We had new all-time highs. And right around, 1 o'clock or so, there was news that the Canadian tariffs negotiation was off and the markets dropped. And then around 2:55 p.m., the markets reversed and moved higher. All the while, if we were watching the dealer hedge flow, we could see exactly what dealers were doing in real time. So that's always good to know what dealers are up to. All right, so NVIDIA, Google, these are all starting to turn up again. Okay, these are starting to turn up. All right, watch Google here.
Because the CBO model shows 1.8% growth, whether we have the biggest tax cut in history or we get this across the line and give companies and consumers great certainty.
You mentioned that the spending cuts were just
Watching Qualcomm. There goes Netflix. Netflix on the move. Okay, watch Netflix. Google's starting to go right now. Netflix is starting to go. There goes Netflix. There she blows.
We'll see. My sense is, and again, I take exception to cuts. We are actually bending the curve further.
Boom.
We are getting
There goes Netflix.
back to work, and the most needy will have greater benefits.
Well, the main question is
Excuse me for clearing my ear, my throat in your ear.
that are on the brink of losing access to
Okay.
Well, no, again, that's not right. 1.4 million are illegal aliens. Then a huge percent of that are the able by working people who will need to go back to work. So we're to have a work requirement, and we'll go from there. We're just going back to the levels pre-COVID.
So, given where the bill
This guy is so smart, Scott Bessent. You might not like him, but you can't deny that he is freaking smart. Anyway.
I think as we accelerate growth, an increased growth trajectory had completely
Supermicro.
changes the debt dynamics. So
What's Supermicro doing? Supermicro.
the debt to GDP, we're going to start bringing
Supermicro.
we are going to pull down the
Okay, looking good.
to GDP. And I think we will be turning both of those down over the next year.
Does it give you, though, enough confidence to start terming out the debt? At what point do you start issuing at longer dated maturities?
Well, why would we do it? Standard deviation above the long term.
Google. Okay, Supermicro did come back a little bit from the high. We're looking for a follow through. It's not going to get through this 50 level so easily, I don't think.
In 20, 21, 22.
So a lot of people in the market.
Google looking for this to follow through. Buy order block right here at 12.15.
Almost half a percentage point since the January highs. Where would you like to see the 10-year, and where do you think it could end by the end of the year?
Well, I think it's going to depend on a lot of things, but I think that we could see a further.
Just watching Google at the moment.
I think
Google.
inflation is very, very tame.
I'm not going to comment on Fed policy, but I've said that I am focusing on the 10-year. So as we see inflation come down, I think the whole curve could parallel shift down. And I'll point out when everyone says, "Oh, the market." The bond market's worried about this or that in the U.S. U.S. is the only major bond market that has lower 10-year rates than any other country. Every other country, the rates are up.
While we're talking about interest rates and the Federal Reserve, it has been recently reported that you might be in consideration for the job as the next Fed chair. When you've been asked about the likelihood recently, you said that it's up to the president. Is it a job that you would want?
I will do what the president wants, but I think I have the best job in D.C. We're making a lot of progress.
Yeah, I haven't checked with him yet, Corey. I'll check with him after hours to see how he did.
The tax bill on his desk by July 4th. We're going to be wrapping up the trade talks. So I think we've had great momentum, and we will be working on Chair Powell's successor over the coming weeks and months.
Scott Besson, the Treasury Secretary, talking with Bloomberg's Sonali Bosick in a wide-ranging conversation there that brings us to the most recent truth post from Donald Trump. Interesting with this idea of replacing the Fed chair. Donald Trump just posted a moment ago, Jerome Too Late Powell and his entire board, which I think is new level here, should be ashamed of themselves for allowing this to happen in the United States.
Okay.
One of the easiest yet most prestigious jobs.
All right. All right. So Brett, I'm going to listen to Brett for a few minutes. Let him take over the broadcast.
This is the print the trade. Let's go. Definitely got us banned on YouTube. Oh, I'll share with you the best workout jam. I'm wasting time basically to this roll prints. And do you know why it's my new favorite one? It's because it's not my new favorite one. It's one I forgot because I was listening to, or I was watching, I should say, Mission Impossible theme song with Limp Bizkit. That's a good one. You guys don't care about this. Why am I doing this? Especially when I'm like 10 minutes late. Anyways, maybe that'll be next week's. Is this it? Oh, this one. This one's good. All right. Anyways, thank you everyone for joining us here today, even though I have now wasted even more of your time. I'm going to turn off this video because I don't like you looking at me. It's being on YouTube because we're playing music that we haven't paid for the masses. Hello, Thomas. Come to my butterfly. All right, so what is happening today? We got the... I should turn this off. No, all right, I'm going to turn this off. It's too distracting. Let's focus. I saw on the Discords someone saying I closed my straddle because I was just bleeding out. And yeah, you're going to bleed out until the event. And we're going to assume that the event happens. Right around that time, we would likely see the roll take place via hero moving quite a bit, or in tape, you would expect to see some kind of significant, volume pickup. I would think there'd be a deep in the money call. There would certainly be an initial print for September expiration. My straddle currently is the SPX 6185. I started trading the straddle on Friday. In the note, I started talking about how cheap the straddle was, and so I've rolled a variety of times. Essentially what I was doing was I was paying, well, there's a variety of places. I basically buy the straddle and then I put it out there. I'd sell it for about $10 higher. And that worked several times. And it was great until today. Right now I'm bleeding because if you look at the S&P price, it is in a 12 handle range, which is just really, really boring. And so when I say 12 handle range, you can see that right here. Sorry, 13 handles. Sorry, 13. Thank you, Mark. We hardened up after being soft last week. It was between this song and the Pina Colada song. I almost played the Pina Colada song, but I didn't want to hear. You out anymore. Okay, so we're doing nothing right now, and so on Discords I see people. Well, it's not going to be a trend day. Well, I'm going to sell this straddle. Well, the event hasn't happened, right? It's possible that we see this big roll print and then the market doesn't do anything. I would doubt it. I would really doubt it. And yeah, cousin, we'll delete that. By the way, cousin Vinny, I don't know if you guys watched The Bear, but it's hilarious. There's a guy called Cousin, and so I was thinking of you because they just call this guy Cousin. I call everybody Cousin. Anyways, back to the point. Look at vols here, right? Vols, we closed at unbelievable volatility lows on Friday into the weekend, and there's the weekend effect. We're in front of the weekend, they squash vol, but this is what we highlighted in the Friday night founders note. You can see 789 right for Monday, Tuesday, Wednesday this week, and an 11 for Thursday. Well, those vols lifted after the weekend a little bit.
Google's starting to move.
I think you can just say, well, this is just because of the weekend effect rolling off. The big beautiful bill hasn't passed. I think there's still some trouble with that. I mean, I don't think it's that big of a deal because the market did not move on that at all, but maybe that's a little bit of vol. But this is a decent amount of increased vol, right? For just the weekend effect. And then if we go and check forward implied vol, it's still higher. So there's something to today suppressing vol. Is it shocking we're at this 6,200 level? Like, it's a little surprising we're just pinning that because you have this big strike here, right? It's still 99th percentile gamma strike, even though it's been getting reduced in size. So there is a ton of negative gamma sitting here. That's a 99th percentile strike. All is very quiet, and I don't think that's too terribly surprising. That we kind of just opened, we dropped 10 to 15 handles, and we've just pinned. And so, is that part of getting set up for this trade or something? I really don't know, but I'm not going to throw in the straddle towel until we see the roll print. And again, what we should see is some type of crazy zero DTE trading, and then you'll see that September print, and that September print will be, the signal that the roll has happened, right? And that September print will be the initial collar strike. So, and Robin's saying 150 to 2. I think kind of any time now. He's a little bit closer to 2 o'clock, and in hindsight, you put the straddle on right before, maybe. I'm a little surprised that the decay has been that heavy. My straddle's currently down. I've lost about 30% on that straddle so far. So, it stings a little bit. Zimmy's asking, is the assumption that the roll print will be bullish or bearish? Last time this was a deep in the money call. Well, last time it really moved relative to the call. The call was at the money. They jacked the market down 1%. They printed the new roll and then jacked the market back up through that at the money, right? Historically, if you look at the volatility when the call is deep in the money, if we look at today's note, what you see here, right? These are all the situations where the call is deep in the money. So 5% in the money, we're roughly at 4% in the money, so we're like, call it right here. And what is intraday vol? Intraday vol tends to be in this kind of like 50 to 75 bip roughly, right? So, this is not this where we're testing the put side of the equation and you would expect there to be a 2% rally and this is like a turning point for the market and all that. It is this kind of, move. Steve G's noting there was a big 54 premium paid on some deep in the money calls, 58.95s today. You would see that in the money call print. You would think with, we're looking at Hero here. You would expect to see, I mean, you got to figure there's several $1 billion worth of flow that is going to have to trade on this thing, right? You would assume that the dealer is long these calls, right, with some type of short hedges and some other offsetting hedges. So they have $20 billion of exposure on this thing. No. If I had to guess, what do I think would happen? Well, you would expect not a ton, right, because of this chart. The intraday range tends to be pretty tight, but if I paid 40 bips for a straddle and I could sell that straddle for 70, 60, 70 bips, right? So that's kind of what, that's sort of what my aim is. And so far we've had obviously a very tight intraday range. So I would think, that it's something of a non-event. But after this, what's going to happen, right? Because, okay, we have the straddle and it makes some noise, or excuse me, the roll and it makes some noise. But what happens after this, you know? Vol, right? Let's look at realized vol, for example. We'll just start this off here on the indices page. Realized vol, what are we at, a 10? 9? We're at a 9. So those of you who are long-term SpotGam subscribers know add 3 to that and you get the fair value for the VIX. So that's a 12. Well, the VIX is at 17. So what does that tell me? You look at the vol dashboard, right? Vols for this week. And yeah, you got PCE and non-farms and like, honestly, does anybody care anymore? I mean, really, what number do you have to see out of that at this point to be like shocking PCE hot, super hot? I don't think anybody cares at this point. So you would expect these vols are going to start to come in, right? And barring some catastrophic data points, you know, these numbers here, you would think would all be in the 11s or 12s. You know, I'm talking about these in the 12s. These are going to go sub 10, I would guess. So being short vol here makes sense, like a UVXY puts or SVXY calls or, you know, something like that makes sense once this roll, because I would expect the roll to cause some volatility, and that when you squash that vol, you'll start to see the market rally. Now, what is interesting here today is that we note the call wall did not roll higher. We haven't talked about call walls in forever, but there's statistical, there's a stats-backed study we've done. I should probably update that study. I'm behind on a lot of studies that show that when we break the call wall, we tend to sort of just pin, right? It's usually a sleepy environment. And so here's that 6,200. And so you want to see calls build over here in the original SpotGamma model, right? You need to see some orange bar get to be bigger than this one. And if that doesn't happen, then we kind of are likely to just sort of stick in this regime, right? But this also ties back into the idea then of why did we start saying this is a stock pickers market and we want to own like SMH, whatever other cheap calls are around. It's because this positive gamma vol crush dynamic is supportive for the S&P, but it's unlikely to be this, hey, we're going to rally at 1, 2, 3% a day now, right? Whereas in these single stocks and in the memes and in the garbage, that stuff can all roll a little bit more. So for those of you who aren't familiar with what that idea is, and it's good just to do a sanity check on this thing, you know, you look at this, right? And it's at 15. And this is, you know, this is just the easiest way for us to measure correlation. You know, is this likely to be the target? Feels like it, right? And the more this goes down, the more it becomes the stock pickers market, where you see, if you remember last year, right? Like when this was all, well,
Google, you can see that big gamma bar at 185.
So the market did nothing. And then everyone goes, well, there's only the top 5 names account for everything. The top 5 names seem to be all that matter for the country. If you talk about, you know, chips and AI and all that sort of stuff, you know, that's it. And then you go, well, that whole thing is saturated. And I don't remember what it was like in the 2000s. Like, you know, did your mom use the ChatGPT or did your mom use the internet? That's the bubble, right? Well, my mother uses ChatGPT. I'll say that a lot. But I have very close friends that have still never logged in. So that's my assessment. The AI isn't saturated. You guys come for the macro takes, come for hot macro takes. And so looking at the single stock stuff, then, you know, what is interesting here? These are all of the major ETFs. And if you've been with SpotGamma for a while, you know, in April, we were up here and then we moved to here, right? Into the cheap calls. And now we're sliding into the calls are getting a little bit rich, right? But what is more interesting to me is I don't think that we're at that turning point yet, or this is too high, because over this next week, vol's just going to come in. And each one of these data points this week, ISM and where that come in just a little bit, or they prove not to be an outlier, that's just going to squeeze this market higher. And they're trying to get rates to get cut, and Powell speaks tomorrow, and I don't know what he's talking about, but, you know, all these little things are these little event ball triggers in a market that largely has not cared. We fire bombs off, no one cares. We announce tariffs and tackle them, no one cares. None of it matters, right? So I don't know what it would take to stop this train right now, but the train is starting to move up and vol is going down, so that adds more support. And I look at like XLC, right, which is a lot of Google. I think maybe a little bit of Meta is in there too. That seems very cheap to me. SMH, those calls seem to be very cheap to me. This stuff I would probably say, well, you know, I might stay away from that. URA is another interesting one that's kind of seems to be busting out a little bit. And so I prefer to own this stuff, right? Whereas if you look at, you know, spiders or Qs, you know, Qs are right there. Those calls are getting maybe a little bit richer. So wouldn't you rather own SMH than QQQ if those calls are cheaper? Yeah. Qs go up, SMH is going up, right? If SMH is going up, Qs are going up. But SMH, I think, should outpace the Qs. And on that point, we posted this chart of NDXQ, and you can see how the market is positioned, right? I know we focus a lot on the S&P here, but look at vol skew and NDX. You know, these 10 delta calls, they're all lifting. And this is, you know, these are 1 month out, but these are starting to statistically lift, right? And these puts are getting smoked. So the skew is twisting. People are getting quite bullish. And I think what's interesting here is that there's a lot of people going, you know, how can this be? How can this keep going? And I don't have a real, you know, like sometimes you go, this is a top and this is ridiculous, but this doesn't feel overbought to me at the moment. It feels like people are just starting to get piled in. And that vol can still get crushed, and there's still that room for that, you know, skew to kind of lift up. Michelle's asking about studies. If you look in here under call wall, we should include some of those studies. And to me, everything feels like I did the study like 6 months or a year ago, and it might be 2 years old now. So we should probably update that stuff. And another reason is we should probably update stuff that these stats with the new spot gamma data, right? So back to the single stock stuff before I move on, because I see there's a bunch of single stock questions in here. So what names are most interesting? Like XLC, we pointed out, right? XLC is very cheap implied vol, but Google implied vol starting, it's still only average, but it's starting to lift, right? But Avgo seems super cheap. NVIDIA seems super low. Palantir, you know, it might be changing today, right? Because of that. But, you know, these things down here seem to be more interesting. Now, the one thing that I would say is that when we look at the individual positions here, right? So if we go in and we look at NVIDIA, you know how NVIDIA vol is so low, right? Well, look at the positive gamma in NVIDIA. I mean, this is not like, you know, the most positive gamma I've ever seen, but that suggests that that low vol environment may stick a little. But if we look at Tesla, which its implied vol is not necessarily cheap, you can see that there's negative gamma above. And if you look at Avgo, which we just showed you has cheap implied vol, what do you see? You see positive gamma above. So there seems to be this correlation, and something, again, that I think I need to study is like, I want to find those names that have negative gamma to the upside because they may run. Now, should Avgo still outperform S&P? Well, yeah, because, you know, this is not like $10 billion worth of positive gamma, but it infers the rate of change being a little bit different. Of course, so to say that this is up 1.9%, and then you see the NASDAQ and the S&P is obviously quite a bit lower. So this is the stock pickers market, and I don't think you have to like do your fundamental research to find out which names to own. It's just like, just own the top names, and that's it. So that's why I like, hey, SMH, great, I get it. SMCI is another one that we recently talked about. It's getting over that 50 level. In here, right, mild positive gamma, and then, you know, some positions maybe above there. AMD was maybe overbought, you know, recently is getting quite rich, and it has a very similar shape now to SMH in that it has this bump, but that bump is still in a negative gamma territory, and you see here is this big 150 call, right? So this SMH basket just makes it very easy. It's the top sector, and so, you know, it kind of makes a lot of sense. So you know, that is the case. And for those of you who are just kind of joining, I know it's late, we're waiting for the JP Morgan to print. A lot of people are saying, is the print going to occur with the market up or market down? I wouldn't think it would resolve or we would see the market move down on the initial print. And the reason I think that is because the call's deep in the money, and you would think that there'd be some negative delta hedging with the position, right? So what they will likely do is print an in the money call. They have some futures that are hedging. All this sort of stuff just matches up oftentimes into the close, and that's how we're done, right? The last time we were around the call, they used a ton of 0 DTE put options, right? Like just rapid fired 0 DTEs. Market went down, they put the new print up, and then the market just ripped back up. So they changed the way that they move this around. They changed the way they hedge it. And so it's a little bit, quite frankly, tough. And if the market drops on any kind of a JP Morgan roll, I'm going to be buying it hard. If the market rallies into the roll, I may not be doing much there, but only because I think the market's going to kind of continue to like push higher. And so I'm less confident in a fade than I am in a buy the dip kind of scenario. But I'm hoping that we print well on this call and then we kind of watch that together. And get that together. They come from a smart family. That's funny. They say that ChatGPT makes you dumber, so I don't know. Maybe that is. Robin wants to know why I was late. Well, Robin, I have computer problems. To prove that, this is my best camera. Okay, that's it. Kabir, what's up? When using tape settings, Kabir's asking if there's an optimal tape setting, and I'll tell you, Kabir, there is not. And what I can tell you is the man to look to is Luke Piper. He runs our little, he does it just because he loves it. There's an Unusual Flows Discord channel. What I like to use it for, I have it set to SPX, and I'm just watching and waiting for the roll to see if it pops up or information that it rolls in the pop up. But I'll do a lot of stuff, you know, like what is interesting volume over here, like Hood, huge volume today. So SoFi, these two have massive volume. You know, click and see what is the big flow that's trading, right? So if you click the contract data tab, you get the sum of everything. These are this week's options. I guess they had an event today, right? But you look at these, like the 100 calls for the 18th, you know, these are a little bit longer dated. So, you know, to me, that's interesting. It's call dominated. The stock has just been going bananas, right? So that flags to me, okay, that is a lot of volume. Stock is up 10% today. That's crazy. What are these vols doing, right? This might be an interesting call counter spread opportunity here. So, so see how flat this is? There's no call skew. Super interesting. You would think that this would have more of a lift, right? And it's not. I don't know if they have events and stuff like that coming up, but the counter spread may be interesting. So you could buy like, or excuse me, sell maybe like a out of the money call. I don't know what they're going for. It's also a short week, so that skews it. But taking advantage of this rally to try to buy like a longer dated call might be kind of interesting there. And then SoFi was the other one, right? Yes, this has a little bit more call skew to it, right? So like a 1x2 might be more interesting here because there's a slight call skew. Might be a more interesting way to try to mine some of that skew. But what I would think would happen in Robinhood is we get the early lift, the ball gets kind of crazy, and that's Tuesday, Wednesday, Thursday goes that ball comes down, and we kind of just start to rally a little bit back. I just want to look at the position here. By the way, man, the Circle trade, I don't know if you guys remember we were talking about Circle, and I had on the 1x2, I had on the risk reversal, and I closed it for $10 and I was like, I am amazing. This is totally unrelated to Hood. And then, you know, you open up this morning and for some reason it's almost worse seeing something like this where I would have, instead of making $10, made like 40. And it almost hurts more than when you take an actual loss. Anyways, yeah, so there's not, I mean, this is going to change obviously a lot today, but you can see this positive gamma over 100. I don't, you know, I think that this is a fadeable, like a call fly to the downside or like a 90 strike put fly, or maybe even the straddle. I don't know what that's going for, you know, something like that. Just
SPY continues to pull back a bit. Just listening to Brett over at Spot Gamma.
Looks like they're already out. The event is already out today. So, you know, thinking that this thing cools off in the short term makes sense to me, you know, based on this light call positioning above. See that kind of happening. And I know there's a couple of Google questions out there too. Google just looks so good. And there's a, you know, over this 175, which this thing seems to keep kind of bouncing off of, it's negative gamma above. And even though this curve is positive, right, it looks positive, it's tied to this left axis. So it is negative $5 million. So this of the mags, to me, this and Tesla look the best in terms of that positive gamma setup. Whether or not they're the cheapest options, I don't know, but sometimes if the options aren't cheap, you just always kind of buy the stock. Anyways, I got way off of Kabir's question. I rarely will mess with the flags and stuff like that, but if you check with Luke in the Unusual Flows Discord channel, he is the man. And so, you know, I personally don't check a lot of those individual filters. I'll use tape exclusively for forensic. I see something weird in Hero, I want to see what's trading, right? Is it long dated options? Is it short dated options? If it's short dated options, I'm more comfortable fading something. If it's long dated options, and I think their options are getting bought, then I go, okay, there's a tailwind for the stock. That's a several day tailwind, right? I can lean on that, for example. And then as far as 0 DTE goes, best thoughts on approach here. We talk about this a lot, and you know, today's a weird day because there's one trade, and this trade continues to get reduced. It's the 6205, but there's no big strikes on the board, right? 99th percentile strikes are the ones we care about, or a cluster, you know, like 5 or 6, like 98th percentile strikes. There's just nothing out there right now, right? It's light positive gamma here, and then there's this big trade here, and it has been getting slightly close, so it's still there. It was 10,000, now it's 8,000, right? So, you know, this thing is set up for a print and a good move. That's sort of how I feel about it right now, even though we've not moved 12 handles. I still feel right with the strategy.
Looking for BNC pivots, looking for a C pivot after coming into 2 o'clock p.m. I'm listening to Brent Kuchabar over at spotgamma.com. It is 1:38 on the East Coast, Monday the 30th.
A bunch of code pop up there. I apologize for that. Dr. Cosmo, what's up, man? Can I go over the thought process on Fridays? I wound down on Trace the last 90 minutes or so of trading. How do I navigate the impact of the large surprise news event? Yeah, this is exactly why I started. So in Friday's note, I just want to replay this, and it's not for hindsight. It's just like when stuff works, it's like let's talk about it. So this is Friday morning's note here, and we talked about how cheap the implied vol was, right? At the money zone 9.
This is Google.
And so when I look at it, I go, hey, at the money vol for Monday's 9, I know the rolls trading, there's the weekend, there's all this sort of stuff going on. And so you think to yourself, well, if I get anything happening, right? Anything at all happening, then we can monetize that 9 vol. I don't want to short 9 vol. I know that. Maybe the answer is you just don't do anything. That's always an option. You don't want to short it because it's 9. And for those of you, you know, who don't understand what this means, implied volatility is a lower bound of 0. If you look historically at what the cheapest implied vols get in the S&P 500, maybe a 6 or a 7, like once or twice in the last 5 years, 10 years. I mean, you're talking about rarefied air. Now it can stay low, right, for a decent amount of time, but you're unlikely to pay 9 and then be like, oh, it's a 6. Whereas if you buy a vol at like 30, you can easily go to 20 and you get crushed. So you would see the roll in Hero, Tame, and we'd see it in tape. I'm watching here on the screen, so if something happens, I'll be there. So we bought the straddle because of that. Now, what I did with the straddle,
S&P continues to fade.
$5 or $40 for it in the morning, and I would just set it back out there at 40, 45, you know, about a $10 gain.
Most of the New York bangs have faded for the most part. Google's trying to hang in there along with Netflix and Nvidia.
Not that crazy. I think it's relatively crazy, but he's you know, Canada sucks or whatever he says. Then what do we get, right? We get this vol. And so those straddles are all of a sudden printing. And the way that what I was doing was I would close my straddle and my straddle would fire off. I would then put on a new at the money straddle for Monday, today's expiration. So that's how I was trading with this thing. And when we got the pull down, right, I was comfortable continuing to roll those straddles. Why? Because what happens in this environment, we just jacked vol up, right? Vol just got all jacked up. The VIX didn't go to 30 or anything like that, but on a relative basis, vol got all jacked up ahead of the weekend. So if they're going to crush vol, what does that do? That's going to move the market again. So these all gave me rolling opportunities. I think I traded Star like 3 times just because it kept firing off. There were great trades in that environment. You know, so today here, I'm sitting here with that straddle and, market's back to my at the money, which is the worst spot for me to be in. I need a good 25 bucks is what I paid for that straddle right now. So, I need a 30-point move in the S&P right now between now and the end of the day, which if you didn't know about the JP Morgan roll, you'd probably say that's not going to happen today, Brent. I think it still can happen. We will see. The roll, to my knowledge, it's not hit yet. So maybe we just keep going until the roll hits. And I would think in the next 20 minutes it happens. But this is the idea, Dr. Cosmos, that
Whoa, what
being
are you
in
doing?
those straddles, right? That was a great thing. I had no idea it was going to happen, but that was a small event, right? And you could also make an argument that maybe it was so sharp of a reaction because vol was priced for nothing and we got a tweet. So then you get a little bit of extra stuff, right? Now, why do you buy this dip, right? Why do you buy this dip? I'm going to show you why you should be more comfortable buying that dip. It's simply because of where was the big gamma bar, right? Right there. And this we put in Friday night's note. It's a 99th percentile strike, so I'm not, hindsighting this thing in terms of like, whoa, this is significant. We always talk about the 99th percentile strike, and we go down there. There's actually a cluster of little positive strikes. We hit it. We got the vol sellers love to come in. It's right ahead in front of the weekend, and kind of like up we go, right? So these 99th percentile strikes, nothing is ever 100% of the time. But if you're kind of like, then lean on us. Now, if someone nukes somebody else, don't look at the 99th percentile strike, right? If it's just a stupid tweet, we fade the tweets, right? We taco the tweets. I like that. Trademark the taco the tweets. Glad we're on video so you can't see the stupid smile I just made. So, Dr. Cosmo, I hope that helps, makes sense. And this is the other thing I would say is that this hour, right? 3 o'clock, you're probably not gonna be able to sell that put spread for very much at all. The risk reward, that's pretty crappy. But if you're right and the market bounces, that vol got pretty elevated, right? So there should be a pretty good response. This is a great spot for call spreads or call flies, right? To unveil those or launch those types of strategies because, like a call spread, you may pay $1 for a $10 wide call spread, and that's a great return. Whereas, the put spread, you're gonna sell it for 25 cents and lose $10, right? So, that makes to me a lot of sense.
Super micro faded off the high, 50.
Sources. Look up John Carter.
It's $1 off the dollar off the high.
In a lot of depth. The dude, I've never seen you around these parts. The dude, it's nice to have you. Chuck, 2 o'clock. Can I go to Friday's bounce and the gamma bar? I'll just cover that. Sweet. Is there a way to identify the impact of the roll? Yeah, this is the $1 million question, I suppose, for today right now. You're gonna see hero move, right? That seems to be the big signal that something's going on. When we talk about move, we've done minus 1.5 billion, but we're gonna see something sharp, something fast. And also if you just go to tape, right? And if you filter for just September expiration, then you'll see when the trade itself goes up. I suspect you'll see 0DT volumes first before you see the actual September 30th print go up. It's Robinhood. No one cares about Robinhood. SEP options at the moment, just SPX. So nothing yet, right? And you're talking about 40,000 contracts of volume. So nothing yet. How do I know? Izzy, welcome, by the way. You just hover over the strike. If you hover over it, the third line down in that legend, 99th percentile in strike. What do we got for Apple? I've gotten a very negative view of Apple from my iPhone user experience. The bones, which has nothing to do with the options flow, so please ignore that statement. But this has positive gain to the upside. Apple, Microsoft, JP Morgan, all this stuff that are like cool holdings of retirees and things like that, they sell calls against them. I mean, they just stuffed this thing. And so this is exactly not the look you want to have if you're looking for a nice big move, right? All this positive gamma, this line is just going up. This line says that the more the stock goes up, the more positive gamma the dealers have. It's just not terribly exciting. It's not an unbelievable amount of gamma, don't get me wrong. But again, it's just not like this thing that's like poised to move. Do you know what I'm saying? And I suspect most of you are in this room, you're looking for, you know, the shorter term swing trades, the stuff that has a little more action to it. If you're going to retire and want to sell calls with everybody else against it, should be okay, I guess. IBIT calls. So iPads, ask about IBIT. The same way that I feel about Apple being maybe like, I mean, I don't think this is a crazy statement, right? Because now I'm getting away from the options market. But, you know, if you were going to say, hey, this looks good, and then, you know, you go like, well, what does that look like versus this? Like, oh. And it makes sense, right? What is the number one stuff? AI, chips, that stuff. What is Apple doing? Making movies. Trash. So you see that in this pricing, right? And I was thinking about this actually. I was like, why don't you just sell like a bajillion 6 months Apple calls and take that money and buy Qs or SMHs? I mean, the vols aren't the same. Apple vols quite a bit lower, but you could find some other name that has.
Markets are just sleepy, waiting for that JP Morgan caller roll.
Back to the man's question. I assumed iPad is a man. Seems like a man would name himself when I said that as a man. Maybe it's one. These calls seem super cheap on a relative basis, right? And I cannot help but feel like we're gonna wake up one day, and maybe this is fear, and Bitcoin's just gonna be up like 25%. What do I know about this stuff? Please don't take that as advice. And is the IBIT option complex big enough to move Bitcoin itself? I don't think so. You know, it's like I don't think GLD calls move or TLT options move the treasury market. But you can see how people are positioned, right? Everybody's on calls. I'm part of this nonsense, doing a bunch of calls. And you know, you look at this chart and you're like, man, feels like it's gonna happen, right? And those calls are so cheap. So I'm like, great, I can scratch this itch just by owning calls. And the calls are cheap. Doesn't mean I'm guaranteed to make money, but they are cheap on a statistical basis. So I feel comfortable justifying my yeah, so you know, someone asked about AMD, but this is the same thing, right? This strike is $24 million. I'm looking at deltas, I'm sorry. This strike here, right? $10 million of positive gamma, 65 at the 65 strike, -8, right? $8 million of gamma. And what the delta is showing us is as the stock goes up, the dealers are short, right? So they need to buy. There's buying into higher prices is what the delta is telling us. And this is a negative gamma environment in IBIT. So when you hover over this, you're getting the bar, right, which is obviously the bar and the right axis, and then the gamma line itself is the left axis. And then here, I know Izzy asked a question about this in Discord, but the more to the right we are, the higher the options impact is to the underlying volume. So again, in IBIT, we're looking at the ETF stock volume, right? Not the IBIT or not the Bitcoin writ large. If you look at NVIDIA, we're looking at NVIDIA stock volume for that.
NVIDIA turning up.
SG gamma index showed a positive gamma.
Watch NVIDIA.
It's just negative gamma. Yes.
NVIDIA starting to move.
Historical chart, right? The historical gamma, table shows the naive model that has navigated and still does a great job of helping us set the scene. If that gamma index is positive, it's just telling us there's more calls around at the money than puts. And generally speaking, that is associated with bullish markets. So the more calls we have, the higher that gamma index goes, the lower the implied move is going to be. And this implied move can get down into like the 40s, 40 bips, you know, gamma index can get up towards the 4s at the really extreme ends. So that is why this model registers as positive gamma. Now, correctly, if you go to the new models, you see a different positioning. Why? It's because the new model knows where dealers are short and long puts and calls, so it's not this naive assumptions that we used to make. And so now you can see the around the at the money, which is roughly here, we have a negative gamma market, right? So on the sort of point. And so the two models are different and they are telling us slightly different things. Now, the funny thing is you will often see negative gamma above like we do now. And then what happens when the market starts to move up? People come and they start selling calls. So it's like there's that kind of like similar behavior. And I still like the naive model in terms of just the simple block and tackling of, is there more calls than puts? Yep. Okay. Bullish. More puts than calls? Bearish. And that's just kind of how, how that cadence goes. And that's why you still see those original models in the system. We have got rid of them yet because I still like knowing where the call is. It still seems to help us to navigate things. And until that seems like it's not true anymore.
Watching NVIDIA.
Great question there, Swami. It's just they're two different models. Sean T, what is happening? March around the time we're all scratching our heads while the ball's so cheap, and NVIDIA had massive amount of call flows and it had a huge drawdown. I think what is happening in NVIDIA is it's starting to become the new, well, there's two things, right? Number one is there's this dispersion trade that is NVIDIA and Tesla options in particular, short dated flows versus the index. And, so that to me is a ton of the flow in NVIDIA, and I think may impact the way that this thing trades. Second one is I suspect as NVIDIA kind of has now stabilized and entrenched itself in the top 5 of S&P and NASDAQ holdings, that it could start to become this sleepy time stock. Like AI is still the future and the chips and but I think that more call sellers start to show up in this thing because it's like everyone has this as a core holding. And so like, how do I increase the yield? And then I sell calls. And that starts to slow the thing down. You see this positive gamma constantly in this name now. And you see it really in Microsoft and in Apple where the balls just kind of like come in. And is NVIDIA destined for that? Like, okay, it's not this like spry company that's like constantly innovating the next thing. It's just sort of like, we know what they're doing. They keep rolling the chips out. It's a great company. I'm not going to short it. I own it. I'm never going to sell it. Like I'm just going to, but I want to bring the yield up, right? And it almost feels a little bit like that's kind of what's happening in some ways, right? So, that's what's interesting about it. We're like, hey, are those the calls that I own because they're cheap? Are they cheap because the dealer positioning is all positive gamma? It's kind of like, it's going to go up faster in the market. I think so, right? But SMH calls just seem cheaper, and then I still get that broad market exposure because what if SMCI is the one that makes the next leap, or some robotic AI call, whatever it is, right? And so it's kind of why I'm leaning a little more towards the SMH calls now versus just kind of like NVIDIA. But that chart hard to think that looks bearish in some weird way. Do we have something? Getting jumpy over there on S&P prices. I'm thinking that this is it.
Yeah, SEP calls are coming through. You can see the roll is starting to happen.
Let's see. Not see them yet. A couple weird candles printed there though, didn't they? Okay, so here's a big swath of calls. They just printed at those are at 307. 107, excuse me. So that's not them. Anything in the last few minutes. I would expect it to be around a 63.50, something like that. But those are very strange candles there in the
Nothing yet.
what am I looking at?
Low tick alert -800.
Low tick.
Yeah, so the market's moving a lot now, right? As you can see here.
Extreme low tick alert.
There we go. All right, something's happening.
Okay, extreme low tick. All right, watching the markets here. S&P, looking for that roll.
Extreme low ticks according to Cousin. See that here. We must be printing now. Yeah, so you can see, it looks like the deltas did turn a little bit south here, as you can see. Give me some
Okay, we're watching.
volumes.
Thank you. Watching for this print, JP Morgan collar.
35,000 premium. So what I'm looking for here is, oh, it's just Trump.
Oh, it's just Trump.
Thank you, Steve G. Got all excited, man. I got all excited. Turns out, nonsense. Oh, it's just Trump. Anyways, I totally am off track because I saw stuff moving. We're all just waiting for the big trade, and I need the market to move more than 30 points so that my core position of the straddle doesn't. Glenn's asking how big of a move could we get? I mean, this is all, you know, it's still negative gamma here, right? The map is all red. Take to the upside. This thing print and run, man. Yeah, and Chris is right. Last time it was Powell that said something, the market dropped and dropped quite sharply, and people with Powell's a reason, and it wasn't. So, any insight on Russell? I really don't spend much time on those small caps, do I? I believe this will be a predominantly negative gamma environment for RWMs. And it is. It's a weird shape there, right? And I think we did touch on this last week where plenty of reason to think this can run easily into 220, 225 based on the gamma positioning, which is significant. You know, you got $600 million of $700 million in negative gamma. Where are we relative to the call wall in IWMs? Call wall's all up at 220. So if you like IWMs, if you like equities, can you like IWMs up to 220? Sure. Weird chart, right? So 220 IWMs to me, that makes sense. I can see that. BBB is supposed to be beneficial for the energy sector. What do I think of XLE and XOM calls? I don't know that I can't comment on energy. I've never made money in the energy sector. Just doesn't work for me. But those don't seem particularly cheap. Call spreads, because the implied vol overall is not expensive, right? We're not at like 100 per IV rank. The calls are more expensive than puts, so I would go XOM calls.
Okay.
That could make some sense. Yeah, and we looked at Microsoft and NVIDIA, positive game above. No reason to sell those. They just don't seem like that sexy from just a move. Are the call wall and put wall determined solely with reference to positive gamma? Call wall is the most net positive gamma based on the old models, right? So basically, take all the call gamma, subtract all the put gamma. Call wall is the strike that has the most call gamma. Means the opposite for puts, right? And if we breach the put wall, we have forward positive equity returns. That's what the stats show. On the call wall side,
Google's just sitting here,
so you would sell
waiting for
calls, sell
something.
straddles when we hit the call wall. The problem is sometimes vol's just too cheap. Like right now, it's kind of like vol might be a little bit rich. Like that could make some sense, but you know, it's not like me. There's a little bit of juice to squeeze here at a 17, or excuse me, at a 12 implied vol. But sometimes the implied vol, like you're going to sell 10 implied vol. I don't think.
Pretty slow day. Waiting for the JP Morgan collar roll.
The answer is not a lot. You're right. You're not making a And IWM here. Excuse me, CRM. CRM's kind of a funny one, right? Because they're doing some weird AI stuff. Is that right? Stock's really been unimpressive during this market rally. It has negative gains.
Okay, S&P turning back up.
You know, this is a huge strike, 260. I would think of that as a support area, this 250 to 260 area, because these are all positive gamma. It corresponds with a pretty big $23 million of gamma per hump. That's pretty good size. And it seems like it's got room to the upside into 290 or 300. So
DoorDash and Nvidia were the top trades
I would say
today.
if I own the stock, I would be okay owning the stock at 270.
You see that? Nvidia? Nvidia with two big trades today. September. DoorDash with two big trades September. Waiting for the JP Morgan collar roll on the S&P.
And the stock seems to be supported in that chart. Not a bad idea. Yeah, and you know, so in SPX, you know, how much longer you want to? I don't. Yeah, so some people are asking about the 6205. I don't know what that would have to do with the JP Morgan position. So specifically, you know, it's this thing, right? I don't know. Also, it's getting wound down. The gamma is wearing away, but you can see the position size is the same, right? Gamma is highest for at the money options. We're 15 handles below, which is not tremendously far away. So that gamma is starting to wear away because we only have hour or 2 hours left in the trading day. So you know, you're seeing that gamma erode, but the position is still there. 7,000 contracts. It was 10,000. So the position is still there. You know, I don't know how this thing is going to trade, obviously. If I was looking for something just to scratch my gambling itch, I already have a straddle on, so I've probably done enough betting for the day. But could you see this thing move through 6210 in like super fast, quick order? Definitely. And what's interesting about that is the 6210s right now go for 90 cents. So if I was sitting here saying, hey, Brent, what's the trade? You know, 80, 85 cents those are going for now. I mean, that doesn't seem like too bad of a, that does not seem like too bad of an idea. So that's kind of what that's sort of the way I would think about this. And great risk reward, right? Normally you go, hey, why would I ever buy a $30 out of the money S&P call when we've had a 15 handle range, you know, and there's 2 hours left in the day? Well, I have one reason, right? I just got one reason and one reason only. And so, you know, that's the way to look at it. And if you do the 6210, 6230, then you can lower it a little bit more. So, you know, to me, that's super interesting. And great risk reward, right? Trade spiders, you're probably you're paying what, 60, you're paying a fraction of that, right? If you mess around with that. CCJ is this uranium complex. You know, this thing apparently we're turning nukes on Iran's nukes. We open our new nukes here. That's negative gamma to the upside. That looks pretty good. All the way up through 80, and that kind of 85 areas where there's one big strike here. Seems like mildly bullish, I guess I would say. I wouldn't say this is like crazy. And what I'm looking for, if everyone doesn't really know, is the more negative, like Tesla right now looks super bullish to me. Doesn't mean we fill, but this is what I want to see, right? All these negative gamma strikes to the upside, all of these. So, you know, we got to digest this area, which is kind of 315 to 320. We're not doing anything. We get over this, that's bullish. So that's the kind of interesting idea.
Google just fading a little bit.
So you can see here, right? If you get over 50, 51, you know, it's negative gamma to the upside. That's kind of the interesting. And Yassine's asking about back testing. We currently don't have back testing the platform. We're trying to move to more of like a stats thing. It's taking a while to sort of a stats-based platform, right? So like the inclusion of the impact, the gamma percentiles by strikes, and some of you are particularly quantitatively inclined, like Dr. Cosmo, and I know you want to see more of that. Michelle, you mentioned that. So we want to get those kind of insights to you, right? And now we've changed the models. The models are stabilized. We can get some of that stuff going. I think it can make a little bit more sense. Kind of late here with the roll. In terms of the roll, I wanted to see it. Just don't kind of have it in here yet. How much longer?
You might try some out of the money calls for this roll. If it does spike, they're pretty cheap.
You are welcome on the updates. And so we have, I'm always trading on, I always have the beta sort of system up, which I'm not supposed to do, but we have a couple of new tools coming out. We just did the sharpen your skills sessions. Trying to push out a new educational little widget tool. So, there's plenty of stuff. I feel like we haven't launched anything in a while. It was only April that we pushed out all the new stuff. So, what are the best training videos? So if you just go to resources and go to webinar replays, you can view all of the past webinars. I do have that new tool that I have that, that sheds light on or allows you to better grep or search through these recent sessions. So we had the sharpen your skills session on the founders note training with the JT. So you can go to these webinar replays, and then you can also search on these replays. This functionality is a little bit to be decided, but now we've set these up so that if you
Netflix about to break out. Watch Netflix here. Netflix.
click on this, okay, great. I want a negative gamma.
Netflix trying to break higher.
Trying to get the team to sort of push out a little bit early to help with that. So that's one great place. Go to Discord, hit the support button, and you can email support as well. Trying to extend this thing as far as we can go here with the grep out loud on conversation. Thank you, Chris. I'm enough of a dev nerd to make a question like grep. Grep is like basically search for engineers. All right, I think I've at this point answered most of the questions. Ramin. We have negative gamma to the downside. Is that bearish? Now we're moving a bunch again here. So is this finally it? Tesla, you saw that positive gamma in Tesla, right? And this, the stock seems to respect these positive gamma areas, and what's funny about it is, again, it's like, is Tesla a core holding of a lot of asset owners? Yeah, it's top, was it 7th, 8th biggest stock in the world. And so the stock seems to respect these areas, right? And it gets stuck in these areas. And so when I look at the stock and it keeps being unable to digest, these levels, I'm like, okay, I understand why that is, right?
Netflix moving.
That's how I can sort of make sense as to why that is. There's the robo taxis and kind of all this other stuff, and I think there's just a ton of noise on it, but I don't, this is lagging. Without a doubt.
Netflix pushing higher.
To me, it sort of makes sense. And there are these big positions to the downside. So to Ramin's point, is this slippery downside through 300? It is, right? Full stop. But a couple more positive gamma strikes here, right? And we just kind of been churning in this rough area. Now, when do these positions go away? They don't. Well, they look like they go away on Friday, right? See that move up. We actually gained positive gamma, right? So there's a pretty big change this Friday. So it looks like we lose some of these puts probably. As gamma goes from minus 2.3 to, positive 58. And if we look versus next monthly expiration, we're so far away from the monthly expiration, things are going to change. But I just think you have that absorber, right? That shock absorber of that positive gamma, and it's just kind of stuck. So it makes it not so exciting, really, ultimately. And our Tesla options cheap. Where is Tesla on my little dashboard over here? There it is. They're not particularly cheap. So I don't think the stocks are short. I'm just more like, I don't know. More interesting things to do, right? More interesting names to play. Next expiration is today in 0DT options. Next expiration is Friday, or in this case, Thursday, because we have an early trading week. Let's see if the stocks on Tesla. All right, we'll give it another, 3 minutes here. Sit here waiting for the rest of the day. Maybe no roll ever prints, and the joke will be on Brent. Everyone's expecting this thing to roll. It'll be fun if they just don't do anything. Is the gold spike expected in Hero given the JP Morgan trade? David, I don't know why those things would be related at all, the JP Morgan positioning. And, because the other thing is it's also just quarter end, and there's supposed to always be a lot of quarter end flows, just period. Vol control is supposed
Netflix
to
going.
in any entity ever, according to Nomura. Hey, look at that. And that's longer dated flow. So that's quite a nice position. Is this probably just quarter end stuff? Yeah. And it's pretty big. 163 million, 30-day range is 94. So it's a pretty good chunk of positive.
Netflix going.
That makes sense. This could be related to that Trump tweet, maybe, with the pay and stuff, and maybe the big beautiful bill and blah blah blah. So it could be a little bit more related to that. But there's also the quarter end, people just shifting assets around. Well, pretty good volume too. 700,000 is a lot. And the fact that Hood and SoFi are outpacing Tesla is pretty wild. This is where options are very active, vols are very active. When you get these really big volumes. So
Robinhood, big move today.
On Friday's closes, support bounce is showing positive gain at 6140, but the net OI was in the money. How do we differentiate when support? How are you using support and resistance? Anytime you have a giant positive gamma strike, it's going to be a support or resistance strike, full stop. Now, when we look at 6200, right, this is my target, upside target. Do we hit that today?
Robinhood, nice move.
Hour and a half left, years up, probably not, but that is my target, right? So if I start to feel like the market's getting bullish, I don't want to take my trade off until I hit that. The only thing that would make me change my mind there would be if they start to close.
Netflix following through.
And how do I know
Netflix
closed? You look at net OI, not just gamma decreasing. If the gamma decreases as the stock market, as the S&P gets closer, then the position is getting reduced because how else will that gamma shrink? But you just watch the OI at that strike, right? And we did a video about this. I have to try to figure out where I put that video last, but we did a video about this. There's a lot of calls sitting there, 7,000. So, if that starts to shrink, then that position is not really there anymore.
QUBT, nice reversal from the 20-day.
This resistance is because that's negative gamma through that strike. So if they don't close that strike, then it shouldn't slow the strike down just because we hit it. Whereas if it's a positive gamma strike, what happens when the stock market goes up? There should be people selling futures or selling stock into that rally, particularly at that level, which is why we think it's a resistance level. So that's the way that I'm looking at this now, right? If it's a positive gamma strike, then I think it's that's the upside target, that's resistance, as opposed to this is what I'm trying to achieve, right? So there's a slight different, there's a difference in thinking the way you want to think about that. When you look at this, right, to your point, it's calls. I don't care if it's calls or puts, it's positive gamma. Doesn't necessarily matter, right? So you can see, there's positive gamma there, there's positive gamma because some short puts there, dealers long puts, long calls, right, at 6140, so sort of like a straddle. So it doesn't necessarily matter from a high level perspective whether it's calls or puts generating that gamma when we're looking at trace. It is, positive gamma, okay, that should be supported, and it's a 99th percentile strike, right? And then there's these other pretty sizable strikes right around it. Great, I know what that is, that's support, and the market should hit that and stop going down, is what I would expect. Just like if it was positive gamma above, I'd expect the market to hit that and stop going up. Whereas for today, you look at this and go, could we go through that? Well, it's negative gamma. So what does that mean? Well, if the market rallies, they should be buying futures through that level, right? The sort of chase. you know, clearly nothing happening so far. Maybe they print this thing 5 minutes before, which would be crazy, and nothing happens. That's quite possible, I guess. You know, we're all sitting here expecting, what's the impact? What's the impact? What's the impact? And it turns out there is no impact, right? Because we just didn't trade. So it'll be interesting to see. But so far, you know, tape's got nothing, so we haven't missed anything. There's no filter for 930. You know, there's no sizable flows have traded at all here. We would see 40,000 roughly contracts trade. Heroes made no major moves, so
S&P just sitting here.
All right, we are done about an hour because I guess I started late, like a real schmuck. But we will be back on Thursday, I believe, the day before the holiday there. So we're probably gonna work on wrapping this one up. Again, if you're watching Hero, you should start to see 0DTs move. That'll be a signal the JP Morgan thing starts to go. Also watch it on tape. You're welcome, 10 million T and cousin. Absolutely. And again, if we sell off because of the JP Morgan roll, I would be just a dip buyer because of all the other dynamics.
Okay, so any dips on the JP Morgan collar, I'd be a buyer. We talked about that this morning as well. Looking at the slow-mo trade, if we get any kind of dip because of all the market dynamics, any dip on the JP Morgan collar roll, I'd be a buyer. You might want to consider some out of the money calls if the markets jump. They're pretty cheap. 20 deltas. Don't usually trade them, but on an occasion like today, we could see a jump in either direction. Okay, Apple's turning. Apple turning. Apple's turning. Okay, Apple's turning more. Maybe we'll get something to go on Apple. Okay, it's still stuck under the 50-day, but it's starting to move. Day trade, Wise, starting to move. Apple. Okay, starting to come off the low. Apple. Where could we see it go to 201 and 202? All right, so that's only a buck overhead, but looking like we could do something here. Netflix already moved. Netflix already moved. Okay, so we're keeping an eye on the S&P. See if we get any kind of move on the roll today. Still waiting. Still waiting.
Year to a record $155.7 billion. They expect those to continue to grow 7 to 11% year over year growth moving forward. I think one of the caveats for Amazon, and that's become a bigger revenue generator, has been their advertising business. That's up to over $50 billion a year. That was up 20% year over year during their last.
Good job there.
Event.
Good job, John.
Leader in that segment also, with growth of about 17% last quarter. But I think somebody's probably trying to take advantage of maybe the weakness in Amazon that we've seen, the underperformance compared to maybe some of its peers, whether it's the retail side or the AWS side, out in the September monthly options. So basically about 81 days to expiration. A trader sold some just out of the money puts, sold 15,000 of the September 210 strike puts, collected a pretty hefty credit of $7.20 because there is some duration here. So that break even where the trader starts to lose money is down at 202.80 over the next 81.
Okay, we're starting to see some action. No, we're not. No, we're not. September 30.
Continue to fall, goes below 210, Nicole. They're willing to buy the equivalent number of shares on 15,000 options for a price of 202.80, that break-even point. So this is a twofold type of trade. They're taking advantage of the underperformance, maybe to collect that hefty option premium where they hope it just goes out worthless, or they're willing to buy the shares at that lower break-even point.
Yeah, we'll be talking. Thank you for that. We'll be talking more about the Mag 7 later in the show, even the Mag 8, one that should be added. So, folks, if you're interested in Amazon, you'll hear more about all of it later. And last but not least, SoundHound AI. You've seen this name up 25% in 3 months. What kind of trade? You got a bullish trade, I think.
Yeah, a lot of bullish activity, really in the short-term options and across the multiple option series at this point. Stocks up about 8% so far in today's session, but still off of those highs. So you see that the highs at the end of 2024, this stock was trading above $24 a share. So it's had pulled back about 46% from those levels.
Okay, watching for this JP Morgan collar roll. Looking for a spike in either direction.
Voice AI platform. There are multiple industries, whether it's automotive, hospitality, restaurants. And that's why the hype, I think, was going into the end of the year, as a lot of the AI trade was peaking out there at the end of December into January. Revenue hit $29.1 million last quarter. That was up 151% year over year. So they don't make a lot of money, but they're really starting to show some growth. And with the stock up so high today, I think that's why you're seeing a lot.
Apple's starting to scoot a little bit more. Apple.
What stuck out to me was out in the August monthly options. So about 46 days to expiration. The 12 strike calls, a trader bought 17,000 of those. Paid an average debit of about 95 cents for these calls. So the break even where this trader starts to profit is above $12.95 over the next month and a half. That's about 22% above the current share price. And as I mentioned, though, this stock was above $20 a share at the start of the year. So it does have that potential to move higher. Call volume, about 4 times normal.
Super Micro. Super Micro trying to turn back up.
0.11 level at this point. So
Google fading.
So a lot of skew towards call buying in this name on the rally.
I mean, that's all about agentic, these agents and conversing.
Again, recapping, S&P up 12, up 0.2%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Carol Master, along with Matt Miller, Matt in for Tim Stanovic on this Monday. Hey, can you believe it was about a week ago that we were focusing on the Middle East and the U.S. strike on Iran?
Yeah. It was pretty intense. I actually heard Tim go through the whole timeline on Friday, which I thought was a fascinating replay because we're right back to where we started, right? Oil shot up to $81 a barrel on Sunday night, and we're back at like 67 right now.
Yeah, I'm just like kind of amazing the trip that we've already taken. And here we are today talking a lot about what's going on in Washington. We also had the NATO meeting of leaders last week. The Middle East, tariffs, military spending,
USO.
and the Russia-Ukraine war were certainly some of the things that came up there. The war between Russia and Ukraine, it is now in its 3rd year. Ukraine saying Russia fired a record 537 missiles and drones in a massive attack overnight. We also had a headline just a little while ago, a story crossing the Bloomberg, that President Trump will sign an executive order today terminating the U.S. sanctions program against Syria. That is according to White House spokeswoman Caroline Leavitt. So a lot going on geopolitically. We wanted to broaden out a little bit.
Apple still turning. Apple.
Delighted to have back with us Ed Price, former British trade official, now non-resident senior fellow at NYU, New York University. He has advised members of the European, also British parliaments, a former British trade official, and he writes often about politics, economic policy, and more. He's with us remotely from upstate New York. Ed, good to have you here with Matt and me on this Monday. I want to jump right to, there's so much going on, but you write in Barron's, President Donald Trump's efforts to reshape the nation have roots in Richard Nixon's unfinished presidency. How so?
Hi and happy Monday. It's because of 2 dates, 1971 and 1974. 1971 was, of course, the Nixon shock, which was effectively the transition from a dollar that made reference to gold to a dollar that didn't, which is fiat currency. And 1974 is when Richard Nixon's presidential career came to an end. Of course, in that year, he resigned after Watergate. And so what I mean by that is that the two underlying currents.
Welcome back to Power Lunch. Oracle shares surging again today after filing an 8K this morning with some positive commentary from CEO Safra Catz.
around its cloud demand. The company also getting an upgrade on Wall Street. Stifel Financial saying that it is finally crying uncle as the cloud demand appears sustainable and upgrading the stock to a buy rating with a $250 target price. Now, if you look at Oracle versus each of the Mag 7 names on a year-to-date basis, you can see it is outperforming every single one of them. So joining us now is the analyst behind that upgrade call, Stifel Managing Director Brad Reback. Brad, the shares, as I talk about
Still
it right
watching
now,
S&P. Nothing going on. Netflix doing well. Netflix grinding a bit higher.
That is hitting record highs, outperforming Mag 7. This is a call that maybe is a little late, so why do it now? And what do you see ahead for Oracle?
Microsoft turning back up.
Absolutely no question that we're not early, but we think there's plenty left in front of us. And really what got us over the hump here is the CapEx spending over the last couple of quarters has meaningfully accelerated. And our concern was that they weren't going to be able to keep pace with the likes of the other hyperscalers. But with $9 billion of spend in the last quarter, with CapEx expected to be up 4x this year from 2 years ago, it's very clear they're spending and that their backlog should convert into accelerating revenue growth here in the coming quarters, well on their way to getting to 20% revenue growth next fiscal year.
Brad, this is a name in Oracle that has its hands, its fingerprints in a number of big themes with regard to technology, be it cloud infrastructure, be it even artificial intelligence and just about everything around it and in between. What in your mind is going to be the biggest driver of that Oracle company-wide performance over the course of the next, say, 4 to 8 quarters?
It's definitely the cloud, and that's a combination of what, as you just mentioned, cloud infrastructure, which is existing customers moving their Oracle databases to the cloud, be it Oracle's cloud or Oracle running inside of hyperscaler clouds, and then increasingly AI. And then beyond that, they have a really significant level of SaaS apps that continue to grow at 20%. So when you bring it all together, Oracle's cloud, which is approaching which is more than the majority of the revenue right now, is growing 40% year over year this year expected, and should continue to sustain that pace going forward.
Now, when it comes to those
SBET,
hyperscalers,
okay.
we talk about Oracle.
I like that idea,
maybe
Timmy.
Not rightfully so, but kind of a tier maybe even below the names of like Alphabet or Meta Platforms or Amazon. Market caps aside, what exactly is Oracle going to have to do from a management perspective to be able to realize some of those stories that take it into that level of being mentioned in the same breath as the Mag 7 stocks out there?
Yeah, look, I think they've already taken those early steps with the increased spending that they're putting into their physical infrastructure. And then beyond that, I think there's real opportunity, as I mentioned before, to get what's the largest database in the world on-prem transition to the cloud. And that's just beginning. And we expect that to continue for years to come. So that core moving, coupled with a really significant growing AI footprint, as you mentioned at the beginning, a $30 billion commitment that's likely to begin generating revenue in fiscal 28, really show that Oracle's more than holding its own with the hyperscalers.
And Brad, before we let you go, one final question for you. The competitive dynamic, this is obviously a very cutthroat business that they're in, all of the lines of business. In your mind, where is Oracle's biggest threat going to come from?
Yep. Look, I think to your point, the traditional hyperscalers have significant more financial resources than Oracle. That being said, Oracle's still massive. And Oracle, I think, has a price advantage, how they've architected their cloud. It's a newer cloud, so it's based on newer technologies. Networking's a big advantage. So I think they can more than hold their own on a pricing front.
All right. Brad Reback at Stifel Financial, upgrading Oracle to a buy. Thank you very much. We'll see you soon, sir.
Thanks.
And coming up, Tesla's Elon Musk sounding off against the big, beautiful bill. Clean energy stocks are getting hit, although mildly. Well, maybe a little bit more in the case of Array. The latest version of the bill takes a different approach to renewable energy. We have those details next.
All right. S&P is still sitting there chopping around, waiting for that JP Morgan collar roll, nothing yet. Qualcomm pulling back a bit. Back to 158 and change. Okay. The New York FANG components are pretty much sideways for now. Not much to do. Very slow day. Very slow day. Here's the New York FANG components. Okay. Little gravestone doji at the high. MACD's turned up. Stochastics embedded. RSI showing muscle. It's just feels like we're just taking a break, waiting for that JP Morgan collar to roll. See how that goes. S&P is dropping off a little bit. Okay. So most of the New York FANGs are off the best levels of the session. Google, no follow through. Looking for a B pivot, C pivot. Qualcomm coming back to flat. Qualcomm back to flat. Okay, still consolidating here above the 200-day. Qualcomm, Oracle. Everyone talking about Oracle breaking out today. Still would rather buy it if it comes back and tests that breakout level 216. Netflix still looking good. Netflix is going. Netflix doesn't care. Netflix is going. On the watch list this week, 1330. Okay, we made it through 1330 pretty quick. 1350 is the next call wall. $13.50. Okay, Apple. All right, Apple did turn a little bit. Now it just got knocked back down. Netflix looks okay. Netflix is really the only thing that's moving on the New York FANG aside from the Microsoft. And it's well off of the high of the day. All right, just waiting for the S&P. S&P cash to give us a trade. Okay, I'll watch this for a few minutes. I'm going to go take a few minute break. And I'll be right back.
Welcome back, and you can see some of the clean energy stocks selling off amid the Senate's latest iteration of the big, beautiful bill. Takes a bit more punitive approach to renewable energy. It's creating a mess for those stocks, creating some political pushback as well. Kevin Stevens here to explain, because I believe this was part of why Senator Tillis was also opposed. I know there was Medicaid issues as well, but anyway, so what's the latest?
Yeah, so there's been so many twists and turns here, but essentially there are two big changes that have major implications for clean energy in this version of the bill. The first is that in order for future wind and solar projects to qualify for the investment tax credit, they need to be placed in service by the end of 2027. Now, that is a change from the prior version of the bill, which said projects just had to begin construction by 2027 to get the credits. Now, the new language is a really tight timeline given how long it takes to hook up new generation to the grid. Now, the second big change is a new tax on projects that use components from China, which is a major supplier of clean energy equipment. Now, very few U.S. solar panels actually come from China thanks to prior tariffs, but the country still controls a lot of the upstream production, things like wafers and ingots. Now, the latest text is more positive for residential solar, which is why you see Sunrun there up more than 10%. But the overall impact, should this version become law, could be a large slowdown for the industry, with American Clean Power forecasting $450 billion of lost clean energy capital investment.
So Musk, it was true. Now it's hard to tell if he's just angry about everything that happened, or because now he's really on the bandwagon of, we need a lot more power. We've talked about this a lot on the show. We do need more power, totally. We need a lot more power by not passing, or this bill would now threaten that. And we're going to have these power shortages, all the rest of it. So just can we give those comments some context?
Yeah, exactly. So what he basically said was that, why are you taxing the industries of the future? And this is very much a forward-looking thing. In order to be a competitor with Gen AI, of course, the race heating up with China. You need all of that power to power these projects. And also, when you look at other forms of generation, it cannot come online fast enough. Think about nuclear, that's 2030 and beyond.
there's not really an appetite, despite President Trump's comments, to extend the life of coal assets. Maybe a few years extension, but certainly not bringing on any new coal. And then when it comes to gas turbines, because of equipment shortages, you can't get one before 2030.
Wow.
And so the reality, the reality is that right now, because there's only about 3 suppliers globally, and everyone wants new gas turbines. So the reality is that at this very moment, by far the fastest generation to come online is solar plus storage. And so if you are trying to compete in things like AI, which I think is what Elon Musk was referring to, why are you taxing the industries of the future? Also, what's
Now,
really,
let me ask a question, because this is fascinating. If we said, okay, well, solar is the only real option right now, then why do we even need to subsidize it? I mean, these companies have plenty deep pockets, and solar companies are probably not on the best of times. Can't they come to some meeting of the minds?
So that is one thing that's been put forward. People say, given that the LCOE has come down so much, why not just get rid of the subsidies and show they can compete on its own? I think the issue with that is that it's been ingrained now in its current form since 2005. And so it's been baked into projects looking forward. And if your entire cost profile is changing, I mean, we're talking 30% is the base ITC plus some credits from the IRA. And so if now you're trying to get your pipeline under control, looking out, multiple years into the future, your cost profile has changed.
I think it'd be a win-win for the industry. They can get charged whatever they want. When they're such they charge whatever you want and make these companies.
But that's the thing, is that the only thing worse than some of these policies is what people say is the uncertainty, even when it comes to tariffs. That's another thing.
Okay, so with all of that in mind, there has to be, in the industry standpoint or the analysts that cover the industry standpoint, about what an optimal outcome would be in a bill that ultimately gets signed by the president if one comes to fruition. What then does that look like? What balance of tax credits, certain things, projects starting versus just being service and everything else? What gets these companies in the best situation they can, given what we know the administration stance is on these types of renewable energy companies?
I think probably that new excise tax on components from China, that's really prohibitive. So getting rid of that would definitely be beneficial. And then I think just clarity on looking at the step down of the timeline of the credits. I mean, the industry would hope for, something in 2030 and beyond, which at this point does not look likely. But I think it's just getting clarity so that things can get back on track. Right now, all these projects are being sidelined simply because developers don't know their costs. And so until this is clarified, until the tariffs are clarified, we're going to see projects canceled because you can't get financing if you have no idea what your inputs are going to be.
I do hear that from a lot of people, and I like to play devil's advocate, but I do hear they're very concerned.
They just need a plan. They need to be able to plan, whatever the outcome is. They need a plan. All right, let's get over to Contessa Brewer for a CNBC News update. Good afternoon, Contessa.
Hi there, Tom. The Trump administration sued the city of Los Angeles today over its sanctuary city ordinance. The Justice Department lawsuit accuses LA of impairing the Fed's ability to apprehend and detain migrants as required by federal law. LA City Council formally passed the ordinance last November, which prohibits the use of city resources and personnel for immigration enforcement. Prosecutors in Colorado say an 82-year-old woman injured in a Molotov cocktail attack in Boulder earlier this month has now died. They say they're adding 2 first-degree murder counts against Mohammed Sabri Soliman as a result. According to authorities, he attacked a group demonstrating on Boulder's Pearl Street Mall, calling for the release of, the demonstration was calling for the release of the Israeli hostages. And just hours into deliberations, the jury in the sex trafficking trial of Sean Diddy Combs sent a note to the judge today saying they're concerned one of their peers can't follow the judge's instructions. The judge said he's going to send a note in response, asking them to continue deliberations with his directives in mind. Jurors were only handed the case this morning following 7 weeks of testimony. So that's a short period of time for all of this note passing back and forth. Don?
All right, Contessa Brewer with the latest news update there. Thank you very much. Coming up on the show, bank stocks getting a big boost over the past month, and it's not just because they passed their annual stress tests. We're going to dive into what's really been driving those gains when Power Link returns after this break.
I'm here with you. I'm just eating lunch off mic.
0.1% on the S&P. NASDAQ, we're going to call that little change, up just 9 points right now, up less than 0.1%. The Dow up 103, higher by 0.2%. Mag 7 index slumping 0.7%, with a 10-year 4.22%, the 2-year 3.71%. Spot gold up $24 the ounce to $32.98, up 0.7%. And West Texas Intermediate crude down 0.7%. WTI 65.06 a barrel. The UK's antitrust watchdog says Boeing's $4.74 billion deal to buy Spirit AeroSystems Holdings will face UK antitrust investigation. Boeing announced the deal late last year. Boeing shares today are slumping 2.8%. Spirit AeroSystems down by 1.4%. Recapping S&P 500 index now paring its gains.
Netflix coming back in a little bit. Netflix.
0.1%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. You are listening and watching Bloomberg Business Week Daily on this Monday. Carol Master, Tim is out this week. Matt Miller is in the house. And I feel like this is a gift. Did you take your classes?
I did. Yeah.
You're kind of messing with me.
Well,
You can't do that.
I didn't
put away
have
through
to
the
start
show.
wearing glasses until I was like 46, 47.
Yeah.
And I still don't like it. you know?
Okay. I know, but I'm like, okay.
So I prefer them to read stuff that's close, but I don't need them to see the camera.
Do you
which is
remember one
where
time I
they're
changed my part and you were like thrown? I don't know if you remember this, but you take off your glasses and I'm thrown a little bit.
in a good
Anyway,
way.
we digress. We digress. All right, let's talk about some stuff that was happening over the weekend. It was a hot one. I bet a lot of people went to the theaters because it was cooler there. And in fact, one of the films that benefited, actually, it was at the box office, but couldn't you also watch it? Could you watch it in streaming too?
I don't think so.
Oh,
No,
okay.
I went to see it in an IMAX theater, as one should with
Maybe
a
it
movie
came
like
up on my
this.
house, like you could buy the ticket or something, an Apple or something.
I'm sure you could buy
Okay.
the streaming ticket ahead of time, but I suggest, like a movie like this, you have to go watch it in the theater, right?
Okay. Well,
Unless you live in the White House or something, you just don't have a good enough sound system. Dolby Atmos.
anyway, Apple's new Formula One car racing film F1, it did really well at the box office, 55.6 million in the U.S. and Canadian theaters. Check it out if you haven't already. But over on Netflix, Squid Game didn't do so well. Let's.
All right, welcome back. Bank stocks are having a strong run over the past month. More and more signs are pointing to a possibly looser regulatory grip for those financial companies. Our own Leslie Picker is here to figure out what exactly
JP Morgan up again today.
going on. And we are going to see those looser regulatory frameworks for America's biggest and not biggest banks.
Yeah, for the biggest ones, it seems like there's a clear kind of capital freedom sentiment that's really percolating through this world. You take the stress test, which we saw on Friday, for example. Now, that was a very easy test. That was the easiest test we have seen in years. And actually, that was designed by the prior vice chair of supervision, because we've heard a lot about
The test itself was easy.
the test was super easy.
How can they give, what is the point of giving any of these stress tests? Shouldn't they just throw all sorts of crazy situations out there?
That is the question. And is it too easy of a test that it doesn't necessarily test for the potential systemic risks out there? The Fed has come out and said potentially the solution to this is to average 2 years of results together. So you kind of every other year you have a hard test, then you have an easy test, then you have a hard test, and you average, the hard and
To
easy.
do that again, well, I would sure love to do that again. 1 year, give me an easy test. They might change the construct for you.
I think you could be graded on a curve, which got me to business school. Was the concept of we're just up so that we're, we can all here. That's kind of the same thing that we're seeing here, and it's something that the banks have been advocating for because they've seen so much volatility that it makes it harder for them to plan their capital levels.
How much of this story though is driven by the fact that over the course of the last 10 to 15 years, we're then operating under various regimes of regulatory frameworks,
Yes.
that they are just that much better capitalized and able to withstand just about any seismic event that happens within the sector and bounce back relatively well.
That's a big part of it. And also you have to keep in mind that over the course of the last year, the banks have done really well just from a fundamental standpoint. They were in a very strong position going into the tests, which would showcase this being an easier test, in terms of the result there. And then to your point, Dom, they've really been hoarding capital for a while now in anticipation of Basel, which either is going to be reformed or thrown out entirely. So they're in a really good position as it pertains to capital. And you've gotten these kind of layered regulations ever since the end of the financial crisis. And a lot of them under this new administration are kind of getting peeled back one at a time. We also saw last week the supplementary leverage ratio being in focus in terms of the
It's helpful if you look at yields this weekend. Here we are, multi-month lows. It's going to help that they can, maybe be buyers of treasuries on the margin there. But that's reducing the supplemental leverage ratio. All these little steps. Does that the easier? Are we creating problems down the road, or is the takeaway that these stringent regulations post financial crisis literally went too far?
So there were a lot of questions being raised this morning about the test itself. Number one, trading losses were really low. At Goldman Sachs, which is a huge powerhouse trading apparatus, there were virtually zero trading losses in this test. So a lot of analysts are like, well, are we missing something? Was that just auspicious timing from when the shock happened? If we actually tested for a different day, would client positioning suggest there would be more losses? Additionally, there were very low losses relative to previous tests in things like credit cards, in things like commercial real estate, which we've been talking about time and time again here. C&I loans, commercial industrial loans, those were a little bit higher. Those losses were higher. I believe they were the highest going back to 2009 in terms of stress tests. But the other two, people are saying, are we underestimating the risks relative to CRE and relative to credit card exposure? So those are big questions that are being asked this morning.
It's interesting vis-a-vis the fact that we just had Silicon Valley Bank, not that far removed from all of that, and the Signature Bank, failures and everything else that you might have a basis for testing for that.
Well, interestingly, there's been a huge divergence in the performance of regionals versus big banks. So a lot of that has to do with this capital regulation being loosened, whereas the regionals don't benefit that much from that because most of them were not included in the stress test. These were just the 22 largest banks. So that's another thing to keep in mind. The regionals move much more on the macro than on some of this regulatory stuff that we're talking about.
All right, Leslie, thanks. Principal teacher Leslie.
There you go.
Thinking about school still, rated on the curve. Still to a record 18 franchises as interest in the league rose to all-time highs. We'll tell you which cities these new expansion teams are heading to.
Thank you both for being with us. So, William, I'll start with you. The Mag 7, all the names magnificent in your mind?
It's a great question, Nicole. In terms of stock performance, there is some discrepancy. Now, most of the Mag 7 are at or near all-time highs, mainly because they're being considered as primary beneficiaries of AI in the market. Now, Apple is definitely one that is bucking that trend to the negative side. Stock is down 20% year to date. And this is really on concerns over a lagging AI strategy, as well as idiosyncratic concerns around the potential risk of tariffs. Now, we see the stock is fairly valued today. Earlier, if you were to go later last year, we thought the stock was overvalued. It was trading close to high. Because iPhone sales are slowing, we didn't think AI would have enough of an impact on that. We think that thesis is very
And I just saw that Apple will have to postpone some artificial intelligence. There was some European issue. Apple's had a lot of issues, there's no doubt. What do you think, Stephen Dickens? What are some of the best positioned tech stocks in the Mag 7, in your opinion?
So, Nicole, I think echo the comments around Apple. I think people are questioning their innovation roadmap. They're late on form factors like Fold and touch screens and their devices. We're seeing the WWDC event to be largely underwhelming. There's persistent rumors about an acquisition of Perplexity.
All right. So watching Apple turning back up again, they had a little spike in opposite directions. Apple's trying to get back up to the highs of the evening session now.
Sort of pulling through. I think if Apple's going to turn around, also there's a key thing to think about here. Apple's typically never a leader in these markets. It's a laggard that then brings that service and brings it to the masses. So you could argue that they're waiting to see AI play out. I don't subscribe to that view. I think they're late. And some of the other names, you've obviously got to like what NVIDIA's doing around GPU. They're a core foundational platform here with CUDA as a really strong moat. You've heard me say it before, though, Nicole, some of the other names just on the edges of the Mag 7. Broadcom obviously starting to execute now on the VMware.
JP Morgan and Goldman Sachs doing well today.
Strong adoption of the VCF.
Goldman Sachs from the watch list for the last few weeks. Goldman Sachs continues to ramp higher.
So that's changed.
All right, went through all of our targets, short-term targets over the last couple of weeks. Getting a bit extended. Goldman on the weekly. Looks good. JP Morgan as well.
Collaboration with Anthropic around a huge supercomputer to power AI. So goodness there, I like. If I'm looking beyond some of those top 8 names, I think the announcement on Friday with HPE and their acquisition at $40 a share of Juniper being approved by and reaching a settlement with the DOJ. I think there's lots of positive there for that, and we've seen that stock bounce since that news.
And if folks didn't catch it, that was Mag 8. Stephen Dickens thinks there should be Mag 8 and have Broadcom be that magnificent 8 stock in the name because it should join the ranks. It's been gaining serious traction.
Apple's on the move.
That's a possibility. Is that something you would entertain?
Apple.
Yeah,
Still squeezing.
I certainly agree. Actually, I'm surprised we haven't updated the name so far. Broadcom has been a tremendous stock play. It's up 20% year to date. It's up 70% in the last 12 months. But we think it's actually overshot our view of its fundamental intrinsic valuation.
Apple's starting to pop right now.
$125 a share. And the main difference here is the level of exuberance that market has around its AI opportunity.
Apple's on the move. Trying to come off the low. All right, watching the S&P for that JP Morgan collar roll. Apple coming off the low. Nice volume on that last bar.
Growth forecast is astounding. Stock performance, but valuation right now we find it's challenging.
Does Morningstar have 4 or 5 stars on any of the Mag 8 that we're talking about?
So we find most of them as fairly valued, which would be 3 stars. Google is the one that stands out as being a 4-star stock. I know my colleague Ahmed certainly thinks it's been overly punished in the market for some antitrust risk. We view it as an AI winner. So Google is really the lone undervalued play there, according to us.
Understood. And when we think about the growth areas within technology and what we do in our day-to-day lives, we were just talking about the agents, agentic conversations that are so with voice assistant that seems so real. What's next, Stephen? Quickly.
It's a combination of demand and efficiency. Obviously, these Mag 7 or Mag 8 companies are well positioned to benefit from the demand. They're also early adopters of the AI technology that they're providing to their clients, and they're driving that efficiency through coding, through
S&P still bouncing around.
efficiency gains. So we're going to see
Apple, I have 202.50s that expire on Thursday, so I'd like to see the spike continue on Apple. That position is currently flat, a little bit off, losing about $10 per contract. Very easy to get that one back to green if this keeps up. Apple, just watching Apple at the moment.
Investor Checking, the checking account built for investors, named highest in client satisfaction by J.D. Power for 7 years in a row. You get the award-winning
All right, there goes Apple.
plus cashback
Apple going.
all designed for investors like you with unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One Mortgage account, you can manage your checking and investing in one convenient between your accounts is easy. Cash moved to your brokerage account is available in
All right, we got a nice move on Apple at the moment.
stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
It's time to look forward
Find the next trend.
from every click to every tick.
So no fear of missing out on next gen investment.
Available anytime, anywhere, on any device for free. Stop Network.
Okay, here we go, Apple.
He's Alex Coffee. I'm Jenny Horn. Join us for Next Gen Investing.
NVIDIA is starting to move. All right, NVIDIA off the low. All right, so you always want to check NVIDIA. You always want to check for a buy order block. Okay, you got a buy order block. That was earlier this morning, but we're bouncing off that level. We need to get through 150, 158. Got several layers of supply overhead, but looking good. Looking good.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade real well with Schwab.
Morning Movers brings traders the biggest headlines to start the day. From volatile overnight swings to the earliest analyst call. Get your watch list ready. 8 a.m. Eastern. Morning Movers only on Schwab Network.
Okay. NVIDIA turning up. Apple, nice move on Apple. Finally back to even on these calls. Apple finally back to even. Let's see if we can get something out of these. Been in these since last week. All right, looking better. Apple.
Wall Street at the New York Stock Exchange. This is Market on Close. I'm your host this afternoon, JD Durkin, with an hour left or so in a very busy trading day.
S&P. S&P on the move. S&P. Whoa, got a nice spike there. Those S&P.
Gains at this hour on tap here on track, I should say, once again, for another all-time high for that S&P 500. Looks as if the Dow 30 components, about a mixed bag, about half or so. We do have a handful of laggards as well, and a comparable story, of course, for some of the most weighted names in the
Okay, those S&P calls got taken.
Look at some of the futures products, get a sense on what is moving at this hour for the dollar.
Okay.
And Bitcoin, a bit of a mixed bag. We are seeing gold up fractionally, a little bit of weakness in the dollar to kick off this shortened trading week. Of course, we have a holiday coming up, the 4th of July on Friday. Comparable story there for crude oil as well as Bitcoin, which is holding on to gains fractionally for the day, selling in just a fair bit above that 107 level. So a mixed bag to start a busy week that isn't just short because of the holiday, but of course, we've got no shortage of very important pieces of economic data, including that all-important June jobs number.
Okay, that was a nice little pop.
Later on this week, not Friday, but we'll get it on Thursday, and a lot of market forces at play. Now for a look at a few of the top stock stories that we are trading for, following for, I should say, on this Monday. Let's now bring in Jenny Horn, markets correspondent. Hey, Jenny, good to have your perspective on a closely followed day here on Wall Street today. Let me get your perspective of a few of the top stories that you're
Microsoft on the move.
moving stock
S&P here is H&P Enterprise after that settlement was reached with the DOJ for it to acquire Juniper.
Okay, there goes S&P. All right, what are those up to now? Tell me those. Okay, there goes Apple. 240 now.
Is a sigh of relief as we've been waiting for hopefully some resolution regarding the acquisition of Juniper from HPE. Now, shares still pretty substantially on the session, although both names are off of their peak of the day. But the Department of
Okay, there goes Apple blasting higher. Thank you very much. Let me take Apple off here. Okay, looking good. Apple. The 202.50s. Okay, 202.50s blasting higher. Okay, can we get above the 50-day for once and stay up there? Okay, so last week, several times we tested the 50-day, got knocked back down below the blue line on the right. Volume is about half of Fridays with 1 hour to go. Okay. Apple. I'm going to go ahead. I'm going to take these off flat. These could go a bit more, but I'm not going to F around with them. I'm not going to F around with these. Just go ahead and take them off. I'm flat. So all I lost was some time. Apple's probably going to keep going. I still have some calls that are expiring further out in time. That's fine.
Right now concerns if it actually goes all the way through, but historically speaking, when this type of progress is made, it pretty much means the deal is set to go. But again, I say that hesitantly because as we know with regulatory approval, there's always a degree of pause until it actually is completely closed and done with, which we're not quite there yet.
Jenny, it's a fascinating story because we have been watching so closely to see what the general mergers and acquisitions.
Okay, so it looks like we got the roll. Okay, looks like we got the roll. Okay. S&P.
Court date. Are you surprised at the concessions that both Juniper and HPE had made in order to satisfy those concerns from the regulators?
Honestly, no, because I feel like if we're talking one relatively, like small area of HPE's business, which does include, of course, the licensing of these softwares and the transfer of Instant On. Overall, there is still, I think, thinking that this will not change the overwhelming benefit of the deal, and that's actually what Evercore ISI analysts mentioned today, that they actually think this news is a positive, given the lawsuit, again, was set to go to trial in less than 2 weeks from now, but they also did say that this will still maintain HPE's conviction to achieve its stated targets, which includes being now earnings as well as free cash flow accretive at least 1 year post-close. So their opinion, they still see that as a green light and see all things as go. But $14 billion, of course, $40 a share, does at least right now secure that we have crossed a regulatory hurdle, and that degree of uncertainty that has unfortunately weighed on HPE will hopefully dissipate, because right now this market is definitely favoring some of these tech names, but HPE has not seen the same degree of strength as the rest of its tech peers.
Yeah, Jenny, this is the type of week where reporters like you and I are very grateful for any dose of extra caffeine we can get, because there's no shortage of things to go through, including the closely watched so-called one big beautiful bill known as the budget reconciliation fight down on Capitol Hill, specifically with an emphasis on its impact on solar stocks. They're in focus today. What are you seeing there?
Yeah, this is such an interesting story because unfortunately for the solar stocks, it has been the story of long-term pain, we'll say, but not exactly receiving favorable headlines over the weekend, as we did see that Sunrun, Enphase, and other solar stocks pretty collectively falling today after the latest version of the Senate's big tax and spending bill delivered a surprise blow to the sector. So the draft bill would phase out tax credits for large-scale wind and solar projects by the end of 2027. Why this was a surprise is it was earlier than previous drafts, but projects must now be in service by December 31st of 2027 to qualify. The latest version does also include a surprise tax on projects that use supplies from China, which is right now the world's biggest source of renewable energy. So no surprise to see so many of these names taking it on the chin.
The one exception is everything tied to solar related to roofing is actually somewhat of a provision, which is why we're seeing the resiliency in some of these names, like First Solar, for example. But broadly speaking,
Okay, that was a nice trade there.
also, it does highlight the fact that there's still this appetite for alternative energy, just not solar and wind, which historically are relatively expensive. Like anything with nuclear ties today, for example, actually seeing a pretty nice session. Palantir, for example, I know not one that is historically seen as like an energy play, but right now with recent news partnering with the nuclear company, positions them quite well, I think. And another reminder with the fall of solar that we're going to be seeking other energy sources. It's just about finding which ones are favorable from the Trump administration. But so far, so good for anything.
Okay, nice move. VSAT's on the move. Watch VSAT. All right, so we got a nice move here on the S&P 500. Those calls that I mentioned, out of the money calls, if you took anything, those were a nice profit there. Okay.
We've heard Elon Musk say it would be, in his words, destructive to the general renewable space. Is that take a surprise of yours, and do you expect what Elon Musk has to say to it all change the calculus here these last few days?
Yeah, he basically said this is suicide for those that are in the Republican Party, and this is like the demise of years and years of progress for alternative energy sources. This is no surprise. He's been very openly critical about this bill. It was part of the initial fallout we saw once he left the Department of Justice, or the Department of Energy Efficiency, and of course under the Trump administration. So no one that has followed Musk would be surprised that he's been a critic of this. I do find it interesting when he criticizes other aspects that don't involve energy, just like the mass spending and where it puts our overall debt levels at as a country. But why it's to me so unsurprising, so not even like maybe a newsworthy headline at this point, is because he was set to benefit from so many of the provisions that have right now led the way for development with Tesla, this Tesla solar business. I mean, Tesla has a massive energy component of their business that was favorable under the prior administration. So losing some of these tax incentives, or just the unclarity on this space, I think is what his concern is. But I mean, they've got bigger issues to address, I think, at Tesla than perhaps these tax provisions that they're losing, because losing on sales is also part of that story as well.
Yeah, no doubt. Well, I still have you. Let me ask about the all-time high here for Oracle. What does contribute to that price today, and what are you following?
So with Oracle, the story is somewhat twofold, because I think that initially we saw shares rise actually in the back of some favorability from the analyst community. Stifel upgraded shares to buy from hold. Price target raised to 250 from 180, highlighting this dramatic step up in CapEx and the remaining performance obligation gains that support their overall cloud growth expectations. And these cloud gains, in their opinion, should generate accelerating revenue increases in now the coming years. So speak to that. Their cloud business is booming. And then we also know earlier today, the company issued a Regulation FD regulatory filing with the government, where their CEO stated in this filing that they plan to tell employees today that Oracle's off to a strong start now in fiscal 2026. And to quote, our multi-cloud database revenue continues to grow at over 100%. And we signed multiple large cloud service agreements, including one that is expected to contribute to more than $30 billion in annual revenue starting by fiscal 2028. So all of this being said, management backed a lot of this expectation earlier when they reported earnings, saying that not only is revenue's pace of growth expected to continue at this really healthy clip, it's going to accelerate. So that's been amazing. And so now at all-time highs today, we pulled back pretty substantially from those all-time highs on the session here, but a name that has been one to watch for the month and the quarter, and now, I mean, is up 33% month to date as we close out the month of June. So about 3.5% off those all-time highs, but continues to generate buzz and enthusiasm from the sell side, as well as even just their CEO.
Yeah, and to continue to watch this week.
All right, looking really good. Looking really good. S&P, nice pop. Futures. All right, so that was welcome. That was a nice little pop. Okay, so let's see what else we can get out of this. Apple's still going. Okay. Ooh, I left a lot of money on the table. Ooh. Oh, Apple, you're doing it to me.
Give me your take about what you see is really driving the resiliency of this market against all odds.
mean, it's hitting all-time highs again. It's kind of a nice ride, a wonderful way to start the summer. And you're right, it's amazing that we're starting the second half of the year already. I feel like everything is moving so fast. We also have the big, beautiful bill progressing, causing some trade.
Okay,
and
nice move.
optimism. There seems to be a bit of an indifference to the weaker economic data than forecasted. that's
Apple.
been coming out.
Nice. We've got 308 stocks advancing on the S&P 500. 70 again. 70. It's pretty much the way we started today. There goes Apple. Apple. Boom. There goes Apple.
Well, the data is usually lagging, so we will probably begin to see some of that in the third quarter, but it just depends on how much of it shows up, and then we'll be right back into the fourth quarter boom. And then also seasonally, typically the summer is a little bit more quiet, although I don't know, this year has been just crazy with the amount of news coming at us and information. The third quarter will likely be a little more challenging, mainly because data tends to be a little lagging, so by the time it actually comes out. And then maybe that will motivate the Fed to start actually lowering the rates.
Nancy, I'm gonna be honest, I'm pretty unfamiliar with this word quiet, I believe you pronounce that. It sounds foreign to me, at least for those of us who cover this space. Tell me about how you think investors should be approaching their thought on tariffs. Obviously, that in and of itself is not a new story, but there's very much been this wait and see impact with regards to the.
Oh, Apple's still going. Apple. Finally. That's okay. I don't mind. I'm sure some of you probably did very well on Apple. Nice move on Apple.
Hitting all-time highs. Any investor or client who's sitting on the sidelines should actually just get in and participate. And then also, in the reverse of that, if you
Okay, looks good.
spend money
Apple.
in the next 2 years, what a great time to take it off the table so that you can just have it readily available, because who knows what's going to happen. I think the biggest risk out there is that
There we go. Boom. Boom. Finally.
almost anything can happen overnight, and there's no real way to prepare for that.
Okay. Very nice. Very nice move.
Our advice to our clients is to be prudent. And
Okay, those calls are.
in the short term in cash.
What are they now?
And if you are a spectator,
Those calls are $3 now.
being a spectator, just get in.
Those S&P calls are $3. So 200%. Nice move. It hit 8. We hit 8 there.
In this environment, given that we finally had some answers on trade policy, but as you know, Nancy, there's still a lot more we don't know than things we do know.
Well, energy and tech have certainly been the leaders here. But those are definitely, and then we've been moving much more into value stocks, dividend paying stocks, again, just to hedge against any major volatility, because as you could see, when volatility occurs, it's actually pretty drastic. It's not just minor. So the value stocks really have a big part in this, and always have the guardrails, put some downside protection. Bonds are very attractive at this time. We've got the income back from bonds. So there's a lot of opportunity out there. That's why I say, if you're a spectator, stop being a spectator, just get back in.
You're approaching what is perhaps the biggest, or one of the biggest wild cards in all this, and that's the general state of geopolitics, both here in the United States.
Absolutely. This is the one thing that, overnight everything could change, and we really have no way to be prepared for that, except to take our own precautions and make sure that we are financially prepared for what's to come. Now, traditionally or historically, war has always been very profitable in this country. For some reason, financial markets don't worry so much about geopolitical risk, because money is money, and there's always something to be made on the side. But, we still don't know what the ramifications of our encounter with Iran is going to be. We don't know if we're going to have terrorism on our soil and on American soil. There's so many ifs. And that to me is probably the biggest risk, not so much the tariffs.
Sure. I know you've mentioned artificial intelligence certainly as a long-term growth opportunity.
All right, beautiful. Looking good. Looking good. Apple coming back in a little bit. Let me take some of these Apple calls off. Need to take some of this off. That was a nice move there. Beautiful, beautiful, beautiful.
And make sure that the most important thing is the time frame. You've got to be in it for the long term, and you have to have the stomach lining or the appetite for risk with all the ups and downs with AI stocks, because it's still a growing sector and it's not established yet. So there's a lot of competition in that space.
Okay, that looks good.
Mergers, acquisitions.
All right. Hope everyone's having a good day. I'm your host, Cousin Vinny, coming to you from theclosingprint.com. It's Monday, the 30th. JP Morgan caller roll. Okay. Getting a Super Micro to turn the corner, maybe. Maybe Super Micro can turn the corner. Okay. S&P still going.
Maybe the data and the data-dependent driven FOMC does not end up agreeing in that final analysis. But as we are set to kick off again and possibly the second half of this trading year, what will you be looking for out of the Fed and those key data points that may inform its decision-making to finally give us a few more cuts across the finish line?
Well, according to Mr. Powell's statements, and I listen very carefully to what he says because he definitely sticks to what he says.
Anybody else take those S&P? Anything S&P today? I saw a couple of comments there. Looked like Stephen, looked like you did something. Zero DT Hero or Zero? Yep. Nice job there, Stephen. Nice job.
I think that's more politics than anything else, but the reality is that they've reached their goal, and the goal was to reach 2% by mid 2026, and we're kind of already there. So they haven't seen the need to actually cut rate yet, but like I said, that might change by the third quarter and certainly maybe the fourth quarter.
Yeah, it's going to be one of the very many things that market participants and us here at Schwab Network will be watching very closely. I'm very grateful for your time here today on this Monday. Nancy Daoud, CEO of Opus Advice First. Nancy, thank you. Coming up on the show, we'll keep the macro conversation going and focus on the outlook for trade deals and if there may be any type of extension, of course, to the July 9th tariff.
Very nice.
Stick around.
Very nice. Okay, very nice. That's a good way to punctuate the day with some S&P 0-day. The only reason I took those was because the JP Morgan caller. It's either going to go up or down. We figured so. Got a nice little pop there in S&P. Congratulations. Okay, good job there, Stephen. Microsoft. Okay, Apple looking good. Apple. Microsoft still pushing. Okay, Google looking for that to pop back up. Meta looking for that to turn back up. Looks like it will. Broadcom turning. Netflix at the high of the day. NVIDIA needs to get above 158. Microsoft looking good. Cool.
Whether you're an experienced investor or just getting started, Charles Schwab offers a webcast that's right for you. Are you an active trader?
Very good job. Very good job, S&P.
Designed to help you develop a deeper understanding of technical analysis, options, futures, and more. Best of all, you can ask questions by chatting directly with an education coach. It's interactive learning at its finest. Tune in live or watch on demand. Head over to schwab.com/coaching and start learning today.
Okay, there goes Microsoft, Stephen. Microsoft on the move. Nice move on Microsoft. Looking good. Looking good. All right, breaking out the new highs. Okay, there goes the S&P. Is going to go some more. Holy crap. Okay, there we go. S&P's on the move.
No shortage of things to chat about, but I do want to ask you to lead off about the Canada deal. Did that prove to you that markets are no longer as concerned about the state of Trump tariffs and trade-related policy as maybe we were around those April 7th lows?
Hey, JD, thank you very much for having me on. Yeah, I think it further proved it, right? If we think about the reasons that
That's funny. Steve Weiss calling out Wapner today, saying, Steve, Wapner calling out Steve, you're jealous because you don't own NVIDIA. Steve responded, you're just jealous because you don't own any stocks. Beautiful.
Markets believe that the Trump administration will not do anything on trade and tariffs that kills the economy. And so since it has that underlying belief, it's just ignoring all of the noise. And I think we saw that again this weekend with Canada.
What's your state on the so-called taco trade narrative? Does it hold up the way we thought it did 3 or 4 weeks ago?
Yes, it does. But taco's a fun thing. Everybody loves it right now. But that really oversimplifies what's happening. It's not that Trump always chickens out. In fact, he didn't chicken out on Canada, right? It's actually the Canadians that chickened out, it appears, in this latest round. It's more that he's not going to go into any sort of transaction that directly hurts the economy. And that's the key difference, right? From April, when he was out saying, you know what, we can all stomach a little bit of pain, and I'm the only one who can get us through this. And all of a sudden the market was like, oh my God, we may actually go through with something that really kills growth.
Microsoft continuation, looking good. Microsoft, thank you for the follow through on Microsoft. Apple looking like the king today. Big pop on Apple with 37 minutes to go. 37 minutes to go. The market's giving us, it was a little boring this morning. Very boring start to the day. First 4 hours.
Yes, it's working for investors, but it is more than that.
You know, so many people have been wrong trying to predict what the next step is out of the Trump administration. I'm going to go ahead and put you on the spot and then for your take as well. Obviously, while we watch Congress deal with the budget reconciliation bill on the one hand, you're exactly right. We got this July 9th deadline. Is it your expectation we'll see the president issue another extension, maybe another 90-day extension, try and jam through a few of these high-profile trade deals at some point next week? How do you even see the next 10 days or so playing themselves out? Because there are a lot of market implications. They're watching these deals very closely.
You're absolutely right. So here's what I think is going to happen. And, you know, I'm guessing like everybody else, right? But
there goes S&P. Oh, shit. Oh, man. Look at the S&P go, Steven. I think we're going to leave some money on the table here. Wow. Wow. Okay. There goes Apple.
See some other countries that are going to get hammered with the reciprocal tariffs going back to where they were as he sort of tries to push back on America.
Look at Apple.
You know, these sort of second level.
Apple's killing it, man. They're killing it right now. Apple.
It's not going to be disruptive to the economy.
Look at that. Beautiful. Apple.
Showing the world that they're serious if you're not going to move a bit in their direction. Now, I don't think any of the extremely high tariff rates will be in place, you know, a month after the July 9th deadline. I'm sure they'll sort of be reduced over time, or important categories will be exempted. But don't be surprised from an investor standpoint if you see some of these tariffs pop on July 9th. But the key will be look at the major trading partners: EU, Japan, India to
Apple. There goes S&P. S&P is still going. Okay, so I added to SPMO last week. SPMO, the S&P 500 Momentum ETF. Okay, added to this one last week. Looking for this to be in the 200s by year end, maybe, or next year. This time next year, 12 months from now. This is going like gangbusters from 80 to 112. Okay, so by next year, this time, I think we could see 200 on this one. I started some JEPQ this morning in my investment account. JEPQ doesn't move that much. JEPI I already have. Okay. Robinhood. That's looking really great. Robinhood. Apple, nice pop on Apple. Finally above the 50-day. One thing I want to point out about Apple is it's been frustrating, but the thing you have to understand is that whenever you get a squeeze like this is the best time to buy. Even though it's boring, you can buy some cheap calls with volatility very compressed. Once it moves, if we get a follow through tomorrow, we could see a nice gain on Apple. I have July 11th and July 25th, 210 calls for both July 11th and July 25th. I had Thursday's calls, 202.50s. Those are toast. They're gone. I took those off. That was a nice. It was flat. Kept going. I should have just held on to it, but I broke even. That's fine. The other ones are doing good too. Okay. Great. So Super Micro, we're looking for that to continue this week. Super Micro. Okay, looking for it to continue. Okay, those calls are $4.50 now.
That to me is one of the worst things that can happen. Is that all of us in the business community sit there and say, this is never going to settle for 4 years. We're constantly going to be wondering what is the baseline go forward. And so I think the biggest question is, can we get stable trade policy? And if we can, I think that will be a positive over the longer term.
Tom, we're almost out of time. Tomorrow is the 1st of July. What is the biggest story you'll be paying attention to for the second half of this year?
Growth. It's all about growth, right? And don't look at tariffs as anything other than influence on growth. If the economy can hold up,
Yeah, Apple looking really good.
If it can't, look out, because we have a long way to fall.
Segments report. Grateful for your time and perspective to get us kicked off here. The final trading day of the month of the first half of the year as well. Folks, coming up on Options Corner, the one and only is set to join us with levels to watch into the close. We're back with more Market on Close coming up after this.
Okay, that was nice. With 31 minutes to go, S&P continues to drive the bus higher. Very nice. Very nice. Thank you for letting me be myself again. Okay, looking good. Super Micro. Okay, S&P still going, looking good. A little bit of profit taking right now. SPX that did really well. CEG, United Health, UNH. Okay, so this is like Apple. Okay, so United Health is like Apple. Once this thing gets going, where do you want to buy calls? Scott B was buying UNH, I think weekly calls. They were $4. What are they going for now, Scott? Good. Okay, so we're turning the corner, squeezing. VSAT popping back up. VSAT. Okay, it looks good. VSAT just grinding along. Not as good looking as some of these other ones though. Palantir pulling back. Palantir pulling back. Okay, so spinning top, inside day. So the rule is take the direction of the next day's move. So if we close right here, whichever direction this takes Palantir, that's the direction you trade it. Okay, it's trending up. So had some above average volume on Friday. So we'll see if this has anything to say for itself by tomorrow. Okay, Reddit finally got something going here. Reddit got above Wednesday's high. Okay, we briefly got above Wednesday's high. We faded a little bit. Looks like we might be headed back up to the high. If we can get this to turn, Reddit. All right, so what do I have on Reddit? I might want to add to it. Reddit on the dip. Okay, 145. 145 call. 145, 150. Okay, I'm at 150 now. That's max profit. Okay, I'm gonna close these Reddit calls for profit. I'm gonna take the money and I'm gonna put it into something else a little bit further out. That's the only thing about taking credit spreads. They're cheaper. I mean, not credit spreads. Verticals. They're cheaper, but you do leave a lot of money on the table if the stock gets going. So that's what I'm looking at right now. Okay, so it looks like we're gonna go here.
Bloomberg report that says the company is exploring AI partnerships and ways to enhance Siri voice assistant. Considering AI models from Anthropic as well as OpenAI, the latter of which, of course, well backed by Microsoft. Discussions reportedly have been held with both firms about using their large language models, which would run on Apple's own cloud infrastructure, at least for purposes of.
Okay, Reddit, nice move there on Reddit. Turn in the corner, Reddit. So what I want to do? I want to do 150, 160. Reddit. Yeah, Reddit looks good on the daily. I'm going to do 150, 160 on Reddit and go out to, say, August or so. August. Reddit. August. 150. Now let's go 150. 40 by vertical. 170, 175.
Probably is going to be the first area that I'm going to be kind of eyeballing here over the next 10 minutes or so. We have to be mindful of we do have some rebalancing. 2000 that took place.
Okay, I just bought another vertical with the profits that I made on Reddit. Okay.
Today, so kind of going into the close, we are expecting a significant amount of volume here, and that could actually provide us a little bit more momentum to the upside. We have seen these.
So, yeah, that looks good.
Really be bullish for the S&P 500, and I think that news that you just brought up around Apple also is providing a little bit more of a spark for the market so far here today. So 62.10.
Okay, let me just do this real quick.
There is an area of resistance. If you look at the intraday chart at 6200, we actually have over 100,000 contracts that have traded at that level so far here. In GE, one thing to kind of note, the equity volume is the equity option volume, or if you're looking at the index option volume,
2 to 1.
Pretty heavy over the last couple of trading sessions here, where we've had multiple strikes.
Okay, 170, 175. Reddit.
Very significant. Now, a lot of that volume actually is selling of calls, which really does create this fall. As we have individuals selling those calls into the market here, you kind of create a little bit of a wall here at that 6200 level. But once again, you're looking for a squeeze to the upside at 6210, maybe even 6220. Any type of failure or breakdown in this market looking back towards that 6190-ish area as your equilibrium level. You don't want to break down to around that 6170-ish. It doesn't seem like we're trading towards that direction, but any type of breakdown, 6170 would be your area of support. I'm kind of looking for, hopefully, a little bit more of a squeeze to the upside here, just given the dynamics.
128.372.
Basically starting right now. Yeah, we're still at 62.02 level with about 25 minutes or so left in the trading session. For people who had been following, it does appear maybe in the next day or so back to Golden Cross territory, where we got that 50-day moving average finally working its way back. Of course, we had been so-called death cross territory now, going back a couple of months. Talk to me about other trends you're seeing in volume here, Kevin, into the close.
Okay.
Yeah, so we're actually looking at the advanced decline line in the S&P 500. I'd like to bring this chart up anytime that we have a day like today. And what we have seen for the majority of the day is kind of a little bit of a range-bound type of trading action. A lot of the activity has been kind of staying within the mega cap space and the technology.
Okay. S&P, a little profit taking. That was a great trade. Great trade on S&P 0-day.
You did start seeing a lot more participation in this market when it comes to equities to the upside, and going into the close, that's going to be your main indicator, that white line. You want that white line to move to the upside there. That's going to really provide a little bit more of a foundation for the S&P 500 to try to squeeze higher here. Once again, kind of looking at that rotation. Today is all about broadening out that base, getting more companies and sectors involved in this type of rebalancing, this restructuring. The options expiration for today is also very critical in a sense. We have this JP Morgan collar that gets put on every quarter. That's also expiring. Now, we have to also be mindful, 5905 calls, which is where they have their short call, is deep in the money at this point. That could also be another catalyst here that a lot of options traders are going to be watching, not only today, but also tomorrow, to see what the new strikes are going to be. Those trades are probably
Low tick alert minus 800.
All right, so we got some counter flows now. Let's see what that looks like.
I feel so lucky to do this job because I always get to talk with people like you who are far smarter than I am, and I always learn something when you and I get to do these segments.
All right.
Before I let you go, anything else you're
Super
seeing on the daily
micro.
chart? Yes.
Super micro.
Everything looks healthy. We're
Okay.
20-day moving average.
What do I want to do?
Shape here. You know, when we look at these death crosses and these golden crosses, especially if we kind of look at a longer term time frame, are they meaningful? They used to be in the past.
Apple. Yeah, it looks so good. All right, I'm going to take a 2-minute break. I'll be right back.
Most likely by Thursday of this week, if not Monday of next week, barring we don't have any type of major aggressive sell-off event taking place here. Obviously, that is going to be bullish. The only thing that's concerning, JD, is we have around 4 open gaps on the S&P 500 daily chart in the downside here that have not been tested or filled yet. That's a fair amount of gaps that have not been tested. So I would expect, obviously, we have the trend of the upside. What I would expect or be prepared for is that we will have a consolidation, potentially going back, testing some of those gaps to the downside, getting some buyers to really step in and then move higher. We usually don't see these type of V-shaped recoveries and a significant amount of gaps that are still open not be tested. Maybe this time is different, but you kind of go and look at the last 20 years, 30 years, it just has not been the case. That would be the only thing that you get concerned about. MACD in a bullish formation, 12 EMAs back above that 26 EMA. RSI has broken that downtrend, that little flag pattern. We're in the overbought territory right now, so we're still at kind of extreme levels, but that's healthy. It doesn't mean that you immediately fade the market when it gets to those levels. But now what you want to be able to see is volume increasing, broadened participation, ample liquidity in the market. Those are the real, the 3 catalysts or components that you need in order to continue and sustain a bull market like we are probably in right now. And once you start seeing concentration, lack of participation in the market, low liquidity, that's when it becomes a concern. That's not a problem today. This has been quite the V-shaped recovery from the date points of February 19th down to those lows of April 7th, of course, to where we've been trading since Friday. Kevin Green joining us here as always to help us make sense of things to look for in the chart. Kevin, thanks a lot. Here on the show, we will check in on the U.S. dollar, which continues to fall to now 3.5-year lows. Scott Bauer joins us next here on the show to break it all down, including the levels we should be following. Market on close. We'll be right back after this. Stay tuned.
So To me, it seems pretty obvious that shorts covered today too on Apple, in addition to some new money coming in, most likely. But okay, Apple S&P is starting to bounce again, so a little bit of profit taking at the high, and now we're starting to follow through. Nice.
Binge watch the market with the Schwab Network. Tune in 24 hours a day, 7 days a week on schwabnetwork.com and on all of your favorite streaming services. Schwab Network, available anytime, anywhere, on any device for free. Binge watch the market with the Schwab Network.
Palantir, a little dip getting bought right now. Okay, SOXL, the semiconductors, 3-time. All right, trying to get above SMH. Okay, what's NVIDIA doing? NVIDIA buyers at the low of the day. NVIDIA. Okay, NVIDIA's about to go. NVIDIA's about to run in the day.
Market ready for you, ready to go at 12 p.m. Eastern. The Schwab Network.
Welcome back. This is Market on Close. I'm your host this afternoon, JD Durbin. Let's now break down the commodities market with longtime friend of the show, Scott Bauer, CEO of Prosper. So let's start with a look at the dollar. Give me your sense about the continued weakness. What are you following and how much lower realistically could it go?
It's already broken through a couple spots that really hold this support. And you've got gold rallying, so gold rallying, dollars fall.
Apple. All right, seeing a little bit of profit taking now with 16 minutes to go. 16 minutes to go. NVIDIA, Supermicro. What's TSSI doing? TSSI. Dell. Okay, give me a little pullback. HPE, there was some sort of settlement this morning announced. HPE jumped on that news. Qualcomm. All right, turning back up. Qualcomm ABCD pattern. Okay. We need to get through this supply. That supply was too much for us. Up to 160. Gets above 161, this should go. Apple firmly above the 50-day. Okay, so coming out of the squeeze, TTM squeeze on Apple. Okay, looks good. TTM squeeze. Making higher lows. Since the April 7th low, we continue to make higher lows, though it's been consolidating for the last 8-9 weeks. Like Corey said, it needs new management. I think Tim Cook has probably lived his usefulness. Need Sam Altman to go take over Apple.
we've seen in crude and oil overall relative to broader inflation trends. Especially very closely to beneficials and their gains being made on this inflation. Crude's a big part of the equation.
It's a huge part of the equation. And I think last week, when we started a couple of weeks ago, there was some really serious discussion about how inflationary this would be if we really did see oil at 75, 85, there were falls for triple digits. So right now, it's probably not a big part of the discussion here, but it certainly has to be on everybody's radar, on everybody's minds. You know, if things unfortunately have to pick up again in the Mideast, if we start to see $80+ a barrel, that is not going to be a big effect in terms of inflation, in terms of reducing rates. But again, I really think that this is a sell or risk, not a buy.
Yeah, we got your take on the VIX here, slightly elevated, about 32 basis points, but overall, I would argue it's been surprisingly subdued despite this backdrop of uncertainty, geopolitical risk. What do you make of how we have seen the VIX move and its movement today, in particular, to kick off a short trading week?
I personally think it's too cheap. And I know that it's subtle trade. If I look at some you don't want to sell, you're trying to see a VIX lower than where it is right now. But for everything that you just pointed out,
Apple looking good. Let's look at the 60-minute. Apple 60-minute looks good. Super micro trending. Okay, NVIDIA looks like it wants to go. NVIDIA looks like it wants to go uptown too. NVIDIA looking good. S&P still going.
Inflationary data. This week, you know, sure, we get so much more eco data this week, ending up with job report on Thursday. If we start to see these inflation numbers really picking up, and, you know, the CME FedWatch tool is now seeing potential decline in rates this year, and it's pushed out these curves. So it can really take a small spike in these things.
CEO of Front Trading Company, getting us going here on Monday. I appreciate your unneeded context to help us make.
Okay, NVIDIA looking good.
Schwab Bank Investor Checking, the checking account built for investors, named highest in client satisfaction by JD Power for 7 years in a row. With Investor Checking, you can get the award-winning features of our checking account, ACE, cash management solutions, all designed for investors. Cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also,
S&P breaking out more. Oh, there goes the S&P.
Morning movers brings traders the biggest start.
Nine minutes to go.
Opportunities don't stop when the market day ends. So they do. Schwab gives you round-the-clock access to over 800 of the most popular stocks and ETFs, plus a wide variety of futures. All with 24-hour support from trading specialists who understand the ins and outs of 24-hour trading. No matter the hour, you can trade with Schwab.
No politics, no noise. From bell to bell and beyond. Available anytime, anywhere, any device or trade. Schwab. Welcome back to Close. Just a few minutes left to go in today's busy trading session here on Wall Street. So it's time now for the big picture. Let's welcome the team from Trent Schwab. Lizanne Saunders is Chief Investment Strategist.
S&P is going nuts here. S&P. Oh, look at this. S&P cat. Damn. Damn. Okay, we're probably going to stop around here somewhere.
Retail traders' fingerprints all over it. And notice I didn't say individual investors, but retail traders that grew out of the pandemic, younger, shorter time horizon traders. When you look at various baskets like retail favorites,
All right, we've got 8 minutes to go. 8 minutes to go. 8 minutes.
traders, but suggestive of them sort of bringing the institutions along with them and forcing that short covering. So I think that's the nature of this rally. Where we are now, though, maybe we're not at extreme froth, but maybe suggests a bit of complacency has kicked in, which could mean some vulnerability if there's any kind of negative catalyst.
I'm glad you mentioned that, Lizanne. Let me pivot the question to you here about that complacency that Lizanne just laid out. Do you see that complacency as being a key risk right now? And what do you look for potential signs that could flip sentiment a bit?
We're seeing a lot of complacency in the credit markets right now. That's something that I focus on and our team focuses on. In terms of other parts of the bond market, what's the risk reward balance? And what we're finding.
By the way, look at the dealer hedging here. Look at the dealer hedging. As we continue to ramp higher, they have to buy share. Oh, there we go. The markets are going nuts. Markets going nuts.
If that does reverse, maybe there'll be a better opportunity down the road to add some risk to your bond portfolios, but that's just not the case right now.
Let me stay with you for the next one since you mentioned bonds and yields. Obviously, we're looking for the passage of the reconciliation bill at Capitol Hill. It's one thing for equities to respond the way many market participants think that they will, but I still keep coming back to the actions of the so-called bond vigilantes around the time of those April 7th, April 8th lows. What do you think?
All right. Very nice. S&P. Qualcomm turned back up. S&P turned back up.
We do think that the fiscal outlook and the idea that deficits are expected to stay high and our debt's expected to continue to grow, that can keep long-term yields kind of elevated or where they are, maybe trade in a tight range. And we contrast that with our short-term bond outlook. We think short-term yields will probably continue to fall based on expectations for rate cuts at some point later this year. But given the idea that we need to finance our government with more and more debt going forward, we need to attract potentially new and more buyers to finance our government and to issue more debt. And that doesn't necessarily mean long-term yields will surge. We're not worried that the 10-year Treasury yield is going to rise up to 6, 7, 8%, something like that. But we think it might keep them where they are right now rather than falling in the face of rate cuts.
Lizanne, how are you approaching positioning here ahead of what could certainly be a volatile second?
Yeah, so instead of trying to time
Beautiful. S&P 500 into the close. Very nice. 6,200 call wall. 4 minutes to go. 4 minutes to go. Congratulations. Been a pretty good day. Pretty good day.
During the correction bear market part of the downturn from mid-February until early April. So factors like dividend yield and stability, low volatility, lower beta, they don't tend to be the winners on the upside, but it's where you find some defensive characteristics, and those stocks tend to do relatively well if we have a
Qualcomm. Okay, looking good.
assuming there is some sort of negative catalyst. Absent that, I think momentum, higher beta, but an emphasis on some of the growth factors like forward-looking growth trends. Those will be the factors that tend to perform well in this kind of backdrop.
Uber. What's Uber doing? Uber, what are you doing, Uber? Uber, haven't looked at that since last week. Uber. Okay, Uber looks like it wants to go.
Reasons you've got the July deadline in terms of the extension or the delay of the reciprocal tariffs that were announced on April 2nd. July 4th, assuming that continues to be the deadline that President Trump has imposed on Congress for getting the budget bill through. So there's a lot of them just over the course of the next week plus.
NVIDIA. Okay, NVIDIA looking good. Okay, there goes Qualcomm. Qualcomm pushing back up to the highs of the day, hopefully. NVIDIA doing well. NVIDIA, nice push. Finally broke through this area. We were looking for this to break through these pivots. Okay, looking forward to break through these pivots. We finally got it. Look at the volume. Volume.
Trading with Schwab is now powered by Ameritrade, giving traders even more ways to sharpen their skills with tailored education. Get an expanding library filled with new online videos,
All right, going into the close.
and with guided learning paths stacked with content curated to fit your unique goals. You can spend less time searching and more time building. Trade brilliantly with Schwab.
All right, nice move on NVIDIA. Okay. All right, so the S&P coming back in a little bit.
Market ready for you, ready to go. 12 p.m. Eastern. Schwab Network.
And that's a wrap. Have a great evening, everyone. Hard stop. Have a great evening. Take care. We'll see you tomorrow. Ciao.